you have all these people on a track, jumping over hurdles, going into water. Like, what? What is this sport?
I was mental yesterday. Quincy Hall looked gassed coming off the final turn and somehow came back to win a 400. Just phenomenal. Fantastic day on the track yesterday for Team USA. Up next on the programme, the Morning Calls Plus, Bloomberg's Shelley Banjo on Eli Lilly and fellow drug makers. Lilly in the pre-market up by almost 12%. From New York, this is Bloomberg.
The top names in business are on Bloomberg.
Technology has a big role to play in healthcare in multiple ways, and we're very heavily invested in that. The whole interface between tech, AI, biopharma is a very interesting space. Much of the healthcare industry, particularly if you look at the UK, you look at the US as analog, it's actually quite staggering. Stuff is on paper still, and forget AI. I need a basic technology adoption.
Nobody covers business like Bloomberg. The countdown is on. Everything you need to get the edge at the end of the market day. Get ahead of tomorrow's trading with The Close, weekdays at 3 p.m. only on Bloomberg Television. Context changes everything.
15 minutes away from economic data in the United States of America. We've said this a few times already this morning. There's so much emphasis on the jobless claims print because we don't have anything else. This is basically it for the week. Jobless claims and ISM services. ISM services earlier in the week, better than expected. Jobless claims this morning, the estimate in our survey, 240K. The previous week, 249. Talked a lot about the view over at Citigroup. Andrew Honhill's talking about the so-called danger zone at Citi. They say this: claims remaining at these levels in August would confirm the slowdown. A rise to 260 or above would signal deeper weakness. Let's see if we get that 260 or above and that deeper weakness. I can't imagine what this market looks like if we do get those kind of numbers a little bit later this morning. So they're the estimates for this morning. I want to go back to the month ahead or so, the next couple of weeks in this market, the path to September 18th and the next Fed decision. Next week's a big one. CPI, the highlight. You also get PPI, retail sales. Then it's on to Jacksonville, Wyoming, policy symposium for the Federal Reserve. A speech from Chairman Powell on that Friday, August 23rd, is going to be one to watch, I imagine. Then it's on to the payrolls report, September 6th. Let's see if that confirms or denies the weakness that we saw just last Friday. September 11th, another CPI report, and that's the last big one going into the Fed. So that's the month or so ahead of us in this market. It really starts again with jobless claims in just a moment. Let's take a snapshot of the market for you and look at futures at the moment. Equity futures on the S&P 500 just about positive by 0.1%. In the bond market, sloppy bond auction on a 10-year yesterday. Yields are a little bit lower this morning, 392.45. I can tell you a little bit later this afternoon at 1 p.m. Eastern Time, we get $25 billion of 30-year bonds. All of a sudden, Danny, we're talking like Lisa. We're focused on supply. every afternoon.
Is this why Lisa's off? Because she knew if she would be on, you know, this is all we'd be talking about?
She wanted a break from it, I think.
Yeah, I think so. She chose her timing well. It's funny to contrast that with what's happening in the corporate bond market. I mean, there's this huge issuance yesterday, the most of the year, and people just absorb that thing. And then you contrast that with a bond market that as soon as yields go below 4%, we decide we don't want to buy duration anymore.
Bramo texted me yesterday. She's having a great time. I'm not going to do a TK and tell you where she is. A European island somewhere. Sent me pictures. She's having a wonderful time. She's going to be back with us on Monday. That's the latest on the price action and Bramo's whereabouts. It's time now for the morning calls. First up, Bank of America lowering its price target on Disney to 120 from 145. The firm keeping a buy rating on the stock, but pointing to slowing demand for the company's theme parks. That name's down another 0.9%. I still struggle with the explanation that we got, Danny, yesterday from the C-suite. The CFO saying low-income households are pulling back, high-income households are elsewhere, but the business bounces back by the middle of 25.
And what I also can't understand is if the business bouncing back is a bad thing for the overall economy, because is his assumption that middle incomes start to hurt, so they don't want to go on the trips abroad, so they stay more local, and then they go to the theme parks. If that's the calculation, Disney doing better could actually be bad.
That stock is down by about 0.8%. Let's turn to another call for you. This from Citi, downgrading Bumble to neutral from buy and lowering its price target to $6. The firm citing the company's disappointing outlook and lack of turnaround guidance. That name, that is not a typo. We're down 40% in early trading. And your third and final call from Berenberg, lowering its price target on Merck to 135 from 143. The firm keeping a buy rating on the stock, citing surprise disruptions for the company's HPV vaccine sales. Elsewhere, fellow drug maker Eli Lilly gaining in the pre-market thanks to sales of weight loss therapy Zepbound. Bloomberg's Shelley Banjo joins us now for more. Shelley, great to see you. That stock is up by more than 12%. Walk us through what's working over at Lilly.
I think this is sort of a moment in time to say that Eli Lilly might be pulling ahead of this race with Novo to get these weight loss drugs out there. Novo was first, but not necessarily sort of a lesson that like you can be first, but not necessarily best. You can be second and come from behind, and that seems to be the case, at least for right now. What's behind the better execution? Why are they able to supply this in a way that the other side can't? So both of them are facing supply issues, but Eli Lilly is starting to see those supply issues ease a little bit. And we actually had a scoop last week from Dave Ricks, the CEO, saying, we think we are going to come off of shortage pretty soon. And what that means is that could change the game entirely, get them even more customers, and also reduce the amount of these compounding drugs, these sort of knockoff drugs that are not generic but not brand either, and get more people onto those branded drugs.
Can I ask you about those? Because this I find so strange. All you have to do is watch some commercials or look online. You see people advertising for not Eli Lilly's drugs, not Novo Nordisk, something else that's weird. What's going on here? I mean, is there not regulation?
So in 10 minutes time now, at the bottom of the hour, see the release of the highly anticipated weekly jobless claims numbers for the US. Initial jobless claims forecast 240K on the prior 249K, with a range of 253 to 230K expected. Continued jobless claims forecast 1.871 million on the prior 1.877 million, with a range of 1.895 million to 1.85 million expected.
They've been around. Actually, that's the way things used to be. Pharmacists would mix, little drugs and put them together. But the thing is, you just don't know as a consumer what exactly you're going to get, and the regulation is just not as high there.
So to your point, maybe it's a healthy thing for the overall market if Eli Lilly can pull ahead and get some of its supply out there. How much does it change the game if Roche comes out with a pill?
Well, that is the big game changer, is that it's not just Roche, it's everybody is trying to get into this game, and as we've seen with Lilly and Novo, it doesn't necessarily matter if you're first, as long as you have a product that people want to buy, especially with the market being so big, and as more people get accustomed to everyone that they know being on these drugs, it becomes more regular and the market keeps growing bigger.
When you look at the generics market, there's a huge push in Washington to get these companies to allow generics. When can we see that?
I mean, I think we still have a little bit of time here. I mean, Bernie Sanders has been going really hard, in particular on Novo. They want to bring these prices down. One thing that's interesting about Lilly's drugs is that they are actually cheaper than Novo. It's about $1,000 a month instead of $1,300 a month. And so these are starting to get cheaper, but they are weighing on health plans, not just company health plans. All these folks are really starting to see the bite of what insurance coverage is on these things. And so what Bernie Sanders and others have said is, why can I get this same drug so much cheaper in Europe than I can in the US?
John brought this up yesterday. Is it a drug or is it a treatment? Because I imagine to get those insurance benefits, it has to be for a drug.
So and that's sort of what we're seeing now, is that we had this really wonderful story out. I encourage everyone to read it, about a town in Bowling Green, Kentucky that has the highest percentage of people on these prescription drugs. And one thing that our reporters, Madison Muller and Devin Leonard, found were people who said, I was taking these medications, and then my weight loss, worked. My weight dropped, my blood sugar, all these things, got under control, and then I lost my insurance coverage. And so it's like, well, and then if I want to keep going on these drugs to keep all that stuff in check, I'm going to need to be able to pay for it somehow. And then that enters the compounding market, where people are then shifting to some of these other kinds of drugs. And so it's a little bit of a mess.
Has the opportunity to revolutionize this economy, given obesity rates of what, close to 40% in the United States?
It is a huge addressable market, and then you get all these kind of side effects. It's like, are gyms going to be more popular or less popular because people have lost weight?
Good point.
Of all of a sudden, are we all buying Lululemon because we're happy about our bodies and feel good about how we look? Is Krispy Kreme going to all of a sudden go bankrupt because people aren't buying donuts? I mean, it has really wide-reaching repercussions.
Shelley, it's good to see you. Great story, by the way. Shelley Banjo there of Bloomberg on the latest, with Eli Lilly up in the pre-market by more than 10%, up by 12.5 right now. Jobless claims are just around the corner. Mike McKee's dropped by to get you all up to speed on that. Mike, walk us through what we need to look for in about 7 minutes' time.
Well, a couple of things we need to look for. One is obviously the level of initial jobless claims and whether it goes up or down. It would be no surprise if it went up, because seasonal factors push up jobless claims at this time of year. This may be the last week in which that happens. So we also want to look at the non-seasonally adjusted claims, because those would have to rise if we were getting a lot of layoffs. So it may be a seasonal adjustment problem. It may be economy and labor market weakening problem. We just don't know. And we also want to see what the jobless claims numbers are from states like Texas, and see if the hurricanes are starting to, so to speak, wash out of the claims numbers.
Mike, is that enough, doing all that legwork to wash out all of the noise and get a clear signal? Or should we approach this kind of tepidly to say that it will have seasonality oddities and don't read too much into it?
Well, you're right, Danny. That's the way we should approach it. But will Wall Street approach it that way? That's the question. I mean, you have people essentially looking for reasons to sell on the idea of economic weakness. And so if we get any kind of significant rise in jobless claims, you'll probably see a negative reaction to what's going on. Now, Ian Lincoln of BMO, you had him on yesterday. He's talking this morning about how we haven't seen rates really move since the Fed meeting, since right before the Fed meeting. We had some volatility between then and now, but we're about where we were. So markets have already priced in weakness. The question is, do they
In 5 minutes' time now, at the bottom of the hour, we'll see the release of the US initial jobless claims number.
Thank you, sir.
Forecast 240K on the prior 249K, with a range of 253K to 230K expected. We'll also see the release of the US continued jobless claims, forecast 1.871 million on the prior 1.877 million, with a range of 1.895 to 1.85 million expected.
Because what we saw on Friday was a market get very, very spooked by payrolls, and what we've heard so far over the last few days from Fed officials, they don't sound spooked at all.
That's why I'm so looking forward to when Barkin speaks today, because among all of them, he's been very nonchalant. Last time he spoke, Friday after the jobs numbers, he said, well, if we had have hiked, there probably would be people out there who still would have criticized us. We can't win either way, so we're just going to do us.
I thought they were blessed with criticism. I thought that's what Chairman Powell said. I thought we blessed them.
I think Barkin might disagree on
didn't
that,
see it the same
point,
way.
Yeah.
I don't think Chairman Powell sees it that way either. 240 is the estimate in our survey for jobless claims, 249 the previous week. The number up next.
The names that move markets are on Bloomberg.
We've seen story after story about companies delisting from the London Stock Exchange, listing in New York, listing in Europe. I want to turn that around. I want Britain to be the place of choice to make an IPO, to grow your business. That's why I welcome the reforms that the FCA put in place last week. It's also why I'm determined to change our pension system so we can keep more businesses here in Britain.
Bloomberg. Context changes everything.
Always on the heartbeat of the tech sector.
Spread across global markets.
The real-time data aspect is going to be important.
We're going to bring you expert analysis on that.
1 minute remaining. I'll be leading with the initial jobless claims.
Welcome to the world of decentralized finance.
We thought we'd take a look at Bitcoin versus the S&P 500.
Bloomberg's covering all things crypto, the people.
A tectonic shift emanating from Washington.
It's really a tale of two cities in crypto.
Crypto shouldn't be partisan.
The transactions.
Really a record-breaking moment.
Crypto VC is back.
And the technology.
It's really the beginning of a global on-chain economy.
And if America doesn't embrace it, we're going to be left behind.
Bloomberg Crypto, Tuesdays, only on Bloomberg.
10 seconds.
Have we ever talked about jobless claims this much? It feels like in some places in the world of economics, jobless claims today being treated like payrolls. A lot of weight being put on this number. It drops in about
233k, 233k, that's lower than forecast, 240k, with the continued claims of 1.875 million, 1.875 million, which is higher than forecast, 1.871 million. So looking to the market, seeing some strength in the dollar and the S&P 500 as the jobless claims number comes in lower than expected.
Good morning, Mike.
Well, we have some good news, or I don't know what counts as good news these days. 233 is the number, 233,000 initial jobless claims, significantly lower than the 240 estimated and the 247 that was the whisper number. So we are retreating back a little bit, and that is not unexpected. I mentioned earlier we have seasonal adjustment effects in the month of July, and that seems to be what's happening. Continuing claims, 1,875,000. That is down from the previously reported 1,877. By the way, the previously reported initial jobless claims for last week revised up to 250,001. So it makes the drop a little bit more, 17,000. But it is a drop in that number. Now, I'm waiting for my numbers to come up for the non-seasonally adjusted. Takes a while these days with the internet.
So Europe stock 600 trims losses after the data as well. Dollar index up as well, and the euro
the equity market was putting on this
edging up after the jobless claims number.
By 0.6%. I don't know if this move sticks, but it just gives you an idea of how much
dollar franc cuts losses after that data as well.
This morning. The NASDAQ 100 up by 0.8, the Russell up by 1.4. We'll see if these moves hold. Yesterday they did not. We'll see if they hold throughout this morning and into the afternoon. In the bond market, Treasuries lower, yields higher. We're up by 5 basis points on a 2-year. We're back through 4%. On a 10-year, we're up by 3, getting closer and closer to 4% all over again. And if you're in Tokyo, Japan, at the Ministry of Finance, or the BOJ, and you're watching, good afternoon to you. 146.80 is where dollar yen is, just about positive now on the session. So, Danny, there it is in jobless claims. We like to say that is the right kind of downside surprise.
This market was a coiled up spring waiting for that. The biggest of the springs, I think, just going through the board is Russell 2000. And that's a really fascinating one because we used to argue that the coming of cuts would be great for the Russell 2000. Here we go, something that has knocked off the idea that cuts are imminent, are in a big way, and yet we are rallying.
Just a little bit of a relief rally in the equity market, a little bit of a sell-off in the bond market, and a bit of a stronger dollar off the back of this as well. Mike McKee, you've had an extra minute or so. What do you see in the data?
Well, let's take a look at the non-seasonally adjusted numbers. They come in at 203,000, and that was 215 the week before. So a significant change there as well, down almost 14,000. The seasonal factors had anticipated not much of a decline, and so we get a much bigger decline than anticipated there. And then when you look at the largest increases in claims, they were in Michigan and Missouri, about 4,000 each. Texas dropped by almost 7,000. So the big filings that we had after the hurricane washing out of the data, and that may be one reason. And when you look at the non-seasonally adjusted numbers, and even compared to the seasonally adjusted numbers, it tells you that while we're a little elevated over where we were a couple of weeks ago, it's not layoffs.
I will say this, Mike. It does feel like we're firmly shifted into a good news is good news, bad news is bad news regime in this market, right?
Yeah, we have, which I guess is a good thing. But on the other side of the coin is that the bad news has been bad news for this market too. I'm just really struck by comparing at this very moment to the narrative on Monday. The narrative on Monday was literally we are heading into a recession. The Fed needs to do an inter-meeting emergency cut. Imagine if the Fed started talking like that, and then we got this number. I mean, if anything, you could say, all right, well done, Daly, well done, Goolsbee, for staying so calm.
Last week, the data, not great. ISM manufacturing, jobless claims, payrolls. This week, the data a little bit better. ISM services and jobless claims this morning. To look at the totality of the data, joining us now is David Rosenberg of Rosenberg Research. David, we've been looking forward to catching up with you, sir. Let's just take a step back. Totality of the data, as the Fed would like to say. What's your assessment of where we are, David, at the moment?
Well, I still think that
we have posted out the US weekly initial jobless claims report on the feed for anybody interested.
About to confront one. And, you know, I know everybody's on tenterhooks because of weekly jobless claims numbers, which can quite often contain quite a bit of noise. And coming off what could have been hurricane distortion from the previous week. However, I would say that what's tried, tested, and true is the unemployment rate. And the unemployment rate is up 0.9 percentage point over the past 15 months. And the data going back to 1948 show that we had 12 recessions. And when you're up 90 basis points or more in the unemployment rate from the cycle low, you go into recession 100% of the time. So I am definitely not one of those people that would say to you, it's different this time. I don't think that it is. And today's jobless claims numbers, we'll get a fresh batch a week today. Doesn't change my view.
David, I'm going to push you on this, and I'm sure it's something that you have heard multiple times. So I'll give you the opportunity to tell me why I am wrong. The argument of you being wrong goes something like this, that the uptrend is about immigration. Torsten Slok of Apollo out with a note just moments ago saying that more visas are getting accepted, that there's been a COVID backlog, and that just adds again to the evidence that there's growth in the labor supply, hence the uptrend in unemployment. Why is that argument not right?
Well, the argument is partially right, but the reality is, just to go back, the unemployment rate comes from the household survey, not the payroll survey. But the reality is that there's been no growth in job creation in the household survey over the past 12 months. What the data show is that 96% of those people, and I'm sure a lot of them are immigrants, 96% of the people that entered the labor force in the past year have not found a job. Now, I would pose the question back to you. Does that sound like a buoyant labor market as far as you're concerned? This time last year, 96% of labor force entrants were finding a job. Only 4% now are finding a job. So it's not just about labor supply, and it's not just about firings or layoffs, which remain very low. Companies are still hoarding labor, but what are they doing? They're cutting the work week, and they're furloughing workers from full-time to part-time. Well, you get from full-time to part-time, it's not a job loss, so you don't collect an unemployment insurance check. But there are decisive shifts taking place in the labor market right now. So there's been no growth in household employment, and in fact, if you look at the full-time picture, full-time jobs are down on a year-over-year basis. The number of full-time jobs are negative year on year. And that does not happen typically in an economy that's still expanding. That's my point.
We heard from Mary Daly recently, and she said firms are not laying off people, to your point there. So why isn't this just normalization? How can we be a recession if firms are not laying off individuals?
Well, because employment is not just one number. It's the product of two numbers, firings and hirings. And what's happening, and it's not contained in today's jobless claim number, but you do see it in the JOLTS data, and you see it in the Challenger data, which is that hiring activity is collapsing. Like, I don't know what I'm missing. We just got a few weeks ago the JOLTS data, The JOLTS data showed that the number of new hires in the economy, the number of new hires is running negative 9% year over year. And the level of hirings is back to where it was in April 2020. So what's happening is that, yes, the firing rate is remaining very low for the reasons I said before. And a lot of it is because companies have this horrible memory that is lingering about letting people go in 2020 and then not finding them again. So they're holding on to their staff. They're cutting hours, repositioning staff to part-time from full-time, and that's giving this illusion that, yes, firings are very low. But what's happening is that the hiring rate is collapsing. We got the Challenger numbers just ahead of non-farm last week. So in July, the number of hiring announcements in the Challenger data was the weakest for any July back to when the data started in 2004. The number of hires in the Challenger survey is negative 71% year over year. So you're just looking at one side of the ledger, which is firings. But the reason why employment growth is decelerating sharply, even in the payroll survey, is because hiring activity is collapsing even as the firing rate remains very low. That's the story beneath the story.
S&P 500 E-mini futures up 0.8%, NASDAQ futures up 1.1%, and Dow futures up 0.4%.
Whether you think they need to get accommodative. And when we talk less about the path and whether they go 25 or 50 in September and talk more about the destination, where do you think they're going to end up here at the Federal Reserve?
Well, I think that Jay Powell gave us a ton of information at the podium last week at the press conference when he uttered the word normalization to describe the labor market and the economy no fewer than 11 times. Normalization. So things have normalized. You strip out the nonsense around owner's equivalent rent and the lag nature of the actual rents, and inflation is basically back to target. And the unemployment rate is actually higher now than it was before COVID, when the funds rate was 1.75. So he uttered the word normalization. The only thing that's not normalized is the Fed funds rate. And so what's normalized? Well, according to their own estimates, the neutral rate, the equilibrium rate, the rate that we should have in a balanced economy, which he said we're in, is 2.75. And every Taylor rule estimate shows that today the funds rate maximum should be 4%. We're still 5.25, 5.5. So they are ridiculously behind the curve. No matter what's happening with the equity market, and it wasn't about data that caused the markets to start thinking they're going to go intermeeting. It was, are we going to continue to get 1,000-point down days in the Dow? That was just all about the stock market. But they are ridiculously behind the curve, irrespective of what the capital markets are doing. So he basically said things are normalized, and we do not have a funds rate that is consistent with a normalized economy. So they have a long road to hoe.
David Rosenberg of Rosenberg Research. David, great to catch up, sir, to get your thoughts on this economy and where David thinks the Fed needs to be. He mentioned capital markets. We'll talk about capital markets. Equity futures right now on the S&P 500 near session highs up by 0.8%. Check out this move on a Russell, the small caps up by 1.6%. If you're just joining us, we were basically unchanged on the S&P 500 as of about 12 minutes ago before we got this economic data. Jobless claims delivered the right kind of downside surprise. 233 against an estimate of 240. It's not a big swing, and yet we are seeing this massive move in the equity market and bonds as well, Danny. Yields are up by 6 basis points across the front end of the curve, the 2-year back through 4%.
The thing that I'm really struck by is that this is a market trading this as if it was non-farm payrolls, like as if it was a North Star type of report, and this it is not. Not even just that. Not even that just historically this is a noisy print, but this one specifically is a really noisy print because of things like weather, because of the things of seasonality. We've put so much importance on this report, and that's why you got the market reaction you did.
Matt Diesel with us around the table of Merrill and Bank of America Private Bank. Matt, to Danny's point, we've both been talking about it. Are we going to treat every single jobless claims print every single week for the rest of this summer, the rest of this year, this way?
It's going to be exciting. We're going to be watching for it. It's going to be
Do you think we should put this much weight on this print?
Yes, because then people want to talk to us about it. So I think we should. We absolutely should. And to your point, it's a very noisy number week to week. You got to look at the trend. But more importantly, at the start of a recession, generally speaking, weekly unemployment claims are sort of 350 to 450,000. So we're still well off the number where we see companies firing and people getting really concerned about their financial condition. So we're not overly concerned about a recession right now. We're not calling for a recession. Certainly, the market-implied recession odds were way too low a couple of weeks ago, and they're more getting to a place that's more normal. There's a higher risk of recession than zero, but it's still not a base case for us yet.
So what do you make of the levels we're at right now in the bond market?
So for the bond market, as you know, bond guys are like undertakers. We're only happy when everyone else is sad. We've been listening for a year now, all these reasons why bonds don't work, why diversification isn't going to work, why you should have commodities, everything else in your portfolio. Last week was close the blue book, put your pencils down, the exam's over. Bonds did their job. We've been saying this for a year. We've been counseling getting long duration for over a year now. With real rates around that 2% level, below that now, they can do a job of diversifying. Back in 2021, when they were negative 2% real, right, when they were 50 basis points to 1% in 10 years, yes, they weren't doing their job. Now they can do their job. That was the most important thing we learned from the market, that when there is an economic downturn, when there is real market volatility, Treasury's high-quality fixed-income collateral will protect your portfolio.
I look at the past week, though, and I say, yeah, they did their job, but in an extremely volatile way. That you saw some big swings in this bond market. Does that dampen their ability to give you protection? That if I have bonds in my portfolio, that it could actually add to some of the volatility in it?
That's a very good question. So Mark Cabana, our head of rates research at Bank of America Merrill, he does have concern about liquidity in the Treasury market. You can flip that a little bit on its head, though. There's no constitutionally guaranteed right to be able to trade a yard at 10 years in a millisecond. So when people realize that maybe the liquidity is not quite there, right, maybe they can't take as large positions, maybe there will be an increase in risk premiums in the market. For our clients who are liquidity providers, who are looking to put money to work, higher risk premiums, potentially because of the bid-ask factors and liquidity you're talking about, is probably better for overall for investors on the whole, because that should lead to a higher term premium, should lead to higher credit spreads on average. They should get a little more compensation for that lack of liquidity. So we are a little bit concerned about it, but from an investor who's providing liquidity to the market, it can actually be a benefit.
Just to that point, do you think this week would have played out differently if it wasn't the dead of summer? If it wasn't August, if this was a couple months ago and all of this was happening?
I definitely think that was a factor. A lot of traders on their 2-week vacations now. August is the new September, it feels like. Definitely there was more volatility than we would have expected. And again, you start to see things in the market like 6 or 7 Fed rate cuts by January seem to overestimate economic weakness. It was more market technical sentiment driven.
So what do you do in a day like today when the markets are basically reacting to this claims like it's a non-farm payrolls because it's illiquid? It's August.
So one of the best things to do is just have your strategic plan in place and take opportunities like this as they give it to you. So we've been saying for a while that, again, we didn't expect a recession, but as we looked across the credit complex, we thought IG, high yield, even munis were a little bit expensive, so we were slightly underweight some of the credit sectors. But we haven't moved to an underweight position on equity. So actually, when we see volatility like this, we've been advising clients to take advantage of it, get back to their strategic targets, put a little bit of money to work. You kind of want this volatility. You want these drawdowns every once in a while to be able to add back to your portfolio.
When you get backups in yields like the ones we've got right now, do you think these are going to get bored? Do you think the last week was a wake-up call for the lazy money, if we can call it that, sitting in money market funds, getting rewarded for doing nothing, and they've been told repeatedly by individual after individual on Wall Street to lock in this yield, this reinvestment risk? That's like been the phrase of this year. Yeah. And then they've sat there and said, I don't know what you're talking about. You've been saying this for 12 months and we've had no rate cuts. Do you think this was the week where that money woke up a little bit?
I would like to think that's the case, but that's not going to be the case in my opinion. As you said, we've been counseling for a year or so that fixed income's longer dated bonds. Cash is not fixed income, it's variable income. You just don't know how long you're going to get that cash yield for. It's going to come down, but unfortunately what it seems like, until the Fed actually cuts, people don't actually move out of money market funds. So we're still going to counsel that. I do think this is somewhat of a wake-up call again, that if you were concerned that bonds couldn't diversify, I think that is taken off the table now. So that will hopefully encourage clients to get back to their strategic targets at fixed income.
Did you just give us a little sneak peek of what client conversations were like this week?
Yes.
Are they still reluctant to do this?
They've been reluctant to do this for some time, which is one of the reasons you know it's the right thing to do. When it's that hard to get people to do it, you know that's probably the right move.
Why do you think this week wasn't enough for them? What did they say back to you? What did those conversations sound like?
So essentially, there's always some new concern why they wouldn't want to move it to cash, whether it's higher deficits, whether it's the fact that they can still get 5.25%, even if they cut 3 or 4 times, they can still get it. It's very difficult to make the conversation. I try to tell folks the yield curve tries to trick you. Right? When yields are that high in the short end and low in the long end, it's trying to trick you, sort of don't fall for it. And again, we don't need to be crazy long bonds, but getting clients from a 2 to 3 year average duration to a 5 or 6 year duration is going to be better for them long term.
It's a big challenge still at the moment. Matt, it's good to see you. Thank you, sir. Matt Diesoff there of Merrill and Bank of America Private Bank on the latest jobless claims print. Jobless claims Thursday is the new payrolls Friday, I guess, Mike McKee. Is that what we're going with now?
Well, at least for the time being, because it is August. Matt was talking about all the traders being on vacation. Everybody from the Fed's on vacation, too.
True.
And it doesn't give you any guidance, but I don't imagine anybody wants them to come back.
Light on data, light on speeches. Yeah, I think we'll all take that break. Mike, thank you. 233 is the jobs number, the jobless claims number, 233. The estimate was 240. So that's the right kind of downside surprise for you on jobless claims. The reaction, let's go through the boards and start with equity futures, roll through the bond market. Equity futures right now up by 0.8% on the S&P 500. Big outperformance on the small caps. That outperformance on the small caps encouraged by what's developing in the bond market. Check out fixed income. Treasury's a little softer, yields a bit higher. Up on the front end now by 8 basis points on a 2-year. To north of 4%, 4.04 on a 10-year, up by 5 to just short of 4%. With an update on stories elsewhere this morning with your Bloomberg Brief, here's Yahara Hakes. Hey, Yahara.
Hi, John. Shares of Warner Brothers are down in the pre-market. The parent of CNN and TNT posted a second quarter charge of more than $9 billion after writing down the value of its traditional TV networks. The write-down reflects the continued exodus of viewers from cable networks like CNN to new streaming platforms. On that note, Warner Brothers said it added 3.6 million new streaming subscribers, almost double what Wall Street had estimated. Also down, shares of Bumble are plunging nearly 40% in the pre-market. The dating company reported second quarter revenue that missed estimates and slashing its revenue outlook for the year. In contrast, Match, which owns Bumble's biggest rival Tinder, jumped the most in nearly 2 years last week after the company delivered better than expected quarterly results. Eli shares are up nearly 13% in the pre-market after the pharma company boosted its revenue guidance for the full year. It's now projected to come in well above the average analyst estimate. The increases were primarily driven by strong performances of diabetes medications Mounjaro and Zepbound. The company plans to launch single-dose vials for Zepbound in the coming weeks. That's your Bloomberg Brief. John?
Yahara, thank you. Appreciate this morning. Thank you very much. Up next on the program, setting you up for the day ahead. Your trading diary just around the corner. From New York, this is Bloomberg TV.
I think one of the dirty little secrets of credit is that the businesses generally don't pay you back. Right? The markets pay you back, M&A pays you back. So what is the most important thing is to always make sure that the borrower is worth more than the loan. And as long as the borrower is worth more than the loan, then it might be a rocky ride, but you're going to get your money back. And this world where there's these disruptive companies that have, let's call it 100, 200, 300 million of ARR, are looking to not raise equity capital because of the fact that they raised it in 2021 or 2022, and no one really wants a down round. But there's a lot of capacity in the capital structure to have, let's call it a structured solution. We think that there's a lot of opportunity with those businesses.
It's the world's second largest economy with a growing influence in global affairs. But geopolitical uncertainties, deflationary pressures, and questions about foreign investment linger. Bloomberg, the China Show, brings you the unmatched expertise you need to keep track of breaking news, in-depth market analysis, and the most influential newsmakers in and around China. Bloomberg, the China Show. Weekdays at 9 a.m. Hong Kong time, right here on Bloomberg. Context changes everything.
Good morning. This is Bloomberg Surveillance.
Welcome back to the opening trade.
This is Bloomberg Technology.
This is the Asia Trade.
You're watching the close.
Welcome to Balance of Power.
This is Bloomberg. It's a multi-trillion-dollar industry. We'll show you what's happening in ETFs like no one else. Bloomberg ETF IQ, Monday on Bloomberg.
Counting it down to the opening bell, about 37 minutes away. Your scores, they improved. On the S&P, up by 0.8%. In the bond market, Treasuries weaken. They soften, they cheapen. Yields are higher by 5 basis points on a 10-year, just short of 4% at 3.99. As jobless claims come in, better than expected. It's the right kind of downside surprise at 233,000. The estimate was 240. Your trading diary, the day ahead looks like this. 1 p.m., the Treasury auctioning $25 billion in 30-year bonds. 2 p.m., former President Donald Trump holding a news conference from Mar-a-Lago at 3 p.m. this afternoon. We'll hear from Richmond Fed President Tom Barkin. On Friday, Vice President Kamala Harris making a campaign stop in Arizona. Trump holding a rally in Montana. Just a little bit of pressure starting to build in the last 24 hours. I think we all want to hear from Kamala Harris.
Yeah, we do, and not just when it comes to these set pieces like a campaign rally where she's off prompter. We actually want to hear what their policy proposals are going to be. How much is she going to differentiate herself from Biden? Because we do know that in the polls for the past year, it wasn't just Biden's age, but the top 2 issues when it comes to this election is the economy and is immigration. And when you ask voters, they say that it was better under Trump.
The top issue right now for this market, jobless claims, 233K. I'm pleased we're on the same page because this has felt bizarre.
German bonds raised their gains. The 10-year yield steady at 2.27% now.
18th, it feels like jobless claims every Thursday is becoming as important as payrolls on Fridays.
We are trading it as such to the point where you can get a rally of more than 1% in small caps after jobless claims. Again, it really boggles your mind. Maybe you can say, okay, it's the summer, there's not a lot of people around, but it does just emphasize the fact that we kind of don't know where we are. There are people who have a very clear idea, and often they're on opposing sides. And when you get this trend shift, usually you have these periods of instability until you can establish a new trend. Does jobless claims establish that trend? Probably not, let's be honest. Maybe next week can go some ways to it, but again, it's choppiness until we find it.
Keep going back to that speech in Jackson Hole, Wyoming of last August, a year ago, with Chairman Powell, and he talked about navigating the stars under cloudy skies. Feels like that over the last week or so. ISM manufacturing was weak, jobless claims was bad, payrolls was not good. That was last week. This week, ISM services was decent, jobless claims were better. And to your point, this market is just stuck between the two, just getting whipsawed from one data point to the next.
I really like what Dan Greenhouse says, this idea that it takes months and months for a recession to happen. But along the road,
US 10-year Treasury yields rise back above 4%.
You do get slight changes of companies saying different things, individual data points coming in. And I think that's why you can build the argument that something is starting to happen. Maybe we're not there, but nerves are kicking in.
That start of that beginning of that self-reinforcing process that Bill Dudley was talking about. A lot of views out there. More views coming tomorrow. Steve Major of HSBC will catch up with Congressman French Hill of Arkansas, Megan Swiber of Bank of America, and Binky Chada of Deutsche Bank. The opening bout 34 minutes away. Good luck with the rest of today's session. From New York City, this was Bloomberg Surveillance.
This is Bloomberg News Now.
News when you want it at the touch of a button.
Another volatile day on Wall Street. We're seeing big moves.
All eyes on Capitol Hill as Democrats and Republicans.
Today's job numbers casting doubt on the Fed's next move. Inflation remains front and center. And that's news when you want it with Bloomberg News Now. Get it 24/7 on the Bloomberg Business app, Bloomberg.com, and anywhere you get your podcasts.
Bloomberg News Now. Context changes everything.
What about quantum computing? People talk about that. Is that something that I should be looking at investing in?
I've made a lot of mistakes, betting on these new technologies like AR, VR turns out to be not so big. 3D printing turns out to be not so big. My estimate is $100 trillion was invested in today's dollar in the PC, CPU-based infrastructure. All this is going to get ripped out to put $100 trillion or more in our GPU-based infrastructure. In that sort of quantum of numbers, I feel that the quantum computing is going to be very small.
You always are worried about, I presume, geopolitical events. So are there some geopolitical events you're worried about right now?
Yes, I don't know why, but for some reason, I love thinking about black swans. And at the office, everybody thinks I'm weird because I'm always thinking about what can go wrong. But underpinning the AI is the chips. And the chips, despite the CHIP Act, which I think was a good idea for the US, I still think like 80% or so of the capex of TSM is in Taiwan. And so at the leading edge, a lot of capacity is in one very small area. Forget that it's just in China, it's in a very small area. I think that's very risky.
The more that you learn about this case, the more it reads like a Hollywood script. The nature of the killings, the execution, the just brutality of it.
It wasn't in the psyche of people that they could be looted because they are considered so sacred.
And we did it the way you do every single investigation. How do you eat an elephant? One bite at a time.
It jumped off the page at me that you could see that there was a Ponzi scheme taking place.
I started hearing mafia, mafia, mafia.
Il sistema è perfetto. Sono gli uomini che spesso non lo sono.
These are the holders of truth and justice. They cannot possibly be doing this.
The effective Fed fund rate is unchanged at 5.33% for August 7th.
It's overwhelming.
Bloomberg loves earnings.
I know it's like your Super Bowl, right?
I can't wait. It's like opening presents in the morning.
All right, it will be exciting.
Nobody covers earnings like Bloomberg.
The labor market gooses futures 30 minutes until the start of trading. I'm Matt Miller.
And I'm Shonali Bassett. Katie Greifeld is off today, and Bloomberg Open Interest starts right now.
Coming up, U.S. jobless claims declined by the most in nearly a year, helping to ease fears about a more pronounced economic slowdown. But J.P. Morgan now sees a 35% chance the economy enters a recession this year. The firm also says 3/4 of the global carry trade has now been unwound. And plenty of news on the corporate front. Weight loss drug Zepbound boosts Eli Lilly's outlook, while Warner Brothers drops on a $9 billion impairment charge. Let's take a look at where the markets are trading. Right now you see futures higher. They had been lower until we got this initial jobless claims number. A little bit lighter than expected, and that's enough to send us off to the races on futures. Remember, yesterday we had a really a positive open, and we were trading in the green for most of the day until we turned lower at the end. The NASDAQ futures are up more than 1% right now, and the 10-year yield climbs along with the rest of the curve. I think the 2-year yield was up to almost 4.1%. Shonali?
Yeah, it is, and it looks like the 10 years are about to be along with it. But let's take a look at some of the shares moving that you were talking about. Eli Lilly really jumping here. The company raised its 2024 sales outlook for the second time this year due to its obesity drug, and you do have Eli Lilly now up pre-market more than 12%. Warner Brothers Discovery is another story, reporting a second quarter charge of $9.1 billion, writing down the value of its traditional TV networks. A tough pill to swallow after that mega deal made years ago. Now Warner Brothers down more than 10% after reporting results. Flip up the board, let's look at Restaurant Brands. Sales grew less than anticipated in another hit to the consumer. The stock only down about 1%. Robinhood soaring now about 6.4%. It's been gaining some steam pre-market. Net revenue beat expectations, coming in with record revenue and EPS. Tune into interviews with both of these CEOs. Robinhood's Vlad Tenev at 10:30 a.m., as well as the CEO of Restaurant Brands, Josh Kobza, at 10 a.m. Matt?
Yeah, very much looking forward to those CEO interviews. Right now, let's talk about the economy. Initial jobless claims in the U.S. Fall, helping to ease fears of a more pronounced slowdown. Here with more on the data is Michael McKee, Bloomberg's chief international economics and policy correspondent. So, Mike, it looks a little bit better than expected, and this sort of balances out the fears that we got on Friday that the labor market is really starting to fall apart.
I was trying to put this in way that you would appreciate. And I was thinking it's a little bit like Deadpool and Wolverine. Every day we're going through a different time-varying universe in the markets.
I like that reference more than he does.
Every story is different. But you did see the numbers, and I'm sure you heard the sigh of relief on Wall Street at 8:30 Eastern time today. We got 233,000 initial jobless claims. And take a look at this chart. That is non-seasonally adjusted in the white and seasonally adjusted in the blue. And both of them are down, but you can see we have a seasonal factor at work in July, and it is starting now to fade out. Happens every July. And so did we take the previous numbers a little too seriously? And is this a sign that things are going to go back to the way they were earlier this year? We're going to have to wait and see, but it does seem that the fears of a labor market-led recession might be a bit overdone. We do have, as you mentioned earlier in the show, though, J.P. Morgan raising the odds of a 2024 recession to 35%, 45% in 2025 after all of these labor market and data disappointments that we had seen up until today. Remember, a couple days ago, Goldman Sachs raised their one-year recession odds to 25%. Interesting, though, yesterday, Goldman CEO David Solomon told us that he doesn't think we're going to see a recession. So a little bit of difference between him and the eco folks. I will, on that good note, leave you with one bad note. Now, this is at the end of July, going into this crazy month. These are the recession probably indicators from the Cleveland and New York Feds. They pretty much match up. But as you can see, they are much higher than every time we went into a recession before. So they're still seeing some issues out there in the economy, or at least they were when we went into August. But don't know exactly what that means.
Michael and McKeewy, thank you both for the recession odds here, as well as the Deadpool reference. I do thank you for that in particular. That is, and now joining us, Sinead Colton-Grant of BNY Mellon Wealth Management. She is the CIO there. And you saw the odds. You saw the odds rising. Perhaps more concerning to me is that J.P. Morgan raising the 45% recession odd into next year. What would it take to get there, particularly when you're still seeing some of the stronger data come through?
Well, look, Shonali, the claims numbers this morning, huge news for the market. I think when we're looking at where the risks are, most of this economy is really highly dependent on the consumer. So we're still seeing consumer strength, but where you could see some chinks coming in terms of the gaps, is the labor market, which is why we've seen so much focus, and particularly following the payrolls data on Friday. It is continuing the theme of, from a consumer perspective, being slightly more value conscious, right? We've heard a number of companies reporting that consumers are perhaps trading down, looking a little bit for more value.
Staying home.
Perhaps staying home as well, yes, but also thinking about, what do I want to pay for streaming? What do I want to pay for a cup of coffee? And when you look at the price increases cumulatively since the end of 2019, a lot of products are up over 20%. So we tend to focus in markets on the year-over-year changes, but we've also got to take into account what's been happening since 2019. So look, our view is not that we see increased odds of a recession in 2024. We think the economy looks pretty healthy heading into 2025. Yes, we've seen volatility, but this is probably a better base to build from in equity markets.
I'm looking at the Atlanta Fed GDP Now forecast, and because we were talking before the show about the SOM rule and how it's been triggered, normally that would mean that we're in a recession already. However, we had 2.8% GDP growth in Q2, and now the Atlanta Fed is saying 2.9% in Q3. So that's a pretty strong economy, right? Do you expect that to continue to climb?
So let's remember, the GDP Now measure is coincident, right? So that's what you would anticipate based on the data that's come out since we had, the official Q2 GDP reading. It's absolutely strong. Yeah. And that tallies with a lot of the other readings that we've been seeing, where you've had strong retail sales. When you looked at retail sales, ex-autos, that was up 8-9% in the last reading. Even the employment report, we had a lot of focus on a 4.3% print on Friday, but that's still an incredibly low unemployment rate. What's particularly encouraging there is that you're seeing the participation rate increase, and you had over 600,000 individuals join the labor market in July. That's a sign of a very healthy economy, more people looking for work.
So what does this all mean net-net? If you look at where positioning is, if you look at what the data says, is there more risk to the upside or downside in the market right now?
Well, we think it means two things. First of all, in terms of the Fed, it probably means, given we're seeing some slowing in data, that we're going to see somewhere between 75 and 100 basis points of cuts before the year end. However, the bar to do 50 in September is very, very high because a 50 basis point cut from the outset would be suggestive that there could be something more than the market is seeing, and I think it may spook the market. So from an investment perspective, we've been saying this for quite some time, but you look at the speed of market movements on Friday at the beginning of this week in terms of yields. If you're sitting in cash, we know that money market yields are moving lower. It's a good time to start extending duration, adding to fixed income. But also on the equity side, we remain overweight US large cap. You know, I think
Yes.
if you liked it last week, you probably like it even more because the valuations are much more attractive at this stage. And within that, you know, we're seeing some consolidation in the tech sector. We're seeing a broadening, which we think is healthy. And equities remain attractive, and we would be adding at this stage.
Yeah, because, you know, if I think about what's driving the index, it's really the giant mega cap tech stocks, right? And that's not really about consumer spending. That's about B2B spending and the AI play. So it doesn't really matter if the labor market's a little bit weak. I guess it does in that the Fed will be driven to cut more. But as long as the AI spending continues, that's going to drive those mega cap tech stocks higher, right? And as long as the positioning point that Sonali makes has been dealt with, is there any other shoe to drop in terms of market mechanics?
Well, look, I think the thing that took a lot of market participants by surprise over the last few days was how a butterfly flapping its wings in Tokyo in the form of the BOJ raising rates could have such a ripple effect on markets. But it's not the first time it's happened, right? You go back to LTCM, the yen carry trade unwind had a massive impact on markets. But I think you're seeing more of an impact. It is August, so it's a little quieter. But also the fact that the fundamentals of how FX trades have changed. Algo traders make a huge difference to how quickly things will move.
And this time around, you didn't need a bailout of a massive fund. So I guess that is some good news as well.
Sure, especially if it really has been unwound. I mean, 75% is close to done. All right, we're going to keep you here, Sinead, because we want to continue to talk to you here. Sinead Colton-Grant of BNY Mellon Wealth Management is sticking with us. I want to get another check on futures as we head into the markets. We've had such incredible volatility lately that, you know, we could be up 1 or 2% at the open and then down 1% at the close. Right now, we're up almost 1% on the S&P futures, up 1.2% on the NASDAQ futures, and the small caps are doing the same thing. Let's get a look at the individual stocks moving ahead of the opening bell because there's so much news coming across. As we close out earnings season, we're getting a ton of companies reporting after the bell yesterday, before the bell today. Here's Abigail Doolittle for a look. Abby?
So much news, Matt, and lots of volatility with these individual movers as well. Take a look at the shares of Under Armour. Right now, up 14.5%. It looks like Kevin Plank's turnaround plan is working. They beat sales by about 4%. Not a small number either, $1.2 billion. They also boosted the profit outlook. Some of this might be a short squeeze. There is a roughly 13% short interest on the shares of Under Armour. Let's take a look at stocks moving to the downside, and these are two big movers. Monster Beverage down about 7.3%, a big miss. They missed adjusted earnings by about 10%, 6% on sales, and analysts don't like the planned price increases. But take a look at Bumble, down nearly 40% into today. On the year, the stock down 45%, so almost matching that in this one single pre-market session, and probably on the open we'll be seeing something similar. They slashed the annual outlook. We're now looking at 1.2% growth versus the prior expectation of 8 to 11%. Let's finish on a winner, though, Matt, and this is, of course, Datadog, and these shares right now up 7.2%. They boosted. The cloud software company really doing quite positive. The street is positive on these results. On the year, though, the shares are still lower.
All right, Abby, thanks very much. We're going to check back in with you later. Coming up, Eli Lilly's Zepbound sales allow the company to boost revenue guidance as it breaks into the obesity drug competition in a very big way. This is Bloomberg.
The top names in business are on Bloomberg.
The challenge for us now is not very much on the product, it's on the ramp-up of the production system.
We turned the industry down to almost zero during the pandemic. And what we're trying to do now is turn it all the way back on. And that's hard. We lost not only people during the pandemic, we lost a tremendous amount of experience.
A lot of skilled people have left the industry. We have to hire new people. The supply chain has to hire new resources and train the people, educate them.
And because those roles are filled now not by a 58-year-old, but perhaps by a 28-year-old, there's a lot we have to do in terms of not only adding capacity, but capability to meet the ramp that we all are embarked upon.
We have thousands of suppliers, and when you have just a couple of them, few of them that are late on the ramp-up, well, that's slowing down everybody, and that's what we've been facing earlier this year.
Nobody covers business like Bloomberg. Context changes everything.
DOJ or other authorities
could face bigger challenges next.
It was going to keep rain World Cup. This is a three.
As the economic picture.
Covering the intersections of Hollywood, Silicon Valley, and beyond.
Let's get to high interest now. Look at what's making headlines around the world. Warren Buffett's 5 favorite Japanese trading houses just got a little bit cheaper. The billionaire investor saw nearly $7 billion wiped off the value of Berkshire Hathaway holdings in Monday's market rout. But with those losses narrowing, the Oracle of Omaha has a chance to pick up more stocks at a bargain if he chooses to tap into the record cash pile that he has amassed. If you liked them last week, you're going to love them this week. Governor Gavin Newsom is declaring that today, August 8th, will be California Panda Day. That's because the San Diego Zoo will unveil 2 giant pandas later this morning. The black and white bears are a gesture of goodwill, as they're the first pandas to be sent to the United States by China in 2 decades. And Russia is declaring a state of emergency in its western region as Ukraine's military launched what appears to be its biggest incursion into Russian territory since the Kremlin's war began over 2 years ago. Shonali?
We're going to turn to the healthcare sector now. Eli Lilly raising its full-year revenue guidance after sales of its obesity drug Zepbound blew past expectations. Bloomberg healthcare reporter Madison Muller has the details, and amazing to see this rebound in Eli Lilly, the surge really, in the stock and in the sales. When we saw what we saw yesterday from Novo Nordisk is one person's loss here, another person's gain.
Right. It is really interesting, especially after what happened yesterday. I mean, Wegovy and Ozempic both missed sales expectations, and now Lilly is blowing past those sales expectations, and it just shows, I mean, both companies have struggled with supply shortages, but Lilly's shortages have really been easing because of the billions of dollars that they've been pouring into boosting production capacity, and it's really starting to show as we're seeing in the numbers this quarter.
Yeah, I thought, first of all, it's amazing to see $1.2 billion of sales of, is that Zepbound and Mounjaro together?
And
just Zepbound alone.
In December.
Yeah, it's crazy. And, you know, $1 billion was a definition of a blockbuster drug when I was a kid. Now they're going to be 5 times that this year. Is this just that they're a bigger company? They have more resources to put behind production. They can make more so they can sell more?
Yeah, I mean, that's a good point. One of the things that Novo is also contending with is price concessions. They're having to lower the price. Wegovy is a more expensive drug, so it's $1,300 a month, whereas Zepbound is $1,000 a month. And so they're having to lower the price in these negotiations with PBMs, and Lilly is maybe not at that point yet, but they're still ramping up quite significantly. So it's interesting to see the different dynamics that are at play right now.
You know, if you believe that Ozempic really started off this weight loss drug craze here, you had this amazing story out today. It's Bloomberg's big take for the day, and it shows a lot of surprising.
She wrote it.
She did write it, exactly. Yeah. It shows some really astounding revelations on where this is being most used. Who is the classical customer here?
Yeah, so I mean, we have heard that Hollywood and the Upper East Side of New York is kind of, at the beginning of this at least, where we were hearing about Ozempic, and we were hearing about it at the Oscars, and Jimmy Kimmel was making jokes, and what we found in our data is that actually places like Bowling Green, Kentucky, more rural area, it's Kentucky's third largest city, but it's not, you know, on the coasts, and it's not the very wealthy people in Hollywood that are taking these drugs. It turns out places like Bowling Green, Kentucky are where a large concentration of these prescriptions are going.
It is, first of all, it's also the home of the Corvette. That's where they make the Corvette.
Fun fact.
Which I love.
Yes.
But it's an amazing story, really well reported. I absolutely recommend that everybody read it. Congratulations on that piece. Let's get back over to Sinead Colton Grant right now, CIO at BNY Wealth Management. What do you think about these GLP-1 drugs? Because there was a time last year when we were saying, you know, this could be like AI Junior in terms of market moves, right? Not only do people buy these to get, you know, healthier, but then they stop going to McDonald's.
It is a fundamental change in what we expect these drugs to do, right? So since they've been unveiled, there is early data that talks about not only the benefits in terms of obesity, but also other potential benefits in terms of even combating addiction. So we think this is just the start, right? It's very interesting to hear that we're now seeing more need for price concessions, but this is just the beginning, and it has the ability not only to have a big impact in people's lives, but also potentially to boost U.S. productivity.
Sonali, take a look at Eli Lilly's stock price versus Novo Nordisk over the past 5 years. I put a comp chart together, and you can see that the gains have been, Joe, you want to pull it up? Want to pull up that stock chart for me? The gains have been incredible. Now, this is just 2024. I want to see a 5-year chart. The comp function on the Bloomberg defaults to a 5-year, and you can see if you do that we're looking at 600-700% gains.
And the stock is $7.72 a share for Eli Lilly pre-market. Remember, years ago, this was a stock that was less than $500, right? I mean, it is just astronomical growth. You know, back to the GLP-1 drugs for a moment here, because it's not the only thing that's changing about consumer behavior. When you think about how consumers are changing the way they approach household products, or to Matt's point, restaurant chains, how do you think about how you are investing in consumer-heavy sectors, particularly where we are in the economy right now?
Well, first of all, I would say that they are not sectors that we are overweight. I think there are a number of changes happening which are tied to the broader economy. The sectors that we are overweight are technology, healthcare, and industrials. But within the consumer sector, look, it is on the front line in terms of the impact of inflation. If you're going to see a slowing consumer discretionary comes under pressure. But I think what we've been seeing in the staples is really interesting, where you've been seeing for quite some time more price sensitivity. The value shopper, the cost-conscious shopper. And it also links back to the reaction we saw to payrolls, because ultimately that's related to wage growth, it's related to the state of the employment market, and it tells you where where market participants are concerned about the balance of risks.
What do you think about the rotation into smaller cap or mid cap stocks if the Fed does end up cutting, 100 basis points this year and keep going into 2025?
So we need to level set here. The reason that small caps have been under pressure so much this year is because many smaller companies use floating rate debt. And when they do have debt that's maturing, it's maturing much sooner, 2025, 2026. And so the fact that they can refinance at lower rates, that's absolutely a positive for small cap. However, the first rate cut, 25 basis points, that's kind of neither here nor there. But here's what we're watching. One, we think it's a little early in small cap, because if there is a concern about a slowing in the economy, that's where small caps are focused. They're much more domestically focused. And so it's probably a little early to go back into small caps wholesale.
Sinead, we have to leave it there. That is Sinead Colton Grant, CIO of BNY Wealth Management. Now, coming up, we're going to take a look at the companies making the most buzz today. That is Social Climbers, and it's up next. Stick with us. This is Bloomberg.
Good morning. This is Bloomberg Surveillance.
Welcome back to the opening trade.
This is Bloomberg Technology.
This is the Asia trade.
You're watching the close.
Welcome to Balance of Power.
This is Bloomberg. A lot's happening on Wall Street.
I couldn't have been more wrong.
It's going to stay volatile for a while longer.
It's a bifurcated market.
Need to catch up?
This is Bloomberg Wall Street Week. I'm David Weston.
We've got the information and insight.
Year over year, you could start to see some cracks.
It might be overhyped short term, but it's underhyped long term.
From businesses most influential and instrumental.
A lot of the doom and gloom has been somewhat overblown.
If you're not living near the edge, you're taking up too much space.
Bloomberg Wall Street Week, live Friday with replays all weekend on Bloomberg Television and Radio.
And it's time now for Social Climbers, the companies making waves this morning on social media. First up, the West Coast coffee chain Dutch Brothers needing a strong shot of caffeine today after reporting a tempered growth outlook. The company projected it would only open a maximum of 165 shops on the lower end of guidance. And next, the online dating app Bumble is heading into its biggest decline on record after slashing its annual revenue outlook. The report signaling that an overhaul of its flagship app has failed to reignite growth. The company's struggles is indicative of a broader challenge plaguing the U.S. online dating industry since the pandemic. People are out to play, I guess, these days. Finally, Monster Beverage is seeing revenue and drink volume slowing to its worst rate since 2020. The energy drink maker says its target blue-collar demographic is struggling with rising inflation and interest rates. Monster is also facing fierce competition from Red Bull, which has been taking its market share. You can follow all the latest company buzz on TREN Go on your Bloomberg terminal.
Look at these Monster shares. It's pretty amazing to me, the business, which I feel like it started with Red Bull, the initial obsession with these highly caffeinated or taurinated drinks, but I can't drink them. I feel like I'm having a heart attack if I have one of these things.
Yeah, people are drinking Celsius on the Goldman trading desk these days. They're trying to stay healthy, Matt. Stick with us for the market open. This is Bloomberg.
What prompted you to want to get out of just doing surgery to be an administrator and a hospital leader?
Watching others who did it well. I had a dean who recruited me from Birmingham, Alabama to Minneapolis, Minnesota, which is a big jump to convince me to move my family. I realized over time that my training as a surgeon brought a set of credible things to the table. One, if surgeons have a measure of emotional intelligence, not much of our training reinforces that. It reinforces skill, not necessarily emotional intelligence. But if a surgeon has some self-awareness and emotional intelligence, what they bring to the table of leadership are three fundamental things. Number one, they do everything in teams. Their operations, their patients they see is all team focused. Number two, they value process, but they hold themselves very much accountable to execution. They understand that it's good to explore a patient, but what really matters is that you take the tumor out. And then number three, they make difficult decisions.
So 1 minute now to the cash equity open and the market on open imbalance.
That I could bring to the table as a leader if I had a sort of a passion for working with people and had some sense of self-awareness.
We are moments away from the start of trading. This is Bloomberg Open Interest. I'm Matt Miller. 20 seconds to go until the opening bell. We do have futures up right now, more than 1% on the S&P.
So looking now to the market on open imbalance, S&P 500, 155 million to the buy side. NASDAQ 100, 10 million to the sell side. Dow 30 stocks, 30 million to the buy side. Mag 7 stocks, they are just 5 million to the sell side.
Down on the NASDAQ, you have the bell being rung by Abacus Life. In terms of the action as we get started in trading, you do see green arrows on the screen. The S&P in the first seconds of trading is up 1%. The NASDAQ up a little bit more than 1%. And the small caps, the mid caps are gaining as well, a little bit more than 1% there. We have seen bond sales today pushing rates up. And I know Shonali is very excited about the 2-year, which is about 405 as we speak. Shonali?
I am excited about the 2-year, but let's get excited about some stocks to watch as well, because we're taking a look at Eli Lilly and Bumble. We're taking a look at Bumble just dropping more than 33%. Shares plunging after slashing its revenue outlook. And Eli Lilly, as we've been saying, jumping as the company raises its 2024 sales outlook for the second time this year, thanks to demand for its weight loss drug, Zepbound. Eli Lilly up more than 13% at the open. Let's take a closer look with Bloomberg's Abigail Doolittle.
Yeah, Shonali, this is the best day in a year for Eli Lilly, really popping in this multi-day chart, really gives context to the move parabolically straight higher. What's amazing about this, up 32% year to date into this report and out of the great financial crisis, basically a straight line higher. This stock up more than 3,400%, really pretty incredible. But it had everything to do with this great quarter, massive adjusted earnings beat of 50%, $3.92, so that's not a small number relative to sales, a 13% beat. Let's take a look at revenue. In fact, the annual outlook, as Shonali, of course, was just talking about boosting it for a second time. You can see this really beautiful increase moving in the right direction on not just Zepbound, but also Mounjaro, but mainly Zepbound for sure. In terms of healthcare and other sectors where we're seeing these types of beats, well, interestingly, healthcare is the best. We're seeing 57% of the companies that have reported so far in the healthcare sector beat. Then there's tech, energy on the bottom, staples, but still a very healthy 32%. I wonder though, Matt, is that really strength for these companies? Clearly for Eli Lilly it is, or on the part of other companies, it could also be some strong management from the C-suite.
Right. Well, we typically see, I know on the bottom line, companies beating by like 75 to 80%. So a lot of this is just about how you guide your analysts, Abigail, right? It's like how you play the game.
Yeah, absolutely. And my first lesson in that was in 2000 when companies miss, and then finally management teams got much smarter in terms of, set the bar low, beat it, and then bring folks higher. And I think that's a lot of what we're seeing now for sure.
Yeah, absolutely. Abigail Doolittle, thanks very much for that analysis. Joining us now to talk more about this, Shitara Sundar, global equity strategist at JP Morgan Private Bank. Thank you so much for joining us. What do you think about earnings season this far? I mean, it actually looks very good. Not just the surprises, because those can be massaged, right? But the actual growth is strong. I think we're looking at 11, 12% profit growth year over year, and we're almost done with the S&P 500.
Definitely. First, thank you so much for having me. But that's exactly right. What we're seeing from an underlying growth perspective in earnings season so far is year-over-year growth of 12%. And we're seeing surprises above average. Now, what you're also seeing is a little bit more volatility and dispersion under the hood. And when you think about earnings season, and you also think about the macroeconomic environment right now, what that means to us is the focus on quality, focusing on companies that have strong free cash flows, low debt on the balance sheet, those are the companies that you want to be focusing on. And this volatility actually has created a lot of dispersion where many of these higher quality companies are now trading at more reasonable valuations given the volatility we've seen, not just over the past week, but really over the past several months.
In a lot of ways, this volatility has been very welcome for what has been increasingly becoming a stock picker's market. But at the end of the day, over the next couple of months, what is going to steal the story? Is it the macro? Is it these positioning level kind of swings here that are sweeping up all these names? Or is it the fundamentals?
So I think that's a valid question, and it's one that we're all grappling with at this point in time right now. I think over the next couple of months, you will see volatility, whether it's positioning, whether it's macro, whether it's earnings. But at the end of the day, we are investing for the long term. We're guiding our clients to invest for the long term. So what that means is stock prices trade on fundamentals and earnings growth over the long run. So while we might see some volatility, at the end of the day, the underlying earnings growth of the entire stock market is strong. Indeed, actually, by the time we hit fall and we enter 3Q earnings season, less than 5% of the S&P 500 sectors are going to be experiencing earnings recessions versus 70% 2 years ago. So while the market seems to be focusing on whether or not the economy is going to enter a recession, the reality is that many sectors within the market have already experienced their recession.
Yeah, of course. I mean, it seems so silly, right? What has changed? If the market narrative before last, let's say, Wednesday was these mega cap tech stocks are riding the AI wave and it's going to boost the S&P 500 6,000. So, okay, we get the Japanese carry trade being unwound. That's pretty much done. We get the economy slowing down on a weaker labor market. You knew that was going to happen. The Fed raised rates 550 basis points in a year, right? Now we're going to get the cuts that we expected as well, maybe a little bit more. So can't we still be bullish, especially since earnings are beating expectations?
Yes, I think the bottom line, if you take anything away from this conversation, is yes, I think that even if there's volatility in the near term, we are constructive on equity markets moving forward for the fundamental reasons that I alluded to before, but selectivity is key. The biggest, please.
I'm always being the bear to Matt's bull right now, but you know, you think about that 5% of the S&P 500 really facing that earnings recession into the third quarter. What is that 5% looking like? To the extent that investors have to avoid at least pockets of the market, where are the places to avoid?
So I think the biggest thing at this point in time is we are advocating for clients to avoid the areas where a lot of the earnings growth has been driven by leverage. So anything that has a company with high debt on the balance sheet, that is an area where we're concerned about moving forward, because even as rates come down, the concern about what economic growth is going to mean and whether or not they're going to need to be dependent on capital markets for financing, that gives us concern. However, where is there opportunity? And that, I think, is what is so exciting. So we're seeing opportunity within pockets of tech. The biggest thing that I like to remind people is that the S&P 500 tech sector is up 14% so far this year. However, if you stripped out one company, NVIDIA, the tech sector is actually only up 2.5%. So we believe that there's an opportunity from a broadening perspective within the tech sector, and even outside of that, U.S. equity markets over the past year and a half, 60% of the returns that we've seen in the S&P 500 have been driven by these magnificent seven, these mega cap tech names. As we start to see more of these underlying companies within the S&P 500 go from earnings recession to earnings recovery, we think that there's an opportunity in broadening of the rally within U.S. large cap equities, and particularly within parts of the tech.
So you don't want to get too broad. I mean, you're not selling your NVIDIA and buying Russell 2000. You're just looking for, you might as well just buy the Qs, right?
So the biggest thing that I would mention there is, even within the Qs, there's a lot of concentration within the mega cap tech space. Now, that selectivity is key. Your exact point is valid. You want to ensure that you're having access to parts of the market where the quality is high and where the competitive advantages are growing. And right now, what we've seen in terms of the Qs and in broader is that artificial intelligence is what has been driving the market so far. And a lot of that value has accrued primarily to semiconductor companies. Now, when we think about what prospects will look like moving forward, AI is not going anywhere. I think we can all agree on that. But there are parts of the value chain that have not accrued to the same extent.
How
Infrastructure
concerned,
plays. Yeah.
How concerned are you to that end about concentration risk at this still in the market?
So it's something that we're vigilant about always. I think that concentration levels that we've seen within the S&P 500 have reached the highest levels that we've seen in many, many years now. So while concern maybe is not the word that I would say, we're definitely observing it and we're cognizant of it. And in that way, we think that there are opportunities moving forward in areas outside of that concentration. And the biggest thing that I'll mention maybe is that concentration would worry me if the underlying fundamentals of those companies were deteriorating or if they were highly indebted or unprofitable. Now, that is not what we're seeing in these mega cap tech names now. Strong balance sheets, high free cash flow generation, strong margins. So when we think about equity markets moving forward, we're still constructive on that space. It's just when we think about the opportunity set and the incremental opportunity set, broadening is where we're very constructive on.
Sitara, we can't wait to have you back to talk more about that opportunity set. That is Sitara Sundar, global equity strategist over at JP Morgan. And Matt, I've got to say, the first thing I did was in every individual equity, you can go to FA Go.
Yes.
And you can see exactly how much debt they are carrying on their balance
Absolutely.
sheet.
I also love MODL Go.
Yes.
I think it's a great function to look
absolutely
at all those
fundamentals.
Data. Okay, coming up, Warner Brothers Discovery posts a multi-billion-dollar charge writing down the value of its TV network. We'll take a look at the ever-shrinking Time Warner AOL when we come back. This is Bloomberg.
The more that you learn about this case, the more it reads like a Hollywood script. The nature of the killings, the execution, the just brutality of it.
It wasn't in the psyche of people that they could be looted because they are considered so sacred.
And we did it the way you do every single investigation. How do you eat an elephant? One bite at a time.
It jumped off the page at me that you could see that there was a Ponzi scheme taking place.
I started hearing mafia, mafia, mafia.
Il sistema è perfetto. Sono gli uomini che spesso non lo sono.
These are the holders of truth and justice. They cannot be possibly be doing this. But then they are. They are. And the evidence is there. It's overwhelming.
Welcome to the world of decentralized finance.
We thought we'd take a look at Bitcoin versus the S&P 500.
Bloomberg's covering all things crypto, the people.
A tectonic shift emanating from Washington.
It's really a tale of two cities in crypto.
Crypto shouldn't be partisan.
The transactions.
Really a record-breaking moment.
Crypto VC is back.
And the technology.
It's really the beginning of a global on-chain economy.
And if America doesn't embrace it, we're going to be left behind.
Bloomberg Crypto, Tuesdays, only on Bloomberg. Bloomberg loves earnings.
I know it's like your Super Bowl, right?
I can't wait. It's like opening presents in the morning.
All right, it will be exciting.
Nobody covers earnings like Bloomberg. Bloomberg Surveillance covers the latest in global markets and the political events that influence your world. Join Jonathan Farrell, Lisa Abramowitz, and Anne-Marie Hordern only on Bloomberg. Context changes everything.
People ask me all the time, what is the key to being a really good investor? And I tell them it's to surround yourself with and work with the best investors you can find. On Bloomberg Wealth, I'm going to take you to meet the greatest investors in the world, the people that I would like to have managing my money. If I had invested with you, which I wish I had, what kind of rate of return would I have had over that 10-year period of time?
Over 100% a year on average. On average.
100% a year, that's pretty unusual.
This is Bloomberg Open Interest. A quick check on stocks, of course, that floated right into green territory after the jobless claims data came in nice and promising. S&P 500 maintaining gains right now of more than 1%. The NASDAQ 100, same goes. Russell 2000 up more than 1.1%, Matt.
All right, let's get to the top calls right now. This is some of the analyst action that we're focused on this morning. First up, Bank America is cutting Celsius Holdings to an underperform, even though Shinali drinks a ton of it every morning. The energy drink maker is the only sell equivalent radio from B of A right now. The analyst says the category itself just ain't what it used to be. Next up, KeyBank Capital is cutting Topgolf Callaway to a sector weight. The company is reporting weaker than expected sales at its driving ranges. Topgolf Callaway is undergoing a strategic review of its driving range chain, including a potential spinoff. And finally, TD Cowen is lowering its price target on Warner Brothers Discovery to $14. The media giant missing, well, it was a giant, not so much anymore, missing earnings expectations and posting a $9.1 billion charge for writing down the value of its TV networks. Some analysts calling the report ugly.
Sure was. $9 billion of a write-down. We're going to stick with Warner Brothers Discovery with Bloomberg's Paul Sweeney here now with us. Before Bloomberg, he spent over 20 years as an equity analyst covering the media space, so has seen the many faces of Warner Brothers and
an investment banker pitching deals before that. I mean, exactly. You were all wrapped up in this when it was Time Warner AOL, weren't you?
Listen, would you want to put these two companies together? Is this an acknowledgement that perhaps Warner Brothers and Discovery didn't work?
Well, at the time, the whole argument was scale. I mean, you have to compete against Netflix, Walt Disney Company. You had to spend billions of dollars on programming to launch these streaming services, so you needed to get bigger. Let's take Discovery, let's take what was left of Warner Brothers, put them together and see if that can work. It hasn't worked. What's happened is they have a lot of debt on their balance sheet that really makes operating the company and investing in the company very difficult for them. And they continue to have to fight these really huge headwinds, which are everybody's still cutting the cord. And so what did they do? They wrote down the value of their cable networks by about $9 billion. That's roughly half the market cap of this company. So real acknowledgement that that business, not just for Warner Brothers Discovery, but for the entire industry, really under pressure.
Is this just, it's like a story of hubris and ego. Yeah, I mean, starting with Time Warner AOL, right, and Steve Ross, this was a bad deal to begin with, and at the time, the biggest deal ever, right, $120 billion. That didn't work. They had to spin off AOL a few years later because it was worthless. Then AT&T came in and bought Time Warner for like a 50-60% haircut. Then Discovery, which is making like home and garden TV, says we're going to buy Warner Brothers by taking out $41 billion.
U.S. stocks extend gains with the Dow Jones up 1%.
Well, it's made David Zaslav rich.
Yeah, so
Keeping it on the S&P, it's nearly up 1% as well.
Forget about Wall Street bankers getting paid well. The best paying industry, I think, is the media business year in and year out. So what you're left with is Warner Brothers Discovery. They have great assets, but they're trying, like everybody else, to navigate this mix or this move from traditional cable television, satellite delivery, where everybody made money, to streaming, where it's so much harder to make money.
What do you think of this prior report that was out there of potentially splitting the whole company up? It was interesting. We spoke to Golden Tree CEO Steve Tannenbaum, big debt investor. He said he loved the idea. When you think about debt on the balance sheet now, how do you start to take care of the issue? Is a spin-off, split up?
This is a company that has done a great job paying down their debt. They have. They've gone from over $50 billion of debt to $40 billion of debt. They have great free cash flow, believe it or not. They're generating a lot of free cash flow, which is helping them pay off debt. Unfortunately, the core business of cable television is declining faster than their ability to deleverage their balance sheet. So they're going to try to keep at it and try to compete against Netflix's and Disney's and Amazon and Apple and some of these huge companies. But at the end of the day, you're right. There might be pressure to break this company up, spin it off.
Weighted average cost of capital does not look good at all. And this is, you know, I saw a quote in a Moffett-Nathanson note where Zaslav says, am I disappointed that the trends in the linear business haven't been a little better? And he says, you know what? It is what it is. We're doing the best we can, and he's writing down $9 billion as he steps onto his private jet and goes back to his $120 million mansion. How much longer is John Malone going to abide this?
Well, John Malone is big investor in this company, and I think he's going to be an agent for change, if you will, to say, this isn't working. These assets are worth more than the stock market is valuing them today. Let's think of a new ownership structure here. So whether that's splitting up the company, spinning off some businesses, or maybe they just keep it together and try to just continue to pay off debt.
I want to get your thoughts real quick, 30 seconds here, about this lawsuit against the NBA. How big of a deal is it to them to have lost that contract to a new age tech company? Zaslav said, at this point, we've handed it off to our lawyers.
Yep, it's a big deal. The way you get higher rights for your cable networks from the Comcast of the world is to have really compelling program. And for Warner Brothers Discovery, some of that really compelling program was the NBA. They've now lost it. So now when you go to Comcast and say, I want you to pay more for my cable networks, they're saying, pay more for what? So it's a real problem.
Paul, we thank you so much for being here. That is Paul Sweeney, co-host of Bloomberg Surveillance and Bloomberg Markets on Bloomberg Radio. Now coming up, billionaire Dmitry Balyazny is on a hiring spree, an expensive one.
In 10 minutes time now at the top of the hour, CW's the US wholesale inventories month-over-month revised data.
Stick with us.
This is the June final revised number here for wholesale inventories. The forecast here is spot 2%, on the prior 0.2%. Wholesale sales month over month, the forecast is 0.3%, on the prior 0.4%.
Fixed income fix. Watch Bloomberg Real Yield every Friday right here on Bloomberg. Context changes everything.
Morning, this is Bloomberg Daybreak Europe. I'm Tom McKenzie in London. These are the stories that set your agenda.
Taking you from the U.S. market's close to the overnight session in Asia. We'll walk you through what you need to know to kickstart the European trading day. Live from our European headquarters, we bring you the day's top market-moving stories, unmatched expert analysis, and on-the-ground reporting from across the continent. Tune in every weekday at 6 a.m. London time, only on Bloomberg Television. It's a multi-trillion-dollar industry. We'll show you what's happening in ETFs like no one else. Bloomberg ETF IQ, Monday on Bloomberg.
This is Bloomberg Open Interest. Let's get a quick check on what's going on in stocks this morning. We see the S&P 500 just about 20 minutes into the session, up 0.8%. The NASDAQ not as strong as it was at the open, but still up 0.2%. The Russell 2000 gaining 1% as bonds fall and yields rise. Shonali?
And it's time now for the Wall Street Beat. Balyazny said to be spending more than $200 million on a hiring spree to help fix its equities trading business. For more on this Bloomberg scoop, we are joined now by Bloomberg hedge fund reporter Nishant Kumar, who is the lead on this story. And you take a look at the money being spent. We knew that there's been a talent war going on in the hedge fund industry. Now we're talking about a talent war at the very tippy top of the big multi-strategy hedge funds. What exactly is going on?
Well, there are not much talent available that all these big platforms who have like plenty of money to spare can hire. Really, there is this shortage of talent is sparking this war for talent. Balyazny is in this case has shifted his focus from hiring relatively less expensive junior people to really going for the top tier traders, and that's why we are seeing these large numbers. Traditionally, historically, Balyazny has spent 1% of its AUM on hiring every year. This time around, it's just that they are hiring fewer people but higher quality larger name hedge fund managers. That's why we are seeing these amazing big ticket hirings.
Nishant, why isn't the pool from which they can hire bigger? Don't kids want to be hedge fund managers? Don't they want to be masters of the universe?
Well, the pool has really shrunk because the traditional training ground of some of these hedge fund portfolio managers, which used to be prop desks, they are no longer there. So the new supply is constrained, and everyone is after this very limited pool, and it's a very specific kind of talent they are looking for. Anyone who can manage $1 billion, build their team, who have leadership quality, train their analysts to become senior portfolio managers, and those who don't lose money often and can really meet very tight risk limits that some of these hedge funds impose. That kind of talent is really not available in the market.
It's interesting. Some of this talent is very young.
In 5 minutes' time now, at the top of the hour, we see the release of the US wholesale inventories month-over-month June revised number. Forecast 0.5%, unchanged from the prior 0.2%, and the wholesale sales month-over-month, the forecast is 0.3% on the prior 0.4%.
How much are top traders being paid?
Well, I have written about someone getting more than $120 million in potential compensation. We have to understand that this is not like they walk in and sign up and get $120 million. This money is paid over a few years, and it's linked to, a vast majority of it is linked to how do they perform, how they build their team, what kind of P&L they generate in future. So it's very variable. Yes, the big headline number looks great, but it's linked to how they do at their new firm.
All right, Nishant, thanks so much for joining us. Nishant Kumar there out of London. Time now for the Trading Diary, what you need to be watching for the rest of this week. The media earnings, is it Thursday?
It is certainly Thursday. It's almost Friday.
It's Shanali's Friday. The media earnings continue this afternoon with Paramount earnings, plus earnings from Expedia and Sweet Green with no S after the bell. We also hear from Richmond Fed President Tom Barkin this afternoon. Tomorrow we round out the week with the Baker Hughes rig count, but without Shanali. She won't be here. Carol Masser, my old partner,
I will be
in place.
lakeside somewhere, but I will be rooting you on.
You deserve it. Enjoy yourself. This is Bloomberg.
The biggest risk in property and casualty, is that now climate change?
Yeah, so absolutely. When you look at natural catastrophes, the number of events has significantly increased, and not only the very big events like hurricanes, but also what we call secondary perils, so wildfires, floodings, and drought. And this leads to the fact that you have far more events and therefore a much higher cost of all of the natural catastrophes.
How do you really assess the risk of climate change? Because how can you possibly know whether there's going to be a hurricane or a flood? It's just based on the past or the projection of the future? Or how do you do that?
Since the dynamic has changed, we need to also look forward. And what we do a lot, we work a lot with scientists who understand what the warming of the Earth and climate change will mean for the question of taking risk. And secondly, we take much less risk than we used to take because we have to be careful.
So let's suppose there are a lot of hurricanes. Is that good for property and casualty insurers or not? Good because people say, well, there's going to be more hurricanes, I should buy more more insurance, or not good because you got to pay a lot of claims?
It depends. I would
1
say
minute
it's
remaining.
good
I'll be leading with the
because,
US wholesale inventories month over month revised.
It's the awareness to do more prevention. What we see today is that, as I said earlier, there is more events. It becomes more and more difficult to insure, and therefore we work a lot with our customers around preventions.
Bloomberg covers the world with unmatched reach and resources. From more than 120 countries, the moment news breaks, 24 hours a day. Bloomberg, context changes everything.
Ten seconds. Spot 2%, 0.2% as expected, with the wholesale sales of minus 0.6%, minus 0.6% revised, which is lower than forecast, 0.3%.
By the most in nearly a year, helping to ease fears about a more pronounced economic slowdown. But JP Morgan now sees a 35% chance the economy enters a recession this year. The firm also says that 3/4 of the global carry trade has now been erased. And plenty of news on the earnings front. Restaurant brand sales grew less than anticipated in another hit to the consumer, while Robinhood rises as net revenue beats. We're going to speak to the CEOs of both companies this hour.
All right, let's get a check on what the markets are doing this morning after the turnaround to negative territory yesterday. We're seeing a renewed rally with the S&P 500 up 1.25%, the NASDAQ up 1.3%. This after initial jobless claims came in lighter than anticipated. So the labor market maybe doesn't look as dreary as
We
it
have
did
posted
on
out the US
Friday.
wholesale inventories June, a final report on the feed for anyone interested.
And in general, earnings season has been pretty strong. So we're out of an earnings recession for the majority of the S&P 500. We're seeing the labor market soften at a slower pace, and the carry trade, Shanali, is getting unwound.
It's getting unwound. Hopefully there's not too much more where that came from. And in effect, you see also yields rising, bonds selling off, not as much worry about steep interest rate cuts. You're past 404 on that 2-year. I know you're getting a kick out of me touching on that today, but we're looking at the short term as well as the long term today. We're going to get a check on these markets now. Some insight with Emily Rowland, John Hancock, Investment Management Co-Chief Investment Strategist, who says we may see a recession soon. She joins us now. When you think about recession odds, any worries about what weaknesses you're seeing through this economy, where are you the most concerned still?
Yeah, sure. So we are seeing some cracks in the labor market. That was clearly evidenced not only by the jobs report last week, but also some other real-time measures that we look at, jobs openings slowing, the survey data suggesting that the employment components are unraveling here. But it may take some time to play out. You know, there was obviously a huge growth scare that played out towards the end of last week, and we've gotten some better than expected data. ISM services elevated, still in expansionary territory. Initial jobless claims, which are a volatile series, again, coming in lower this morning. So it may take some time for this contraction to play out, and we want to be mindful of that as we think about positioning portfolios.
Emily, doesn't it, I mean, I feel like by every metric, we should be just as bulled up as we were last week, before the Bank of Japan, because they have come out dovish and kind of done a mea culpa for roiling markets. We knew the labor market was going to soften, and it doesn't look as bad today, but that was inevitable with 550 basis points of hikes. We're out of an earnings recession for the majority of the S&P 500. Aren't we still hyped up on AI?
Yeah, I mean, Matt, you're right to bring earnings into the discussion, because over time, stock prices follow profits. And if you look at what happened last week, think about all the smoking guns, the yen carry trade, the softer economic data. You can't blame this on earnings. Earnings growth is coming in about 12% year over year. That is pretty darn good. I think the challenge for investors has been this impressive run up in prices prior to this earnings season. It's like earnings had to be perfect. It reminds me of that Swedish pole vaulter that was, the images of him kind of breaking the world record at the Olympics. Like, that's what I think about in terms of companies delivering on earnings this season. You look at the losses we've seen in markets, it's all multiple contraction. It's not earnings. We went from 21 times forward earnings on the S&P 500 to about 19 and a half times. So we've let a little bit of air out of the markets, not necessarily a bad thing.
So how do you then position around something like what we're seeing now, where we have a lot of divergence happening in the market on both the macro outcomes as well as where the market is headed? So does that mean you position deeper into bonds? Do you position into cheaper equities? What are you looking at?
We have had a modest overweight to bonds here. The idea being that they're mispriced for a slowing economic growth backdrop. But certainly, we're more mispriced at the beginning of last week, but you're looking at about a 4.5% yield on the aggregate bond index. You can lock that yield in for years and develop an income stream for clients at those elevated rates. We would be looking to do that. We would be underweighting credit within fixed income. You look at high yield bond spreads, we're well below 400 basis points here. The 20-year average is 500 basis points. I think you could see some more deterioration in spreads, especially as the economic data decelerates. We don't think high yield bonds are priced for a contraction. And then we would be looking to higher quality stocks. We are using the moniker quality at a reasonable price. We want to own companies with great balance sheets, tons of cash, low interest burdens, and an ability to maintain profit margins. You look at an environment where revenue growth is slowing, which naturally happens as the economy slows, but the cost of capital is still elevated. And in that environment, corporate margins are compressing. So the relative winners are the ones that are going to be able to defend those margins. We're finding that a lot in the mega cap tech names. A lot of them are pretty expensive, though. So we also want to look at ways to diversify by finding quality on the value side as well.
Do you, in your role, Emily, do you sit around imagining what tail risks could pop up? Because I hadn't really thought about the carry trade and the Bank of Japan, causing these global ripples until really Wednesday of last week.
Yeah.
All of a sudden, it's like everything I care about for the last 48 hours, 72 hours. Is there some other shoe to drop?
Yeah, of course, we're always thinking about that. And there's some key risks. We've been watching China, for example, for the last couple of years in terms of the deterioration we've seen in their property sector and other risks in China. The kind of other side to that, though, is the ability of policymakers to come in and stimulate. So we've seen that over and over again in China. The risk to being underweight there is those stimulus efforts. And we see it in the United States as well. We have increased the size of the deficit to the tune of almost 7% of GDP. We continue to spend here, which is pretty unusual because normally you increase the size of the deficit on a counter-cyclical basis, meaning to get us out of a recession. And right now we're doing it with inflation still elevated and the labor market still, pretty tight. Again, very, very unusual under historical standards. So that's given the ability to extend the economic cycle a lot longer than we thought. So some of those risks are being kind of counterbalanced by the ability of policymakers to deploy stimulus when times get tough.
I'm wondering about the most mispriced opportunities. Matt has been making fun of me all morning, but the fact that the 10-year yield
Not making fun.
You like to poke a little fun. I mean, the fact that the 4-year yield is about to hit 4% again.
The 2-year yield.
Yeah.
The 10-year yield.
10-year also now. Yeah. I mean, this week it sounds like we're dreaming a little bit here because you saw this massive, really bid into the bond market earlier this week. If you bought on Monday, you are in the red today. I mean, a few days doesn't make a trend, but where are people not really baking in pricing here and just moving on, let's say, emotion at this point?
Oh, it's so emotional. And when we saw the 2-year, for example, falling to 370-ish, that to us felt like a move that was overdone. We looked to the 10-year Treasury yield as having the better opportunity here. We like duration, back up in bond yields here opportunistically for bonds. The total return potential is there. And in fact, you could get really outsized returns owning bonds over the next 12 months. You could get a year's worth of bonds returns in a very short amount of time. Again, as we contend with this economic contraction that's likely to see bond yields fall.
All right, Emily, thanks so much for joining us. Emily Rowland there of John Hancock Investment Management talking to us about these markets and the volatility. We are watching the 10-year yield closely. No, you've been talking about this all week, and I'm watching, well, I guess you've been talking about this the last couple of days, and I'm watching these yields rise as well. It's interesting as we get a little bit better news on the labor market, then the Fed may not have to cut so deeply, and then you could buy your bonds later instead of holding on super tight the ones you have now. So you might as well let those go and the yield rises.
You know, you do have still WIRP go. You have more than 100 basis points of rate cuts, really still priced in through the end of the week, though that pricing has come down quite meaningfully in the last couple of days. Matt.
Let's get a check at what's going on in terms of the individual stock stories right now after all the earnings that we had last night and this morning. Let's get over to Abigail Doolittle. Abby, what are you looking at?
Lots of big movers indeed, Matt. Let's start off with the shares of Under Armour popping the most, soaring, I should say, the most since October of 2018. This as Kevin Plank's turnaround plan, restructuring, really helping out investors liking it. There is a big short interest on this stock, though, about 13%. So this could be a piece of the squeeze. Nonetheless, they put up a good quarter. Their North American sales better than feared, and they beat sales by 4%. Eli Lilly is another big winner on the day. They beat earnings in a massive way. Adjusted earnings, I believe the beat was around by 50%. A big sales beat as well. They raised their outlook for a second time for sales, having everything to do with Zepbound and Mounjaro. Investors clearly liking it, up 9% into this, up 32% on the year. And then finally, not related to earnings, we do have the shares of MetaHire up 2.5%. This after they raised $10.5 billion. It's the company's largest high-grade debt sale ever. Investors like this, Matt.
All right, very interesting stuff. We watch high-grade corporate spreads, and as Emily was pointing out, they're just really not that wide. Abigail Doolittle, thanks very much for that. Coming up, another sign of consumer weakness hits the parent company of Burger King and Popeye's Chicken. Josh Kobzo, the CEO of Restaurant Brands International, joins us next. This is Bloomberg.
Morning from our world headquarters in New York. I'm Manus Krennic.
And I'm Danny Berger. Let's set your agenda.
Bloomberg Brief delivers the market news, data, and analysis you need live every weekday at 5 a.m. Eastern. Bloomberg. Context changes everything.
This is Bloomberg News Now.
News when you want it at the touch of a button.
Another volatile day on Wall Street. We're seeing big moves.
All eyes on Capitol Hill as Democrats and Republicans prepare.
Today's job numbers casting doubt on the Fed's next move. Inflation remains front and center. And that's news when you want it with Bloomberg News Now. Get it 24/7 on the Bloomberg Business app, Bloomberg.com, and anywhere you get your podcasts.
Bloomberg News Now. Context changes everything.
DOJ or other authorities.
Could face bigger challenges next.
It was going to keep rain World Cup.
This is a three as the economic picture.
Covering the intersections of Hollywood, Silicon Valley, and beyond.
Let's get to high interest now. Look at what's making headlines around the world. 3 Taylor Swift shows planned for this week in Vienna have been canceled due to a terrorism threat. Austrian police arrested 2 people on suspicion of planning a terror attack. The Vienna shows were part of the final leg of Swift's sold-out Eras tour. Manhattan's renters, I should say, are seeking out smaller apartments in order to avoid paying larger and larger rent costs. The average size of an apartment being picked up in July declined nearly 10% from the same month last year, and the average square footage being leased has declined on an annual basis for the past 11 months. Well, it's only been volatile for a week on Wall Street. It's been a wild summer for the finance industry. Interns, the New York Post details how, with intern pay higher than ever and working conditions better than ever, some summer hires have been going out and partying 4 or 5 nights a week, up from the usual 2 or 3 in the past years. God bless them, Shanali.
Really, Matt, life is a party.
Yeah.
So what's another couple hours out? We're going to switch gears. We're going to talk about the consumer sector a little more. We have Restaurant Brands International. It's the latest company that is feeling that consumer crunch. The parent company of Burger King and Popeyes saw sales growth slow in that second quarter. It is just another sign of waning consumer appetite hitting restaurants, many people feeling it. We welcome in Josh Kobza, the CEO of Restaurant Brands International, to talk a little bit about what's going on under the hood. And you look across the brands here, and there are some very striking moments here. For example, with Burger King coming in less than expected at same-store sales comps, what do you think here, Josh, this really means? Is this a matter of price pressures that consumers are still feeling, or is this a matter of some change in consumer preference that's layered on top of this as well?
Hi, Shanali. Matt, thanks so much for having me. Good morning, and it's a pleasure to be on the show. So we are seeing some softness in the consumer, especially in some of our home markets, and you see that play through in some of the data across the industry. That said, we're really focused on having amazing value offerings for our guests in each of the businesses, and I think we're doing a pretty good job at that. At Burger King for the quarter, we had some incredible value offerings. We had our $5 your way meal. And we did manage to outperform some of the largest players in the sector. So I think we've got the right value for the customer, and clearly they're looking for it. We're seeing a great response to what we have out there. And one of the things that we just shared this morning is we're going to extend some of those value offerings, specifically our $5 your way meal, now into October. So we have the right value offerings. We think they're working for the consumer, and we're going to keep those going through later in the year.
But the key here, Josh, is that the consumer needs cheaper products, right? I've seen $5 value offerings pop up at a number of competing chains. Is this consumer really under pressure? Can you see that in your sales?
So I think what the consumer wants is they want all the basics of the industry. They want the quality products, great service, and convenient modern locations at a good value. And what we always have to keep our eyes on is doing all those things together. So we're focusing on having the fundamentals right, and in this environment, making sure that we have the right value offerings. And we are seeing a reaction to those value offerings. So some of the things we've had out there, like the $5 Whopper Junior Duos or our $5 your way meal, they're getting a lot of traction for our customers. So we do see that guests are looking for things that they can do to get great value out of our sector. They're reacting to what we have out there, and we feel like we have the right offerings out there for them right now.
I understand that you're doing a good job of giving the consumer what she or he wants. But what I'm asking you is, from your vantage point as the CEO of these brands that are so widely accessed by the consumer, how does the consumer's financial health look to you?
So we do see some pressure on consumers' overall financials. I think there are some things that are putting pressure. So there are some things that are going up in their budget. Things like rents or insurance payments are putting some pressure, and that's causing consumers to be more choiceful. And so how we see that is we see consumers are choosing some of those value offerings, and in some cases, they're attaching less sides. So those are the behaviors that we see. We think that environment's likely to continue through the rest of the year. And across each of our businesses, we're trying to make sure that we have the right value offerings that cater to the customer in that environment.
How competitive is it out there now, particularly in this kind of value sector of food right now? If you think about it, $5 seems to be the sticking point. You know, Taco Bell also had a $5 deal as well. Wendy's had a $3 breakfast deal. When you think about this $5 Burger King deal that you now are extending, as you announced this morning, how important is that price point right now? And
so we're looking now to the Fear and Greed Index, which is showing 22 out of 100, which indicates extreme fear. Crypto Fear and Greed Index 20 out of 100 at extreme fear as well.
And now you're seeing more of our competitors.
And so, yeah, of course, the S&P 500 is up over 1.5% on the session so far. Fear and Greed Index is taking into account more areas of the economy as opposed to just the indexes, though, just worth mentioning. Keeping it on the VIX as well, which is currently down 9.8% at 25.1 points.
Overall, as you have more players bringing great value back to the consumers, I think as a sector overall, we're starting to improve the value impression of the restaurant sector with consumers. And it's been really interesting, even as we've gone through the last month or two, and you've seen more of our competitors start to bring into market and promote some more $5 offerings. We actually haven't seen any impact to our business. So we've actually seen increasing adoption of those meals in our business, doing pretty well with them. So I think there are some positive aspects of the amount of competition and the amount of value that the sectors bring to the guests, which they really seem to like.
You have a great vantage point also to comment on the labor market, Josh. How do you see the labor market right now in terms of supply? We've seen, the unemployment rate rise, and economists are telling us that's because there are more people in the labor market. That's part of the reason. Do you see that, or do your franchisees see that as well?
So I would say we've seen labor market conditions be a little bit more benign today versus where we were 2 years ago.
So in 10 minutes, let's highlight the bottom of the weekly EIA gas change. Forecast is for a build of 25 BCF on the prior build of 18 BCF.
It's allowing us to staff the restaurants better and to provide better service to our guests. And I think those are all things that help us a lot. And that's mostly in the U.S. Up in Canada, there has been a little bit more pressure on unemployment. So the unemployment rates ticked up in a little bit bigger way up here in Canada. But our business up here has been doing great. I'm here in Toronto today in our Tim Hortons test kitchen, and we just reported almost 5% same-store sales in our Tim Hortons business, which is tremendous even in a challenging environment. So Canada's a little bit different, but in the U.S., less change in unemployment recently.
Josh, my colleague here, Matt Miller, really wants to start using Wegovy or Ozempic, and he talks about it daily actually these days. When you look at these weight loss drugs that are entering the market at more and more scale, how do you think that's going to impact your brands moving forward?
Yeah, we haven't seen any impact so far. I know there's been a lot of talk about it in the press and the investor world, but we really haven't seen any impact from any of the weight loss drugs so far. I'd say we're much more focused on getting the basics right and bringing the right value to our customers.
Even in terms of the offerings, because we had a great big take story today on the weight loss drug use in Bowling Green, and one of the protagonists in the story was saying, I just want more chicken because you need to get more protein, right? So do you not see people choosing the higher protein items on your menu as a result of using these drugs?
I think just because of where the adoption rates are, and I think they're still low in the overall population so far, we don't see it playing out in our aggregate data in the way that we can see yet.
Interesting.
So US stock index extending gains here. That's the S&P 500 up 1.6%, the NASDAQ up 1.8%, Dow is up 1.3%.
Great overview of the consumer. Still ahead, we're going to take a look at the companies making the most buzz today in social climbers. Next, this is Bloomberg.
Good morning. This is Bloomberg Surveillance.
Welcome back to the opening trade.
This is Bloomberg Technology.
This is the Asia trade.
You're watching the close.
Welcome to Balance of Power.
This is Bloomberg.
From the beating heart of global finance, economics, and politics, and wherever newsmakers are moving markets. Bloomberg brings you conversations that allow for deep discussions and important insights. What do you think the future is for inflation? Is this a new normal?
Are markets too optimistic?
How do you worry about the things that are outside your control?
How does the current fighting completely stop?
I'm Francine Lacroix, and this is The Pulse, every weekday at 9 a.m. only on Bloomberg.
Get a quick check on the markets right now as the S&P, the NASDAQ, and the Russell 2000 gain and continue to gain more into the open. This is kind of the pattern we saw yesterday, so be careful because we did see then a turnaround down into the close. The S&P 500 up 1.5%. We're also watching very closely the yields, especially Shanali. The 10-year yield right now at 3.9935 to bring it out 5 significant digits. It has at one point, Shanali, been over 4%. So we've seen it cross into 4% territory, joining the 2-year.
What a week. I could tell you that I'm sad not to be here tomorrow to watch how it plays out.
I'm
but
sure
it's
you're not.
Gonna be up to
In
you
5 minutes time now, at the bottom of the hour, we see the release of the weekly EIA natural gas change. Forecast sees a build of 25 BCF off the prior build of 18 BCF.
And insurance. This has been the hot topic here across private markets. Real estate profits, though, dipped 12%. Brookfield is one of the world's largest owners of office real estate, a sector that has faced huge difficulties. Nonetheless, Brookfield's up more than 2.6%. Next, Liberty Media says it has been informed that the Justice Department is opening an antitrust investigation into Formula One's actions regarding Andretti, Formula Racing's application to join the FIA Formula One World Championship. Liberty Media said it will cooperate with authorities. Finally, NASA is working with SpaceX to return 2 astronauts to Earth in case they can't travel on the troubled Boeing craft that initially carried them to space in early June. NASA says the 2 astronauts could come back to Earth around February 2025 on SpaceX's Crew 9 mission. You can follow all the latest company buzz on TREN Go on your Bloomberg terminal. And up next, we're going to be joined by Robinhood CEO Vlad Tenev discussing recent market volatility and his company's expansion beyond stock trading into credit cards and other products. That is really what has been lifting up this stock this morning. Stick with us. This is Bloomberg.
NASDAQ now up 2%.
Saturday mornings, I understand you have off.
Yeah, Saturday is always a day where I power down. So I run at a relative high pace throughout the week, try to wrap things up, and Saturday is a quiet day for me in terms of work. And I start typically by playing tennis with my wife. We go for a swim all year round. After that, have a nice lunch, and then I'm onto a good trajectory for the weekend. And then Sunday, I try to prepare for the coming weeks. But through a weekend, I would send either no emails or very few emails, because I want to drive a culture where all get an opportunity to spend the weekend as they fancy. I think what we do is so difficult, and it takes so much creative thinking to succeed, that if you're always on, always busy, the bandwidth of your reflection is just too narrow.
1 minute remaining now.
That Monday mornings, I'm a better leader than I am, say, Friday afternoon. I also take all my vacations. I generally believe I'm a much better CEO right after a vacation than I am before vacation.
Earnings.
I know it's like your Super Bowl, right?
I can't wait. It's like opening presents in the morning.
All right, it will be exciting.
Nobody covers earnings like Bloomberg.
10 seconds.
Retail trading darling Robinhood extending its growth into the second quarter despite a drop-off in crypto activity, and the company reported
Build of 21 BCF, a build of 21 BCF, that's lower than the expected build of 25 BCF.
We are joined by Robinhood co-founder and CEO Vlad Tenev. And fascinating, Vlad, want to talk to you actually about the quarter in just a minute, but I would actually love to talk to you about what happened after the quarter, because you saw August hit and all of a sudden a manic Monday, and a lot of questions out there about how the retail trader in particular has behaved. What do your volumes look like for August and in Monday in particular?
Thanks for having me, Shonali and Matt. August has been very strong.
We have posted out the weekly natural gas storage reports on the feed for anyone interested.
We're about 20% higher than what we reported across June. August has continued very much the same. 1 billion in net deposits in the first week. About $500 million of that came this Monday. And the overnight session for 24-hour market on Sunday night was about 3x a typical day. So 24-hour markets have just been ripping, and customers tend to be buying the dip. They're more buyers than sellers, which we think is a really good sign for the health of the retail market.
We saw on Monday morning, Vlad, as the markets kind of tanked, and there was a lot of fear out there. Some of the your more traditional competitors have problems with logins, and obviously that makes customers very angry, especially if they want to get in there and buy the dip when it's at 5% and could lose opportunity any minute that goes by. How did your technology hold up during those shutdowns at other platforms?
Our technology is strong. You know, we've made a lot of investments. We were fortunate not to have any issues of a significant nature when all of the competitors were down. And a lot of customers were actually looking to Robinhood. And we've had challenges in the past, no doubt about that, but that's hardened the company, hardened the infrastructure. And now when we see high volumes, we're ready for it. So we were happy to see customers moving to Robinhood and kind of pointing to us as one of the most reliable platforms during this recent bout of volatility.
Vlad, the Blue Ocean ATS in particular that's facilitated a lot of this 24-hour trading activity was suspended in recent days. What exactly happened there, and what do you do to make sure it doesn't happen again?
Yeah, so like you mentioned, Blue Ocean ATS, which facilitates the overnight session, that's 8 p.m. to 4 a.m. Eastern, and really closes the loop to enable us to offer 24-hour trading for customers. And by the way, just want to kind of make it clear, we're at the absolute bleeding edge of this technology. So not many people are offering this. You basically have to go to Robinhood to get this type of experience. And we offered over 1,000 individual stocks for 24-hour. So we really think this is the future. And, you know, Blue Ocean had some technical issues. They were not able to handle the scale, and their infrastructure basically fell over, and they've been
they've been working to improve that. And we have experience dealing with massive scale, so we're being as helpful as possible. And we look to make sure they enable it for all of their customers and all of our customers as soon as possible. I think it's scheduled to be re-enabled next Thursday. So we're getting close.
Vlad, in terms of the future, I've heard some older market participants express concerns about 24/7, 365 trading just because of the liquidity and the way markets were set up. Do you think that changes? Do we move to a model where clients can trade across assets anytime?
Yeah, we're pretty much already there. I mean, that was a concern until Robinhood really entered the market and brought the liquidity. And it hasn't been a concern. We've been actually seeing the liquidity in those markets. The volume has exceeded our expectations. We announced in the earnings call that volume in the overnight session has approached 30 billion, which, you're starting to get into significant volumes. And as the US markets become more and more global, and you're starting to see the APAC countries plug in to access US capital markets, I think this is going to become more and more important. So absolutely, it's the future, and we're proud to be at the bleeding edge of that.
Vlad, it's interesting. This morning, your stock was really on a tear. It's kind of moderated a little bit, down a little bit as we speak. Investors are looking to understand how to feel about your stock. And one of the big stories is diversification. You had a record number of cash sweep balances, for example. Robinhood Gold members get a very competitive rate on those balances, 5%. As interest rates drop, what kind of rate are you planning on giving investors for a product like that in order to stay competitive? And how far can it go? At the end of the day, it does cost you something to be giving out 5%.
Yeah, the general principle that we operate by is being a technology company is a core competitive advantage, and that allows us to offer low costs and operate the business, giving more value to customers. I mean, if you look at what Robinhood's done, one of the big innovations is we're the first digital brokerage. Our competitors have physical stores that they staff with people, and in order for them to expand, they rely on that footprint. And so if we think about what our advantages are, as a technology company making investments, largely fixed cost base, we can offer lower costs to customers, pass more savings back to them, and that results in these awesome rates. And we've seen that resonating with customers. Net deposits, as you mentioned, were a record at over 13 billion. We're continuing to see that. Frankly, one area where we candidly hadn't been doing as well is margin, and we fixed that. Now we're offering the leading margin rates in the market. You can see our margin book up north of 50% year over year to a 2-year high of 5 billion, and it's continued to grow so far in Q3. So I think we're just getting started. I think that the overall principles, regardless of the market environment, regardless of the product that we're offering, you should assume that Robinhood's going to be the value leader and the leader in user experience. And the combination of both is going to be how we'll continue to grow market share as we expand.
I have a viewer writing in with a question, Vlad. He's asking why payment for order flow companies always have outages, but IBKR Pro, which doesn't participate in payment for order flow, does not experience these outages. I don't know about the validity of the question, but a client's writing in with that, so I'm going to throw it up to you.
Well, we didn't have a significant outage so far this week. Of course, the Blue Ocean ATS had their issues, but that's not Robinhood, even though we rely on them for the overnight session. And payment for order flow is just a component of the business model. It has become the standard. Of course, IBKR makes use of that for some of their products as well. But yeah, the business model has really nothing to do with the technology infrastructure there.
New technology. Let's talk about it, because of course one of the big acquisitions you made recently, and you've been throwing through acquisition, is in an AI research platform. How far, Vlad, can AI really go to transform what Robinhood looks like?
I think that Robinhood's been the beneficiary of several technology trends. I mean, if you look at the rise of mobile and cloud,
that really set the foundation that enabled Robinhood to be successful and take market share in this new industry and really change the dynamics of the industry and move everyone to zero commissions. And I think that AI has the potential to be another platform shift. And like I said to the team, platform shifts are an opportunity to grow market share, to continue to increase what you're doing relative to incumbents. And we all have to become experts in this. It's sort of like the first accountants that used spreadsheets and VisiCalc in the 80s. There's a huge advantage imparted upon those that can adopt the technology early, become conversant in it, and use it to accelerate their business. And that's what everyone at Robinhood is thinking about, whether it's in AI or cryptocurrency, which are the two big technological shifts that are affecting our space.
You know, I've come to expect AI from a number of apps across the range now, not just ChatGPT. Are you embedding more AI in Robinhood? And also, what's the deal with Harmonic? It's your AI startup.
Yeah. So Harmonic is separate from Robinhood. And basically what Harmonic's trying to do is create mathematical superintelligence. If you look at the AI models that are out there right now, two big problems. One is hallucinations. They don't generate correct outputs. And in fact, they can very, very confidently say the wrong things. And the second problem is they're trained with internet data. And basically, if you look at this generation of models, internet data is basically out. I mean, they've already trained on everything that's out there. So Harmonic aims to make a mathematical superintelligence, which is something that can solve math problems and quantitative problems at a capability in excess of all humans. And I think that this is going to be the next frontier in AI research. And what you'll see is no hallucinations, and also a lot of the data for training these models being generated synthetically through conjecturing and other things.
Vlad, do you see a universe in which Robinhood works with Harmonic more closely? We should also mention that this morning Sequoia Capital, according to the information, has discussed funding the startup Harmonic as well. What's the future? Can Robinhood be working with Harmonic?
I think it's a little bit too early for that. I mean, it's very much an applied research lab. They're working on solving mathematical problems. And I think over time, the applications of that are to many things. I mean, if you think about what AI can do and what superintelligence, which is kind of the next level of AI, can do, the possibilities are profound. I mean, we can change the way that software is written, make sure that software that's written is verifiably correct. You see all of these cybersecurity incidents that are generated by very intricate, small software bugs and glitches. A lot of that happens in the cryptocurrency space. So I do think there's applications across financial services and the broad set of domains that involve technology.
Vlad, also wanting to ask you about this Wells notice from the SEC that Robinhood has disclosed regarding crypto activities. How is Robinhood planning to respond, and what exactly is it that they're concerned about most?
Sure. Yeah. I mean, this landed right around the last earnings call. And basically, we have formulated a response. We've spent a lot of time making sure that that the response is as high quality as possible. And we've submitted that. So no updates to share, but of course, as we have them, we'll share them with the broader community.
Vlad, we appreciate your time. That is Robinhood co-founder and CEO Vlad Tenev, of course, on the heels of record earnings, really. Let's go to check on these markets before we go to break here, because, of course, we've seen that S&P 500 still gaining some steam, 1.8% higher on the day. The NASDAQ 100 really up more than 2.3%. As you point out, Matt, you never know what's going to happen in a day. These days have been very, very volatile, but at least as long as we've been sitting here, we've been seeing those gains quicken. Yeah, absolutely. Although that was the story yesterday as well, and then we closed down, 0.8%. What does that say about us? On the S&P. We should stay on air to keep the bulls. No, hopefully that's not the case. Yeah, we're seeing really interesting volatility here, and if you look at the weekly
performance of the S&P. This could be the 4th week in a row that we have a loss.
4% on the 10-year.
This is Bloomberg.
AI, how it has penetrated pretty much all sectors, including music. AI can write music, compose music. How do you see AI changing the landscape in fashion?
Yeah, AI definitely helped. When I did the jewelry, I used the AI, helping me to give some idea, but ultimately you still have to do a lot with it. They just give you very superficial ideas, and but at the end you still have to customize how to really make it to do that. I do not think that AI and the technology can replace the human mind at this moment. Yeah.
Are you concerned one day we won't be able to differentiate designs by AI and designs by an actual designer?
I don't know. For me, I feel that when the design is doing, it's the spirit, it's the heart that the computer don't have.
Get your fixed income fix. Watch Bloomberg Real Yield every Friday right here on Bloomberg. Context changes everything. Bloomberg Surveillance covers the latest in global markets and the political events that influence your world. Join Jonathan Farrell, Lisa Abramowitz, and Anne-Marie Hordern only on Bloomberg. Context changes everything. It's the world's second largest economy with a growing influence in global affairs. But geopolitical uncertainties, deflationary pressures, and questions about foreign investment linger. Bloomberg, The China Show, brings you the unmatched expertise you need to keep track of breaking news, in-depth market analysis, and the most influential newsmakers in and around China. Bloomberg, The China Show. Weekdays at 9 a.m. Hong Kong time, right here on Bloomberg. Context changes everything. It's a multi-trillion-dollar industry. We'll show you what's happening in ETFs like no one else. Bloomberg ETF IQ, Monday on Bloomberg.
As the world gets ready to say goodbye, au revoir, possibly, to the 2024 Paris Olympics, work is well underway for the 2028 Summer Games in Los Angeles. The U.S. Olympic and Paralympic Foundation is aiming to raise $500 million to better provide for its athletes. And joining us now from Paris is the president of the U.S. OPF, Christine Walsh. Christine, thanks so much for joining us. I think it's a fascinating foundation, and I don't think everyone understands how our Olympic athletes support themselves. I would hope that Simone Biles is getting some deals, but before these athletes go professional, they need to be just working, eating, and sleeping. So tell us a little bit about what you do.
Thanks for having me on. Yes, Team USA is one of the only National Olympic Committees that does not receive federal funding. There's approximately 200 nations that make up the Olympic movement, and Team USA relies on broadcasting sponsors and the philanthropic public. We are fan-funded. 57% of our athletes live below a salary of $50,000 a year. So Simone is an amazing star for us. We love her, and she's an amazing advocate. But there are 590 other athletes that make up Team USA. and they do need the support of the American public.
You know, you're on the heels of a historic campaign here, a $500 million fundraising campaign, and we've reported that you're looking at a separate $200 million as well. Can you explain how this fundraising push has been going and where the money is going to go at the end of the day?
Yeah, thanks. Athletes really need support both on the field of play and off the field of play. And the foundation is focused on the athlete journey, so health and wellness, performance and innovation, and career transition and athlete earnings. So what our focus is to make sure they do all the things we've seen them do in the last few weeks in Paris. We have an extraordinary medal count leading the medals, but we also need to make sure our athletes are okay and have the resources they need off the field to play. And this campaign looks at the holistic athlete in a way that really helps them succeed here in Paris, in Italy in 2026, in LA in 2028, and also off the field of play as they transition out of sport.
This is Bloomberg, so we're obviously reporting on Wall Street, on, you know, hedge fund titans of the world. How helpful has the finance industry been to your funding?
They've been very helpful. We have such an amazing group of community and business leaders that write checks and are very philanthropic. They also are advocates for Team USA, explaining that our athletes don't receive federal funding and 100% of all donations goes to athlete programs. We wouldn't be where we are today, 10 years into this foundation, without our community and business leaders. And the financial sector has been immensely helpful in raising dollars.
It's interesting. Some of the people that have contributed, for example, Citadel's Ken Griffin, Morgan Stanley's co-president, Dan Simkowitz, who's been a sport ambassador. You know, one thing we reported here over at Bloomberg is that this has really become like the summer Davos. And so how has the perception of the Olympics really changed among kind of these high-level donors, and how has it helped you at the end of the day as well?
Yeah, you know, today, more than ever, we need to unify this country, and the power of sport is the perfect recipe, if you will, to do that. I think community and business leaders realize that we can cheer on Team USA as a unified front. And so these business leaders are leading the way. And what we're trying to do is encourage every American to invest in Team USA at the smallest dollar amount. And that's what's going to really make us successful as we raise this $500 million.
Christine Walsh, U.S. Olympic and Paralympic Foundation President, we thank you so very much for your time, especially just as the Olympics starts to close up in just a couple days. Now coming up, we're going to switch gears, talk a little bit more about what's been getting caught up in this market. Quant funds getting caught out in the market moves. We're going to discuss it next. This is Bloomberg.
Covers the world with unmatched reach and resources. From more than 120 countries, the moment news breaks, 24 hours a day. Bloomberg. Context changes everything.
Morning, this is Bloomberg Daybreak Europe. I'm Tom McKenzie in London. These are the stories that set your agenda.
Taking you from the U.S. market's close to the overnight session in Asia. We'll walk you through what you need to know to kickstart the European trading day. Live from our European headquarters, we bring you the day's top market-moving stories, unmatched expert analysis, and on-the-ground reporting from across the continent. Tune in every weekday at 6 a.m. London time, only on Bloomberg Television.
Good morning from our world headquarters in New York. I'm Menace Credit.
And I'm Danny Berger. Let's set your agenda.
Bloomberg Brief delivers the market news, data, and analysis you need live every weekday at 5 a.m. Eastern. Bloomberg. Context changes everything.
Funds that chase the hottest trades on Wall Street were getting thrashed around as the momentum bets backfire all at once. And for more, we're joined by Bloomberg cross-asset reporter Denitsa Tsekova, who's been reporting on this. It's interesting because on one hand, you want to blame the quants. On the other hand, you've also reported that kind of the dollars that were at play here are in the billions, right? They're not enough to move the whole market. Who's exactly getting burned in all this?
Yeah, so let's not start blaming the quants. It's not their fault for the sell-off. But that said, they do amplify those moves. And CTAs have been a big part of it, not the major force. There are other systematic players like volatility control funds. We've actually have been much bigger seller of equities. They've sold more than 100 billions. From CTA, we saw 60 billion. So there is definitely a lot of technical force. But I also think they're a great proxy of what's happening in markets. They're tracking very well how concentrated markets were. So obviously, in a big reversal, they were the ones suffering the most. Just as everyone was buying big tech, everyone was chasing the big winners, forgetting about the laggards, they were doing the same. And now they're the ones who are facing the worst recovery.
Just to step back for a second, why do quant funds, why are they inherently all at the same party? Why is there so much concentration in these algorithm funds?
Well, that breed of trend followers, they don't care about fundamentals. They care more about what the crowd does, which in periods is very successful. In fact, this was one of the best strategies this year. It was up 14%, and now we're back close to zero. So in that sense, they were just chasing that momentum, and everyone cared about momentum. But when something macro happens, when volatility rises, when we're worried about central banks, here we are, big losses.
Only in about 30 seconds or so here, but can you explain why the volatility issue has been compounding on itself?
Yeah, so volatility on its own, there are a lot of funds who really care and target, for example, 10% volatility, which are not the trend funds, it's our funds. So when volatility raises a lot, they start to reduce risk. So they sell stocks, and maybe they move in bonds, maybe they move in cash. So we're seeing compounding effect of them reacting to volatility rising further. So it's becoming, some people are calling it a doom loop, volatility loop. And CTAs are part of this because they react, they sell, and they help in a rally, they boost gains. But in a sell-off, they put more pressure downwards.
Denitsa, thanks so much for joining us. Denitsa Tsekova talking to us about the quant funds. Let's get your trading diary, what you need to be watching for the rest of the week, which is only one more day. The media earnings continue this afternoon with Paramount. Earnings from Expedia and Sweetgreen are after the bell as well today. We're going to hear from Richmond Fed President Tom Barkin this afternoon. And then tomorrow, we round out the week with the Baker Hughes rig count. Is that all?
It is all, but tomorrow on Open Interest, you have some CEOs. CarGurus CEO Jason Trevisan and Potbelly CEO Bob Wright. More on sandwiches, not burgers this time. Stick with us through tomorrow. This is Bloomberg.
We want to make sure that we're exposed to categories that continue to be relevant to consumers, that we're positioned in categories where we have a competitive right to win.
By strategically adding and shedding assets, General Mills has turned over about 20% of its net sales base in the last 6 years. It's dramatically expanded its pet food platform, starting with the purchase of Blue Buffalo pet products in 2018. That expansion dovetailed with a boom in demand.
Pet in the U.S., pet feeding and treating, is a $50 billion category. It's almost 5 times the size of a category like cereal.
Is this the future of the company? I mean, we so much associate General Mills with breakfast and cereals, human breakfast and human cereals. Are we now going to be thinking about General Mills much more as a pet food company?
I think you'll be thinking about General Mills as a food company where we treat all the members of the family like family.
The humanization of pets is actually the biggest driver of pet food and pet treating growth. It has derivatives in not only feeding, which is the core thing that most households where most of the dollars go against the pet, but treating, and then you start to branch out to things like vitamins and minerals and supplements.
People really love their pets. They want to take care of their pets like they do their family, and it really is a global phenomenon. That's why we recently entered the China market with Blue Buffalo. That's why we bought Edgar & Cooper recently in Europe, because we see the same kinds of trends that have played out here in the U.S. playing out all over the world.
DOJ or other authorities
Could face bigger challenges next.
It was going to keep bringing World Cup. This is a 3
as the economic picture
covering the intersections of Hollywood, Silicon Valley, and beyond.
From the heart of where innovation, money, and power collide in Silicon Valley and beyond, this is Bloomberg Technology with Caroline Hyde and Ed Ludlow.
Live from San Francisco, this is Bloomberg Technology. Coming up, full markets coverage ahead as stocks push higher amid fading recession fears. Plus, Warner Brothers plunges after a $9.1
So the US to sell $70 billion of 6-month bills on August 12th to settle on August 15th, and to sell $76 billion of 3-month bills on August 12th to settle on August 15th.
Let's get right to financial markets, and I'm looking at the NASDAQ 100 on a 4-day basis. It's interesting what's happening in the long run. That's actually Warner Brothers Discovery. So let's go there then. That's a nice story for the day. We're down 9.3%, 9.4%. Look, the story is really clear. $9.1 billion write-down on the legacy TV networks. And the issue with that, or the story with that, is traditional linear TV is not valued as it was when Warner Brothers merged with Discovery, because everyone's gone to streaming. Let's bring in Bloomberg's Hannah Miller, who's been covering the story. And Hannah, it's a big number, it's overshadowed earnings, and things aren't going particularly well. Give me the specifics of the write-down and the reasons behind it.
Yeah, so basically what CEO David Zaslav discussed on the earnings call was that things have drastically changed in the media landscape. Valuations are different, market conditions are different, and this is a more realistic value for their traditional TV networks. And this is a signal to other major media companies to maybe take a look at their own traditional TV holdings and see if they too are overvalued.
I want to really focus on the technology story within it, which I think is everyone went to streaming, and so they were left with properties that just weren't worth what they were at the time. The other issue for Warner Brothers Discovery, of course, Hannah, as we're now down 11% in the session, is what happened with sports rights and NBA. That was a point of discussion. Just update us on what's going on.
Yeah, so what happened with Warner Brothers was that they missed out on a $76 billion deal to get media rights for NBA games starting for the 2025 to 2026 season. They are now suing the NBA, alleging breach of contract. That lawsuit was mentioned briefly during the call, with Zaslav saying that they are confident in their position and it's in the hands of lawyers right now.
Bloomberg's Hannah Miller. Really interesting story, big market move. Thank you for keeping us up to date on it. Now let's get back to financial markets and bring in Sarah Ketterer, Causeway CEO, fundamental portfolio manager, about $49 billion of assets under management. And we're trying to work out in aggregate what's going on. The NASDAQ 100's been an interesting index to track this week. The sort of anxiety of Monday faded. On a weekly basis, we're still soft at 0.8%. You've got concerns about growth. Then we got some economic data this morning that makes us feel that maybe recession risks are fading and we have a clearer picture on the Fed. When you woke up this morning, Sarah, what was your picture of financial markets?
Well, Ed, it was about the same as it was yesterday, which is reasonably optimistic. And that's a function of, again, so much liquidity added to the U.S. and global economies during and after the pandemic. And much of this is still working through the system. But we have still a very strong consumer in the U.S. It's labor's holding up, wages are holding up. There isn't a reason to panic, even though markets do that from time to time. So we're looking forward to some good earnings from our companies. And for those, for example, in technology where they depend on industrial production, to be well placed.
Thank you for bringing it back to technology. This is Bloomberg Technology after all. I mean, it's interesting you go to earnings. The story was really clear from the hyperscalers in particular, right? The commitment to capital expenditures for AI infrastructure. Maybe in Microsoft's case, you learn the lesson that you just don't miss street estimates in this environment. How selective are you being within that group of hyperscalers or other names that we're so focused on around the AI story?
Well, the AI story is like, and this has been well encapsulated on our website by our portfolio manager for telecommunications, media, and technology, Brian Cho, and that's that there are 3 cycles. And this first one, building, is all about the basic building blocks, meaning semiconductors. And you certainly saw that in the NVIDIA boom. But the memory semiconductor stocks have had a big run too, as they should. They've had a pullback. They're very interesting. And then to your point about the hyperscalers, they're absolutely critical in the next phase, which is delivery. So we need them to build out the cloud infrastructure. And they're also, this is true of the ones that we as value investors prefer, like Alphabet and Meta, they're benefiting from their use of AI as they get more customer engagement. And a hyperscaler like Alphabet, not only do they have tremendous, they can look forward to in phase 3, the deployment, getting enterprises on cloud. Enterprise must have massive cloud access because they have so much compute needs with their data.
Monday was a global market event in the sense that it started in the Asian session, went to Europe and then to the United States. But it also shone a light on Taiwan and Korea, those markets. And when I was looking at your holding, Samsung really jumps out. You have a particularly strong view on Samsung. Explain the thesis there and where it sits in your holdings.
Well, you're correct. And Samsung is one of our, in both our international and global fund, one of our largest holdings. And the reason why is that Samsung trades at very reasonable multiples. It's trading somewhere around book value. We think it get to 1.5 times book. But they're a major player in memory semiconductors, and the need for memory as AI compute expands goes up multifold. So memory demand rising inexorably, which is great for Samsung in DRAM. They compete with SK Hynix and Micron, and Samsung's on the cusp, we think, of a major breakthrough in high bandwidth memory. So they will be able to provide the more advanced memory chips. And all of this emphasis on high bandwidth puts some pressure on regular DRAM, so there's some shortages. We like to see this. So the supply-demand balance is very much in favor of less supply and more demand, good for pricing. So Samsung's well placed there. Plus, in this phase 3 of delivery, they've got, or in phase 2 in deployment, there they are with mobile phones that'll be AI enabled. So those Galaxy phones should fly off the shelf. They have other consumer electronics. They're in foundry and display. Like Samsung has it all.
It's really interesting to hear you outline that. We've done quite a lot on the show about high bandwidth memory, and that if there's going to be this ramp and expansion of AI accelerator driven growth, you have to have the corresponding high bandwidth memory. But we've not discussed it as much with the investor base. Sticking with chips, you also are interested in some of the more cyclical areas, automotive, industrial. I look at some of the names that are outside the United States, Infineon, Renesas over in Japan. Why is it that you like that area?
Well, automotive, maybe there's been a slowing of auto sales, but the SAR doesn't matter so much. It's the content that matters, chip content. And these automotive-related semiconductors, and Samsung and Renesas, Samsung German, Renesas Japan, are experts in that area. So we are expecting them to see, again, content growth overwhelm or be more important than overall auto sales, barring a recession. And we're not expecting one anytime soon. But they're also very strong in industrial chips, and to see that in industrial automation. And then think about data centers and the need for power regulation. They're both really well placed there. And those stocks have fallen some 30+% over the last 1 month in the case of Renesas. So the value is there as well. So you get the undervaluation and the growth upside. It's a great combination.
Sarah Ketterer of Causeway, it's really good to have you here on Bloomberg Technology. Thank you for joining us and that focus on chips in particular. Okay, coming up on the show, we're going to be joined by the Nextdoor CEO, Nirav Tolia, on the company's earnings, but also this overhaul of Nextdoor, the social network. Next. That's next. Watching shares of Bumble. Have you seen this? Dating is over. The stock is down the most on record. A really severe cut to its outlook. There are some specific or idiosyncratic factors relating to Bumble and its properties within that, but it's a pretty grim look for the dating environment or app-based dating. You look at the stock year-to-date down more than 60%. It's a name that we'll continue to track. This is Bloomberg Technology.
I'm Alex Rodriguez. I'm a former New York Yankee and played professional baseball for over 20 years. Almost that entire time, I was thinking about business.
And I'm Jason Kelly. I've been a business journalist at Bloomberg for more than 2 decades. And across my career, I've covered everything from the Olympics to Wall Street.
From Bloomberg, this is The Deal. Each week, you'll hear us in conversation with business icons.
This show will explore deal-making across sports, media, and entertainment.
This is very fancy for a podcast.
If I knew what it was going to be, I'd have put everything I had into it.
I get asked more about our relationship than I do my wife. You know what I'm saying?
This is a show where we talk with big-time athletes and executives about the wins, the losses, and lessons learned along the way.
This show is called The Deal.
The Deal?
The Deal. The Deal. That deal. The Deal.
Huge deal.
Who dug this up? What are y'all's in trouble?
Good morning. This is Bloomberg Surveillance.
Welcome back to the opening trade.
This is Bloomberg Technology.
This is the Asia trade.
You're watching the close.
Welcome to Balance of Power.
This is Bloomberg.
Okay, Nextdoor's second quarter revenue beat analyst estimates, and the company projected stronger than expected sales growth, pointing to improvements in the company's ad technology as a key driver of sales. And its CEO announced plans for a, quote, complete transformation of Nextdoor's core social network. Delighted to say that the CEO, Nirav Talia, is here with us on set in San Francisco. This is interesting. Let's go through the financial stuff, and then we'll get into the platform itself. It's kind of high single digits growth on the user base side, and then you talked a lot about where the ad growth is, but just the factors behind both pieces of growth.
Sure.
Why is that happening?
Yeah, thank you for having me, by the way. It's great to be here with you, Ed. And let me just go through the numbers very quickly, because we had a very solid and productive quarter. So on the revenue side, we grew 11% year over year. So the first time in a few quarters that we're returning to double-digit growth that we feel really good about. On the user side, over 45 million weekly active users. That represents 8% year-over-year growth. And then on the bottom line, a loss of $6 million, which represents 23 points of adjusted EBITDA margin improvement. So on all three of those vectors, we feel very good about our performance in Q2. And we also announced that we raised guidance for the rest of the year. So solid execution, and we're looking towards the future now for the real potential of the company.
So let's define complete transformation. You know, there's been change at Nextdoor, a change with you.
A complete transformation of leadership, yes.
Yeah, complete transformation of leadership and a return. But what is it that you think that the actual platform, we'll get to advertising, the actual platform needs to be different or do differently?
Nextdoor has an amazing opportunity. We want to be the essential neighborhood network because we think local is so core to everyone's life. It's so important that we have rich local lives. And that is the opportunity for Nextdoor as a consumer internet company. But our potential is not reflected today in the quality of our product. So when we talk about complete transformation, we're talking about making the product so good that every time our users and advertisers visit, they're delighted. We have an extremely high bar, very high expectations, and so it seems a little over the top to say complete transformation, but we're setting our sights extremely high because we think we can reach that potential.
There will be loads of people watching the program, Bloomberg Technology audience, who might be on Nextdoor. My wife and I bought our first home in March of this year.
Over 90 million verified neighbors.
But that's my point, that we were new to a specific neighborhood and we wanted to learn about what was going on. That makes sense to go to Nextdoor. But I still look at scale, you know, compared to other social media platforms, quite small. How do you take it to another order of magnitude greater, bring in people for the first time?
It's a great question. So Nextdoor's been around for 14 years. And as I mentioned, almost 95 million verified neighbors in 11 countries around the world. So we have some good scale. Primarily, Nextdoor has been known for utility. So we call ourselves a social media product, but it's really about solving your everyday problems around local. You have a home. It's one of your most important financial assets, and you want to protect that. You want to make sure that you feel safe. You want to make sure that you're happy at home. And so Nextdoor primarily has been used around things like, I need a babysitter. I need a plumber. I want to make sure that my home is kept up to date. I want to feel safe in a crisis, whether it's some natural disaster or whether there's a spate of crime. I've lost a pet. These are really important use cases that people rely on Nextdoor for every single day. But we typically we talk about weekly active users. Now, the other social media services that you're talking about, they typically talk about daily active users. So the question for us is, what can we do to ensure that we are delivering value to our users on a daily basis? Not just lost pets and service providers and times of crisis, which are absolutely indispensable, and Nextdoor can be a lifeline, but on a daily basis, how can we make your local life better? That's where our target is.
The other part of the story being investment in ad technology, sort of improving the value against that user base. Nirav Talia, Nextdoor CEO and co-founder, thank you so much. Let's stick with earnings. Retail trading darling Robinhood extended its growth into the second quarter despite a drop-off in crypto activity. The company reporting $5 billion in net new deposits as it expands its product pipeline. Robinhood co-founder and CEO Vlad Tenev joined Bloomberg Open Interest earlier this morning. Listen to this.
We shared in the earnings call that July volumes were about 20% higher than what we reported across June. August has continued very much the same. $1 billion in net deposits in the first week. About $500 million of that came this Monday. And the overnight session for 24-hour market on Sunday night was about 3x a typical day. So 24-hour markets have just been ripping, and customers tend to be buying the dip. They're more buyers than sellers, which we think is a really good sign for the health of the retail market.
We saw on Monday morning, Vlad, as the markets kind of tanked and there was a lot of fear out there. Some of the your more traditional competitors have problems with logins, and obviously that makes customers very angry, especially if they want to get in there and buy the dip when it's at 5% and could lose opportunity any minute that goes by. How did your technology hold up during those shutdowns at other platforms?
Our technology is strong. You know, we've made a lot of investments. We were fortunate not to have any issues of a significant nature when all of the competitors were down. And a lot of customers were actually looking to Robinhood. And we've had challenges in the past, no doubt about that, but that's hardened the company, hardened the infrastructure. And now when we see high volumes, we're ready for it. So we were happy to see customers moving to Robinhood and kind of pointing to us as one of the most reliable platforms during this recent bout of volatility.
That was Robinhood CEO Vlad Tenev. Now, coming up on the show, Joe Ben-Bevitt, CEO of Joby, joins us to discuss eVTOL expansion and that company's earnings. That conversation coming up next. This is Bloomberg Technology.
Lots happening on Wall Street.
I couldn't have been more wrong.
It's going to stay volatile for a while longer.
It's a bifurcated market.
Need to catch up?
This is Bloomberg Wall Street Week. I'm David Weston.
We've got the information and insight.
Year over year, you could start to see some cracks.
It might be overhyped short term, but it's underhyped long term.
From businesses most influential and instrumental.
A lot of the doom and gloom has been somewhat overblown.
If you're not living near the edge, you're taking up too much space.
Bloomberg Wall Street Week, live Friday with replays all weekend on Bloomberg Television and Radio.
The Fed bid for 4-week bills totaled $293.2 million. Which brings us less than 10 minutes away now to the bottom of the hour, where we see the US selling $95 billion in 4-week bills. Prior high yield was 5.285%, with a prior bid cover of 2.87.
Time for talking tech, and first up, defense tech startup Anduril has raised $1.5 billion in a new funding round, valuing the company at $14 billion. Anduril says it plans to spend hundreds of millions of dollars on a new facility to ramp up manufacturing of rockets, underwater vehicles, and other autonomous weapons. Plus, Microsoft and Palantir are set to combine their government cloud computing and AI tools in an effort to sell software to US defense and intelligence agencies. As part of the agreement, Palantir will integrate its products with Microsoft's Azure cloud services and allows OpenAI implementation into into tools that are meant for confidential use. And Meta sold $10.5 billion of investment-grade bonds, boosting the company's cash pile as it spends heavily on AI. According to Bloomberg data, the deal is the company's largest ever debt sale to date. Meta made its bond debut back in 2022, selling $10 billion. All right, let's stick with earnings. Joby reported after the closing bell on Wednesday. There's some important news about Dubai. I'm delighted to bring in Joe Ben-Bevitt, CEO of Joby. And I just want to get right to that Dubai project. You and I have spoken so many times over the years where I ask you, when are we going to see a Joby fly and where? And it seems like you're closer to answering that.
Absolutely. First, Ed, thank you so much for inviting me. I'm here in our flight test facility in Marina, California. It's amazing to be with you on Dubai. We're so excited. We're sprinting to across the line where we've got incredible support, a 6-year exclusive in Dubai to provide air taxi service. And our target is to launch that service by the end of next year. Really, really pleased with the progress that we're making. And again, thank you for having us today.
Joe Ben, you know, I'm really interested in the business model long term. You know that I also take a microscope to your financials. Your losses and sort of cash burn are at pace with the street's expectations. Just explain the timeline of how that changes and when you start becoming meaningfully revenue generating.
Yeah, so thank you. We are executing exactly to plan, and we have very rigorous financial discipline. We are methodically ramping our production. We just announced that we had rolled the 3rd aircraft off our pilot manufacturing line, and we have the 4th and 5th coming along quickly behind. We're going to have 4 aircraft in our flight test program as we're driving certification, and we've completed the first 3 stages of certification with the FAA, and we're now working on the 4th stage, where we've announced that we're 37% complete there. So as we move into commercialization, we can begin to generate meaningful revenues and reduce the cash burn on the company. So very, very pleased with progress.
Joe Ben, is America moving fast enough on eVTOL? America?
Absolutely. We have incredible bipartisan support in Washington, D.C. And this last year, we were invited to New York, where we were able to fly our air taxi in New York City from the Wall Street.
It's been 5 minutes time now at the bottom of the hour.
Dream come true for me.
With the US selling at $95 billion in 4-week bills. The prior high yield was 5.285%, with a prior bid cover of 2.87.
Aircraft being able to fly in a city like New York is really exciting. We have an incredible partnership with Delta Airlines, and we're working to build with the Port Authority to build best-in-class infrastructure at New York and LaGuardia, or New York JFK and LaGuardia.
So, Joe Ben, when does that happen? The ability to take one of your eVTOL from Wall Street to an airport in the real world?
It's coming very soon. Again, we're making great progress with the Port Authority on the permitting of those takeoff and landing locations connected to the Delta hub, so you can get off your Delta flight and onto a Joby flight very seamlessly, and you can be in a matter of minutes into Manhattan. So we think this is a really exciting opportunity, and it's coming very, very soon. Really paced by the speed at which we can get that infrastructure built.
Joe Ben-Bevitt, CEO of Joby. Great to have you back here on Bloomberg Technology. Thank you. Now, coming up on the show, we are joined by Andrew Bialecki, the co-founder and CEO of Klaviyo, to discuss that company's earnings, which were also released after the closing bell on Wednesday. This is Bloomberg Technology.
What prompted you to want to get out of just doing surgery to be an administrator and a hospital leader?
Watching others who did it well. I had a dean who recruited me from Birmingham, Alabama to Minneapolis, Minnesota, which is a big jump to convince me to move my family. I realized over time that my training as a surgeon brought a set of credible things to the table. One, if surgeons have a measure of emotional intelligence, not much of our training reinforces that. It reinforces skill, not necessarily emotional intelligence. But if a surgeon has some self-awareness and emotional intelligence, what they bring to the table of leadership are three fundamental things. Number one, they do everything in teams. Their operations, their patients they see is all team focused. Number two, they value process, but they hold themselves very much accountable to execution. They understand that it's good to explore a patient, but what really matters is that you take the tumor out. And then number three, they make difficult decisions on incomplete.
So we're shortly expecting the results of the US 4-week bill auction.
That I could bring to the table as a leader if I had a sort of a passion for working with people and had some sense of self-awareness.
Bloomberg Surveillance covers the latest in global markets and the political events that influence your world. Join Jonathan Farrell, Lisa Abramowitz, and Anne-Marie Hordern only on Bloomberg. Context changes everything.
Welcome back to Bloomberg Technology. Ed Ludlow in San Francisco. I want to show you a chart that maybe you didn't know you needed. This shows normalized performance going back to 1999 with NVIDIA going in one direction in this session and Monster Beverage Corp going in the other direction. The point being that NVIDIA has once again overtaken Monster as the best performing stock on the S&P 500 this century, which is an important data point. But I'd also say this, courtesy of Dan Curtis, our terminal data editor, that think about Jensen Huang, the CEO of NVIDIA. He has a 3.5% stake in NVIDIA. He could buy all of Monster Beverage Corp and every single share and still have enough money left over to go out and buy another chip company, or even if he wanted Lululemon. Some size and scope of the scale of NVIDIA, not just its performance on a percentage basis, but how it's overtaken some of the wildest stock stories we've seen, which one of them was, until this session, Monster Beverage. Let's turn back to the earnings story. Klaviyo, the software company, reported earnings after the closing bell on Wednesday. Co-founder and CEO Andrew Bialecki joins us now for more. And my goodness, Andrew, look at your stock, up 27.25%, 35% growth on pretty decent customer growth. Where would you like to start? This is the best day for your stock since you went public.
Yeah, well, thanks for having us, and thanks to Klaviyos around the world for a great quarter, really delivering for our customers and partners. You know, I'm really excited about the 150,000 plus now businesses that we serve. We had a bunch of great brands in the quarter, Barstool Sports, Herschel Supply Company, and we're really, you know, what makes Klaviyo special is we're helping businesses take control of their relationships with consumers and then drive revenue. And I think when, you know, the economic environment is a little uncertain, software like Klaviyo becomes a must-have.
So on it being a must-have, it's also interesting to look at
high yield 5.285%, 5.285% with a bid cover of 2.77, 2.77.
Like Samsonite need Klaviyo?
The US sells $95 billion, holding 24.47% of bids at higher.
Businesses data together. So take Samsonite, you know, one of the largest luggage travel companies in the world. We help them organize that data and then deliver personalized experiences across a variety of channels, from email to SMS to mobile messaging. And because of how well Klaviyo connects with the other systems inside of an organization, and a lot of the advanced capabilities, including a lot of the AI features we've released in the last few months, Klaviyo AI, you know, those two factors are why businesses are choosing to work with us, because we're a revenue engine.
I like to look at geography as well, and it's really interesting that the EMEA region continues to kind of be a driver for you. Why? Why is there such engagement in Europe and the Middle East and Africa?
Yeah, so over the last few years, we're executing our strategy really well. We've done a lot of expansion into Europe, and with that, we launched our products and a lot of our documentation. We added, we went beyond English into French. We formally launched in the French region. And now we've established that playbook. It happened, we launched in Q2. We really like the growth we're seeing. And now we're going to take that same playbook and use it across the rest of Europe, and then extend that around the rest of the globe, into Asia and other parts of the Americas. And what we've known for a long time is there are businesses using Klaviyo in over 80 countries. But we're trying to build a product experience that's really native to them. And so doing things like expanding our SMS capabilities. We've more than doubled the number of countries where we now support text messaging. We have plans to grow that. So really excited about the growth we're seeing internationally and in Europe in particular.
Andrew, you're a Boston-based company with fewer than 2,000 employees. What's the talent story for you right now, particularly in terms of AI and headcount? Many companies are actually cutting certain areas to reallocate to areas of growth like AI. What's your strategy?
Well, so from a technology standpoint, we are very much believers in using artificial intelligence both for our customers and for us. So we've seen good productivity gains from using AI across Klaviyo, and we invest some of our own engineering resources in doing that. But in terms of our headcount strategy, we're a global business. So we look for the best talent around the world. I know we started in Boston, but we have offices now in Denver, in San Francisco, in London, and Sydney, and we're planning to open more over the next few quarters. So we look for folks that are really ambitious. We say high slope, they want to be learners. And wherever that talent is, we want them to come join forces with us.
Andrew Bialecki, CEO of Klaviyo, and again, Klaviyo up more than 27%, best day since going public in September. Thank you. All right, let's talk a little bit more about Europe and tech. Siemens posted weak sales and a drop in new orders for its factory automation business, though it did record a jump in software demand in the third quarter. Bloomberg's Guy Johnson asked Siemens CEO Roland Busch where the strength to the company's top and bottom line is coming from. Have a listen to this.
It was driven basically by another very strong quarter of smart infrastructure. Our electrical business grew by 21%, but we also had a very strong software business. The underlying the software business was very strong, but we also had a couple of wins, large wins. They don't repeat in that size again, but this helped quite a bit also in drive our top line and bottom line as well.
So some fairly lumpy numbers this time around, which probably aren't repeatable. You have those stuck to your guidance for the full year. Given what you've just said, given what you see in the world at the moment, how predictable is the business though right now?
Well, yes, we confirm our guidance, our full year outlook for the growth. We will end up at the lower end though. And we also confirm on our EPS guidance. The same holds true for our businesses. Regarding DI, we see their profitability for the full year on the lower end, for the SI on the upper end. So coming to the predictability, it's really the biggest element which we have here is that over the last 3 years, the automation business was growing tremendously fast. And this ended up in quite a bit of stocking in our distribution channels. And this stocking effect has to go down. We have to destock on the one side and the market has to pick up on the other. This is the unpredictability. How fast does that go? When will the market pick up? We see a certain light in chemical industry, also in China, which is a leading indicator, but this is not really the momentum we need in order to really grow there. Therefore, we still have a muted market for automation. It is a temporary effect, structural. We believe this market keeps on going because there's a demand for higher automation and digitalization in the whole industry.
That was Siemens CEO Roland Busch. Now, coming up on Bloomberg Technology, we're joined by Ezene Okoro, former NASA executive, to discuss the plans that are being hatched between NASA and SpaceX to return the astronauts that have been stuck in orbit after complications on that Starliner test mission. Really interesting conversation ahead. This is Bloomberg Technology.
covers earnings.
I know it's like your Super Bowl, right?
I can't wait. It's like opening presents in the morning.
All right, it will be exciting.
Nobody covers earnings like Bloomberg. Welcome to the world of decentralized finance.
We thought we'd take a look at Bitcoin versus the S&P 500.
Bloomberg's covering all things crypto, the people.
A tectonic shift emanating from Washington.
It's really a tale of two cities in crypto.
Crypto shouldn't be partisan.
The transactions.
Really a record-breaking moment.
Crypto VC is back.
And the technology.
It's really the beginning of a global on-chain economy.
And if America doesn't embrace it, we're going to be left behind.
Bloomberg Crypto, Tuesdays, only on Bloomberg. The top names in business are on Bloomberg.
The challenge for us now is not very much on the product, it's on the ramp-up of the production system.
We turned the industry down to almost zero during the pandemic. And what we're trying to do now is turn it all the way back on. And that's hard. We lost not only people during the pandemic, we lost a tremendous amount of experience.
A lot of skilled people have left the industry. We have to hire new people. The supply chain has to hire new resources and train the people, educate them.
And because those roles are filled now not by a 58-year-old, but perhaps by a 28-year-old, there's a lot we have to do in terms of not only adding capacity, but capability to meet the ramp that we all are embarked upon.
We have thousands of suppliers, and when you have just a couple of them, few of them that are late on the ramp-up, well, that's slowing down everybody, and that's what we've been facing earlier this year.
Nobody covers business like Bloomberg. Context changes everything.
People ask me all the time, what is the key to being a really good investor? And I tell them it's to surround yourself with and work with the best investors you can find. On Bloomberg Wealth, I'm going to take you to meet the greatest investors in the world, the people that I would like to have managing my money. If I had invested with you, which I wish I had, what kind of rate of return would I have had over that 10-year period of time?
Over 100% a year on average. On average.
100% a year, that's pretty unusual.
Okay, so we have an update on the Boeing Starliner test mission. NASA is working with Elon Musk's SpaceX on a plan to return the two astronauts back to Earth in February 2025 after technical complications caused them to be stuck in orbit for about 2 months on the International Space Station. NASA is going to make a final decision in mid-August on whether to deploy this backup plan. I want to bring in an expert who knows the inner workings of the space agency, Ezene Ozo-Okoro, former NASA executive, White House Assistant Director for Space Policy, and joins us now. And Ezene, the extension of that plan is that there is a crew mission going up in September with SpaceX, and then maybe the two astronauts currently on ISS could hitch a ride back February of 2025, which seems a really long time away. Just your reaction to where we are right now, that a backup plan's needed.
You know, the great thing about this backup plan is that we have it. Because if we didn't, then I think that there would be, especially when you look at the global geopolitical environment, I think that we would have a much harder time if we didn't have this option. So it's great that we have this option. I think that's the first and most important thing. And it's important that America has two options to ferry humans safely to space. What I do see also is NASA, Boeing, and SpaceX prioritizing human safety first, as they should. So that's equally important.
There is reporting out there about NASA officials or teams within NASA sort of not being 100% aligned on what the best plan was to do. As best you can, just help our audience understand how NASA works. You know, now in this era of space, we have commercial partners, you know, leading the activity, but NASA still has a central role.
Absolutely. Well, the astronauts are NASA employees. They are NASA astronauts, and these companies have contracts with NASA. So NASA has a responsibility to review and authorize decisions, because at the end of the day, the buck stops with them. And so if you step back a few weeks ago, there was a test that was consulted, and there are about 26 of the 27 jets that were fired. And the goal was to ensure that these thrusters were working properly and were meeting performance requirements. And now the team is going back and analyzing that data. So there are two reasons that could really go either way. One could say, well, we've analyzed the data and we think that this Boeing aircraft can come back with the astronauts or without the astronauts. And then there is another reasoning, which is that SpaceX is really the way to go. So either way, what you see within the agency is that there are people, and this is good when you have disagreement, and now they have a bit more time given the SpaceX mission that's going up in September to analyze the data further. And then they will make a decision based on the performance of the thrusters, the performance of this helium leak that they are monitoring. And they will make a call mid-August based on all the information they have available. And they will obviously make a decision that prioritizes human safety first, that prioritizes a safe landing, and that also builds confidence in the system.
Well, that's what I want to ask about, Esne, because we just showed the chart of Boeing's spending on the Starliner project, and it's been well reported, the cost overruns, the delays. How, to your mind, do NASA and Boeing as partners now go back out and bring public confidence in the program going forward?
When it works. And that's the point we're trying to get to, a point where it will work and there is confidence that's built in the system so that it can ferry humans. And then the public will have confidence in the system. But we have to get it to work first, and which is why the analysis of these firing tests that were conducted recently have to be completed. Okay. But NASA will not make a decision until they have conducted a thorough analysis and believe that the data provided moves them in one direction or another.
Esne, also a senior fellow at the Harvard Belfer Center. The other big piece of talk right now in the industry is China and its satellite constellation ambitions. Might they do something similar to Starlink? And if they were to, how does that work? The competition for space, the proximity of a US-run constellation to a Chinese constellation. Your thoughts on that, Esne?
What is great about this question and this scenario is that we are already living it. Before the SpaceX constellation went up, we had smaller constellations, but we still had constellations in space. And then a mega constellation was put up by a US commercial company, which gave us a leverage to understand and to plan for what it would look like if a strategic competitor, in this case, a nation like China, put up constellations of their own. So through the constellation that we have up there put up by SpaceX, we have been able to have discussions and even remediations to radio astronomy issues, to night sky issues based on what the satellites can see or what they prevent us from seeing from here on Earth. We have had conversations about orbital debris, which is the amount of junk that is left in space. And we've had conversations about space sustainability and figured out policy and engineering solutions to all of these issues. And so I think that we are actually in a better place as the United States to prepare the best we can for this constellation, because we have an example up there today. If we didn't, then I think we would be in a completely different place. However, that doesn't mean that we can plan entirely, as you say, for what will happen.
Ezene Uzuokoro, it's great to have you back on Bloomberg Technology. Thank you, former NASA executive, and as I said, currently a fellow at the Harvard Belfer Center. Coming up on the show, Apple is working on its smallest desktop computer yet. We have that Bloomberg reporting coming up next. This is Bloomberg Technology.
The more that you learn about this case, the more it reads like a Hollywood script. The nature of the killing, the execution, the just brutality of it.
It wasn't in the psyche of people that they could be looted because they are considered so sacred.
And we did it the way you do every single investigation. How do you eat an elephant? One bite at a time.
It jumped off the page at me that you could see that there was a Ponzi scheme taking place.
I started hearing mafia, mafia, mafia.
Il sistema è perfetto. Sono gli uomini che spesso non lo sono.
These are the holders of truth and justice. They cannot be possibly be doing this. But then they are. They are. And the evidence is there. It's overwhelming.
Bloomberg covers the world with unmatched reach and resources. From more than 120 countries, the moment news breaks, 24 hours a day. Bloomberg, context changes everything.
Morning, this is Bloomberg Daybreak Europe. I'm Tom McKenzie in London. These are the stories that set your agenda.
Taking you from the U.S. market's close to the overnight session in Asia. We'll walk you through what you need to know to kickstart the European trading day. Live from our European headquarters, we bring you the day's top market-moving stories, unmatched expert analysis, and on-the-ground reporting from across the continent. Tune in every weekday at 6 a.m. London time, only on Bloomberg Television.
Apple's planning a new version of the Mac Mini that will be its smallest desktop computer yet. This is part of a broader overhaul of the Mac line with AI-focused chips, bringing in Bloomberg's Mark Gurman, who of course broke the story. And the focus here is M4 and bringing M4 in. Just explain the basic details of what you've reported.
Yeah, so the Mac Mini last revamped in 2010 under Steve Jobs, now about 15 years later, is getting another redesign. That's a really big delta in between new designs. And this is essentially, because of these new processors, an iPad Pro in a box. They're able to shrink this down into something that is about the size of an Apple TV set-top box, so something probably smaller than 4x4 inches. This is going to be a very popular computer. This is probably going to be marketed as the smallest desktop computer ever made, not only by Apple, but by any computer company. And this is going to have a supremely powerful chip. The M4 Pro chip is going to have even better graphics horsepower, even better AI processing, even better CPU performance than the M4 and the new iPad Pro. So this is going to be very exciting to Mac fans and coming later this year.
The ideas outlined to us by our Bloomberg sources are really interesting. What I'm trying to understand, and Apple didn't comment on the story, of course, is where the Mac Mini or Mac kind of sits within the lineup of Apple products. Who's the buyer here, Mark?
Yeah, this Mac Mini is going to be for people who want to hook up a computer to their TV. You know, there's some people who connect Macs to their TVs in their living rooms or in their office. That's going to be a big use case. But also some someone who has a desktop at home and wants to do laptop-esque work, so the same amount of work you would do on a desktop, so web browsing, email, photo editing, video editing, you'll be able to do that with this machine and hook it up to any monitor you have. It comes standalone, no keyboard, no mouse, no trackpad in the box, so this is going to be a pretty modular machine.
Bloomberg's Mark Gurman with another exclusive piece of reporting. Thank you. Okay. For years, the likes of Google and OpenAI have been racing to build ever bigger and costlier AI models using a tremendous amount of online data. Think chatbots like ChatGPT, which can handle a wide range of complex queries. But some startups are now betting on a different strategy: small language models, automating a more limited set of day-to-day corporate tasks without requiring as much data. Bloomberg's Rachel Metz has been writing about exactly this. So you've heard of the large language model. Now is the time of the small language model. What is a small language model?
Small language model is kind of what it sounds like, right? A large language model is trained on a ton of data, often gathered from all over the internet and used for a range of tasks. ChatGPT, people might use it to write Shakespearean sonnets about ice cream, or they might use it to summarize meeting notes, like a very diverse range of tasks that are related to human language. These small models are trained on a much smaller, more refined set of data. And the idea is that for a lot of companies, and let's be clear, companies are really the customers for a lot of these large language models. They're the ones with lots of money, right? And AI companies want them to pay for them. They're going to need them for specific things. And maybe one thing that they are really good at, something related to coding, perhaps, a chatbot that's very focused on tax prep questions, for instance. So the hope by a lot of these companies is that these models will be more energy efficient, and they will be more focused, and they will basically just be more helpful in general.
Who is leading the way in small language models? Kind of seems like an odd question, but every time a very cutting-edge large language model comes out, we cover it as news on the show. Do we have a sense of who's focused on that area?
Yeah. So we have actually a pretty big range of companies that are involved in this. There are a couple startups that are very focused on this. I spoke with one called RC AI. They are totally focused on customizing open source small models and they customize them for customers, including a company called Guild, which used it to make a career coaching chatbot so they could scale up more than they could do with their human career coaches. Sakana AI is a company that's in Japan that's working on this. And then also the big tech companies have increasingly been releasing these small versions of their larger flagship models, like OpenAI recently released Oro Mini.
Bloomberg's Rachel Metz on small language models, a new term for daily use here on the show. That does it for this edition of Bloomberg Technology. Lots to recap. Don't forget to check out our podcast. You know where to find it on the Bloomberg platforms, the terminal, as well as online at Apple, Spotify, and iHeart. We'll show you some beautiful pictures in just a moment, but for now, this is Bloomberg Technology.
Fixed income fix. Watch Bloomberg Real Yield every Friday right here on Bloomberg. Context changes everything.
So we are shortly expecting the Freddie Mac mortgage rate numbers.
And I'm Danny Berger.
delivers the market news, data, and analysis you need live every weekday at 5 a.m. Eastern. Bloomberg. Context changes everything.
This is Bloomberg News Now.
News when you want it at the touch of a button.
Another volatile day on Wall Street. We're seeing big moves.
All eyes on Capitol Hill as Democrats and Republicans.
Today's job numbers casting doubt on the Fed's next move. Inflation remains front and center. And that's news when you want it with Bloomberg News Now. Get it 24/7 on the Bloomberg Business app, Bloomberg.com, and anywhere you get your podcasts.
Bloomberg News Now. Context changes everything.
DOJ or other authorities.
Could face bigger challenges next.
Fed was going to keep rating World Cup. This is a three.
As the economic picture
Covering the intersection.
From the beating heart of global finance, economics, and politics, and wherever newsmakers are moving markets, Bloomberg brings you conversations that allow for deep discussions and important insights. What do you think the future is for inflation? Is this a new normal? Are markets too optimistic? How do you worry about the things that are outside your control? How does the current fighting completely stop? I'm Francine Lacqua, and this is The Pulse, every weekday at 9 a.m. only on Bloomberg.
It's a multi-trillion-dollar industry. We'll show you what's happening in ETFs like no one else. Bloomberg ETF IQ, Monday on Bloomberg.
Welcome to Bloomberg Markets. I'm Manish Krani.
The US 30-year mortgage rates falling to 6.47% for the week. That's the lowest since May of 2023. So 6.47% for the week on the Freddie Mac 30-year mortgage rates. That's down from against 6.73% the week before, at the lowest level now since May 2023.
It's no bleed. Cathie Wood, we know, has been stepping in and buying some of these tech names. Nvidia's up 4.2%, but it is still down 27% from its high. The NASDAQ is still in a correction. Sprues have never quite made it to that correction territory. The NASDAQ is officially in a correction, hence the reason why you see people like Cathie Wood coming in here. The bond auction was shunned yesterday, one could say, on 10s. We're waiting for the 30-year paper results to come a little bit later. Still, the market prices in 100 basis points of cuts. What you've got to ask yourself is whether bonds backing up by 33 bips this week is enough to entice you to pick up a little bit of duration. I take you to the oil market, up 0.8%. Again, we're waiting to see what happens from Iran in their response mechanism to Israel, despite stockpiles shrinking for the 6th week in a row here in the United States of America. That is your cross-asset market wrap. There are some names that are individually moving. Natalia Kanijevic joins us now with the individual movers of the day.
Hi, Manas. So let's take a look at shares of Eli Lilly. They are up today by 7%. The company boosted revenue. Let's start with Bumble while we have a chart, by the way. So this is the worst decline on record. The company's earnings came below expectations. The biggest question for many analysts is, will this revenue model work? Yes, the company did some adjustments. Earlier in April, they upgraded design in order to attract more young users. However, it doesn't look like it's working, and we see that shares are plunging now down by 32%. Let's flip up the board and look at the healthcare movers. We see that Eli Lilly shares are up today on better than expected results, and that's a contrast with Novo Nordisk, which posted worse than expected results a couple of days earlier. And healthcare sector overall is one of the most anticipated in terms of earnings this earnings season. Again, if we look at sales beat across all of the S&P 500 sectors, we see that healthcare is the number one now. And then finally, retail sector, Under Armour shares are up by 19%. The company beat earnings expectations, boosted outlook across the world. It's a little bit mixed picture. So we see that sales in North America, EMEA region, they came above expectations. Growth in Asia is a little bit slow, but some analysts are still very cautious even on North American market. Now let's take a final look on a bigger picture again. And we can see that this chart shows the cost of protection against a 10% drop in the S&P 500, to be more specific, the largest ETF that tracks the S&P 500, versus the cost of options that bet on a rally, 10% rally in the S&P 500. So we now see that this cost of hedging against a 10% decline is now at almost the highest level since 2022, Mana. So it looks like some traders are still very cautious on the market.
Yeah, there's a vulnerability out there, isn't it? Natalia, thank you very much. Natalia Kanijevic there on the markets. A little bit earlier today, I caught up with RBC's Laurie Calvasina about the next moves for these markets.
The fact that we know that there was something flow-driven, something positioning-driven, that almost makes it a little bit better, right, if it's not entirely fundamental, because I think experienced investors who have done this for many decades know you look for, babies that are thrown out with the bathwater in these kinds of situations. You look for opportunities. And I think that is why it's so important to sort of understand where we're going to stabilize. If this thing breaks 10%, it probably means we're going into growth scare territory.
That is the biggest question, not just of the day, but of the week. Let's bring in Decali Trading founder Carly Garner. Bloomberg Intelligence's Abigail Doolittle joins me around the desk. Let's get stuck into this, Carly, because Laurie Calvasino made it very, very clear there's a vulnerability here. You've called this early. Abby and I were chatting about this. You were prescient. You've called a suspicion in this market. We've had a little bit of a relief rally, but there is still a clear vulnerability to these markets. You're a seller of rallies, aren't you?
Yeah, I believe, yes, I'm bearish on rallies. I believe the bounces can be really big. That's the difficult part about bear markets. And I know it's a little presumptuous to say this is a bear market, but I think eventually that's what we end up with, or at least a really deep correction. Things just feel a little bit off. The complacency is really widespread. It's almost like we're drunk on complacency. I mean, we recently had a decent sized pullback and there was panic in the streets. Everyone thought it was some sort of bloodbath. But if you look at a monthly chart, this is really just a drop in the bucket compared to where we've come from. And also, I've been doing this for a very, very long time. And I think today is the first time I've ever witnessed a weekly jobless claims rally.
US stocks extend gains with the S&P 500 up 2%
it's funny you're
now.
Saying that, Carly, and great to have you here with us. I was thinking the same thing. I actually looked twice at the eco data on the Bloomberg terminal. I was trying to figure out what was going on behind this narrative. It is really sort of silly. But when I take a look at the charts, and I know that you are a studier and expert on the charts, the question for the S&P 500 and the NASDAQ is going to be whether or not right now we're looking at the quote-unquote V bottom that would take us higher, or if we're looking at a bearish pause, a bear pennant, so basically a pause before the sellers get back together and take us another leg lower. To me, it looks like the latter. It could all come down to the yen. When we spoke a couple of months ago, you were really tying everything together with copper. So copper now down about 25% from its peak. The yen looks like it's about to take another leg lower. What are your thoughts on these two asset classes and how they tie into U.S. stocks?
You're right. So the copper market really hasn't shown any signs of finding a low. I actually think copper probably bottoms somewhere between 380 and 350. So we're getting closer. But historically, even if copper bottoms, that doesn't mean the stock market's done going down. In fact, usually the two markets lag. When copper tops, stocks follow a handful of months later, and on the bottom, it's the same thing. So if we do see copper bottom out or at least stabilize, that's good news for stocks, but it's not going to be immediate. It might mean 2 or 3 months down the road, things might look a little bit better. So with that said, markets repeat themselves over and over, and sometimes it's even big long-term patterns. Like, for example, when I was in the studio a few months ago, I mentioned the yen carry trade and the potential of it unwinding, and that's what we've seen here in the last couple of weeks. This happened in 2007, and the reason I thought this might happen is that it's almost playing out exactly how it did in 2007. And during that time frame, we saw the yen carry trade start to unwind. We had a big initial push, just like we've seen over the last week or two. The stock market fell over. It's very similar to what we've seen. And then everything paused and stabilized, and people thought, well, it's back to business as usual. But eventually, the yen carry trade turned into a stronger yen, perpetually stronger yen, and stocks started getting really, really heavy. And so I think we're in the first or second inning of this correction. I don't think we're over yet. That said, the meltdown really began around roughly around 54.30, somewhere in that ballpark on the futures market. It's very possible we run up and touch touch that trend line, maybe even go a little bit higher as we're running stops. So we can get really, really big bounces. But I think that if you're a portfolio holder and you think you felt a little bit of pain this week, take this bounce as an opportunity to de-risk, because there's no guarantee that we don't get another round of selling. In fact, I think that's probable.
And I think it comes down to the cadence and the timing, because if you look at the risk reward over the next 3 to 5 months, it's going to, in theory, be a lower Federal Reserve, a higher Bank of Japan, 30% probability of another hike from the Bank of Japan, which shouldn't come as much of a surprise the second time around. You know, the train has already left the station. So with that in mind, if we break 5,100 on the S&P 500, let's say the yen reaccelerates. I mean, dollars moved up by 5.5 big figures in the past sort of 48 hours. So to a certain extent, that breathlessness has been removed. But if they begin to relock and reload yen longs, and we break 5,100, what does that do to the S&P 500? Laurie Calvasina says that's a 14 to 19% potential drop. So we're talking about potentially a bear market.
Yeah, and I tend to lean in that direction. When I chart the weekly or monthly stats on the S&P 500, in my opinion, a natural price range would be somewhere between 4,900 and about 4,100. And when I say natural, I'm talking about a natural progression. Markets are built to go higher. That's just how it works, but they're not built to go as far and as fast as what we've seen in this most recent rally. So just a break below 49 puts us into a more comfortable position. There's a weekly trend line that comes in at about 4,700. That's what I'm targeting on the downside. So somewhere between 4,900 and 4,700 would make me feel better. Even as an investor, that's a healthy market. What we've seen on the way up is uncivilized. Uncivilized rallies are followed by uncivilized corrections. So we should expect some good volatility. I will caution, there is a trend line that comes down all the way around 4,000, 4,100. That sounds pretty scary. I don't think that's going to happen, but to be honest, it's not out of the question. So again, de-risking is probably the best game plan here.
And Carly, last time when you joined, if I recall, and you just mentioned 2007 and that we're in early innings, but if I recall last time you joined, it sounded as though you thought we could even go into the 3,000s. Are you taking that off the table? Or one thought that comes to mind to me is the uncivilized rallies. The way I put that is that things go too far, too fast. They go much further and longer than you can think, both to the upside and then to the downside.
Correct. And I would like to point out again that we are extremely complacent here. I've heard a lot more chatter about the market being at a bottom than being at a top. But if you look at a monthly chart, I think there's pretty good argument to be made that maybe we're closer to a top than a bottom. I'm not ruling out the 3,000s. I think it is possible. I don't, with the economic backdrop and everything that we see today, I don't really see it going much below 4,000 at this point, but I could change
Aussie
that,
dollar to the US dollar rises as much as 1% to the highest level in 2 weeks.
Even the mid 4,000s, I think, is something that most portfolios are not prepared for. The reality is, based on the reaction that we saw on Monday, the average person is just not equipped to handle a legitimate bear market. And that scares me a little bit, because once it starts, it might be hard to stop the momentum. So you're right, 3,000s is not out of the question. I'm not counting on it yet, though.
In 15 seconds then, stocks are overvalued, but for you, therefore, you must be a buyer, a very natural buyer of bonds in 15 seconds.
Absolutely. I've been irrationally long treasuries almost my entire portfolio. So that's where I'm positioned. Maybe I'm wrong, but we'll see.
Nothing wrong with a bit of irrationality, or for that matter, a bit of drunken complacency. Dakali Trading founder Carly Garner there, and Bloomberg Intelligence Abigail Doolittle around the desk alongside me. Coming up in the show, a tale of two earnings. The obesity drug competition Novo Nordisk struggles with supply as Eli Lilly pulls ahead in the GLP-1 race. Both stocks are higher on the day. We discuss right here on Bloomberg.
how it has penetrated pretty much all sectors, including music. AI can write music, compose music. How do you see AI changing the landscape in fashion?
Yeah, AI definitely helped. When I did the jewelry, I used the AI, helping me to give some idea. But ultimately, you still have to do a lot with it. They just give you very superficial ideas, and but at the end, you still have to customize it, how to really make it and do that. I do not think that AI and the technology can replace the human mind at this moment. Yeah.
Are you concerned one day we won't be able to differentiate designs by AI and designs by an actual designer?
I don't know. For me, I feel that when the designer doing, it's the spirit, it's the heart that the computer don't have.
It's the world's second largest economy with a growing influence in global affairs. But geopolitical uncertainties, deflationary pressures, and questions about foreign investment linger. Bloomberg, the China Show, brings you the unmatched expertise you need to keep track of breaking news, in-depth market analysis, and the most influential newsmakers in and around China. Bloomberg, the China Show. Weekdays at 9 a.m. Hong Kong time, right here on Bloomberg. Context changes everything.
Bloomberg Markets has just gone 12.14, and the healthcare sector is in focus. Top performing sector as far as the earnings season is concerned. And today, top spot was Eli Lilly. The shares got a boost after they talked up their revenue and profit outlook for the year. Strong demand from Bund. That's their obesity drug. The stock having its best day since.
In crypto, it is noting Bitcoin extend gains up 8.4% now.
Go on the GLP-1s. Good to see you. Why are they having a better day to
and also seeing reports that Apple are to let developers offer products outside of its ecosystem.
It's interesting to compare the two just over the last day. Yesterday, Wegovy and Ozempic missed sales estimates. Today, Zepbound and Mounjaro blew past the sales estimates. So it really comes down to supply. Novo is still really struggling to get a handle on supply of their drugs, while Eli Lilly's investments in boosting capacity are clearly paying off.
How quickly does that supply chain mismatch get? I mean, it takes time to bricks and mortar to build a plant and build the supply chain.
Years,
so that mismatch, does that status quo remain unequal for a period of time, do you think?
We're already actually seeing, because this has been going on for a while, and they're obviously anticipating this massive demand for their drugs. So we are starting to see that Novo's supply is getting better. In the FDA's drug shortage database right now, most of the doses of Wegovy are available now, but it takes time for that to show up in the sales data. And Novo is also dealing with price concessions and rebates given to PBMs. So that's another factor that's sort of dragging the sales down for Novo.
Now, of course, there's another line in the Eli Lilly reading, which is the FDA may act on Zepbound for sleep apnea this year. I mean, this is where you begin to understand the breadth of these GLP-1s. Smoking, obviously weight loss, and now sleep apnea. So I could have cured my sleep apnea, stopped smoking, and not eaten as much when I stopped smoking X number of years ago. This could have been the paradigm shift for me had this been around for me.
It's amazing. I mean, it's interesting to see, one, how many conditions obesity is linked to. There are, it's a risk factor for a lot of other issues like heart disease, sleep apnea, but then there's also all of these indications that drug makers are studying that aren't necessarily related to obesity. So they're looking at Alzheimer's, they're looking at so many other things that they think there might be an independent effect of these drugs beyond just the weight loss effects.
I'll take everything in various sizes. I want to focus in on the big take. Great story today. It's a town not called Malice, it's a town called Bowling in Kentucky. This is a great story, so well done to you and the team. It's 4% of the population in this town has taken Ozempic. And it's the heartland. It's going to be one of the most, perhaps, pervade set of data, I would imagine. 4% of the town, 74,000 in the town on Ozempic. I mean, it's like the town that, scientists dream of.
Yeah, exactly.
Ozempic town.
Right. It was almost like somewhat of a case study for us to go there and see we are hearing from CEOs across the board, food companies, from grocery chains, Walmart, everything, saying that they are seeing an impact on sales or expect to see one because of these drugs. And so we wanted to go to this town and go to a place where there are a lot of people taking these drugs and see what's happening. And we found that, the town is changing a lot, but maybe not in the ways that you would necessarily expect. The restaurants are still full, the gyms are still full, but there is like this side economy that's sort of growing around the Ozempic boom, with medical spas cropping up to offer copycat versions of the drugs. The GNC vitamin store is, making a pretty good business off of selling supplements that help with the side effects of these drugs. So it really is changing sort of the fabric of
so it's not all downside in
right.
terms of, okay, you might eat a few less burgers, you might not have as many fries, but there is an entire ecosystem around this which can generate jobs. But the question I have, and it was interesting sort of reading through it, it was about your insurance company may well allow you to have it at the start, but then cut you off. Are people jumping that Rubicon?
Yeah, that has really been the struggle, is that, especially in this town, what we saw is a lot of people were on the drugs, and then, 6 months in, their insurance company stopped covering them because it is quite expensive for employers, for insurance companies to cover these drugs for everyone who might need them, because so many people are potentially eligible for them.
Okay. Madison, thank you. And a great read. I would encourage everybody out there, jump on, have a read at The Big Take. A town called Bowling Green. That's on Ozempic. Coming up on the show, Warner Brothers tumbles a $9 billion write-down on the TV networks. There were green shoots in the streaming revenue, but still the market takes down Warner Brothers in size. Good morning from Bloomberg.
I'm Alex Rodriguez. I'm a former New York Yankee and played professional baseball for over 20 years. Almost that entire time, I was thinking about business.
And I'm Jason Kelly. I've been a business journalist at Bloomberg for more than 2 decades. And across my career, I've covered everything from the Olympics to Wall Street.
From Bloomberg, this is The Deal. Each week, you'll hear us in conversation with business icons.
This show will explore deal-making across sports, media, and entertainment.
This is very fancy for a podcast.
If I knew what it was going to be, I'd have put everything I had into it.
I get asked more about our relationship than I do my wife. And you know what I'm saying?
This is a show where we talk with big-time athletes and executives about the wins, the losses, and lessons learned along the way.
This show is called The Deal.
The Deal?
The Deal.
The Deal.
That deal.
The Deal.
Huge deal.
Who dug this up? One of y'all's in trouble.
Season is here.
You're seeing back-to-back billion-dollar-plus quarters.
The forward indicators were so positive.
Bloomberg is first to break the numbers.
Texas Instruments out, folks.
Goldman Sachs.
Taking a look at Mattel.
There is something for everybody.
With the smartest insights.
People are whitewashing AI.
Wallets are under pressure.
We are committed to EVs. They're going to happen.
Earnings season in full swing.
We will have full and instant analysis.
Continuing coverage on Bloomberg. Context changes everything.
Warner Brothers Discovery shares dropping to their lowest level ever. This is after the company took a $9 billion charge, writing down the value of its traditional TV networks like CNN and TNT. Joining me now with a little bit more depth on the story is Chris Palermi. Chris, when you look at the reality check that Warner Brothers have just given us, traditional linear TV, the advertising market is getting hard. People aren't using it the way that they used to do. So is this a kind of truth and reconciliation moment for that part of the business? Is it sort of Damocles on that side of the business?
Certainly looks that way. That's how investors take it. I mean, as was explained to us, the company took a hard look at the valuations of its traditional TV networks. These are ones they just bought in this merger a couple of years ago. And in particularly in light of them losing the NBA rights going forward, their determination was that these networks are worth a lot less than they were currently on the books for. And that says a lot about where consumers are going and where advertisers are going in the TV business these days.
Do institutions give David Zaslav more latitude? How much time does he have to make perhaps a more radical decision? I mean, I know at some stage they were talking about splitting the businesses up. Do you think that performances in the market today shorten the lead time for him to deliver a more radical solution?
We're not hearing anything directly about activist investors or any disenchantment by the board, but you certainly have to believe, given the stock performance since this merger happened, that investors are extremely disappointed, and certainly some must be voicing their criticism to management and the board, because the performance is just is certainly disappointing.
It's down 70% since that deal went through in 2022, the more than $40 billion deal that went through, which takes me then to the Paramount Skydance deal. We're going to get the numbers from Paramount a little bit later on, but then what goes through my mind is, if you're living in such a tortured world over here in the in various parts within Warner Brothers, what does that set the stage for Paramount? And more importantly, when are we going to actually know what Skydance are actually going to do with it?
Well, I would put these two companies very much in the same situation, both legacy cable TV businesses, trying to make the transition to streaming, and right now it's not clear they're going to make that migration on their own. And will they find partners? I think David Zaslav on the call yesterday sort of talked a lot about mergers and acquisitions. He didn't quite say his company was up for sale, but he said certainly these are things we're looking at. Paramount obviously doing this big deal with a deep-pocketed investor, the Ellison family, but their strategy isn't all that different than what current management is doing, which is cut costs, try to find partners, and reinvest in content.
Okay, well, it's certainly a crowded market. You just look at your own television when you switch it on, and you just think, I'm paying $9.99 for this, $14.99 for that, whatever, $15.99 for the other. It's becoming harder to differentiate all the time. So it's certainly going to be interesting from a content point of view. Chris, thank you very much. Chris Palmieri there on the entertainment sector. Let's just put it like that. I want to check in on markets again as we go to the halftime report here. You've got equity markets taking a breather today, hitting the session highs. Why? On jobless claims, the biggest drop in a year. So that sort of takes some of the heat out of the narrative of this drop in speed of the U.S. economy. BMO says we're on a solid footing. It's not a bleed. We're waiting for the 30-year auction to come through. Will they be knocked back? Because that's hellishly long duration. Yesterday, the 10-year auction, there was slippage there. You're still seeing a little bit of a drop in some of these bigger tech names. Overall, the NASDAQ being down well into correction territory by 12%.
biggest risk in property and casualty, is that now climate change?
Yeah, so absolutely. When you look at natural catastrophes, the number of events has significantly increased, and not only the very big events like hurricanes, but also what we call secondary perils, so wildfires, floodings, and drought. And this leads to the fact that you have far more events and therefore a much higher cost of all of the natural catastrophes.
How do you really assess the risk of climate change? Because how can you possibly know whether there's going to be a hurricane or a flood? It's just based on the past or the projection of the future? Or how do you do that?
Since the dynamic has changed, we need to also look forward. And what we do a lot, we work a lot with scientists who understand what the warming of the Earth and climate change will mean for the question of taking risk. And secondly, we take much less risk than we used to take because we have to be careful.
So let's suppose there are a lot of hurricanes. Is that good for property and casualty insurers or not? Good because people say, well, there's going to be more hurricanes, I should buy more insurance, or not good because you got to pay a lot of claims?
It depends. I would say it's good because it creates the awareness to do more prevention. What we see today is that, as I said earlier, there is more events. It becomes more and more difficult to insure, and therefore we work a lot with our customers around preventions.
Good morning. This is Bloomberg Surveillance.
Welcome back to the opening trade.
This is Bloomberg Technology.
This is the Asia trade.
You're watching the close. Welcome to Balance of Power.
This is Bloomberg.
You had an uncivilized rally. That's what Carly Garner just said to us 20 minutes ago here on the show. And that uncivilized rally has led to complacency, significant complacency. You have a small bid to these markets, up by 2%. The S&P 500 did not enter a correction. The NASDAQ did. It's quite significantly in a correction. Yes, you got a small bounce this morning in NVIDIA, but NVIDIA is still down over 27% from its high. So it is all about relative perspective. There were buyers. Carly said to us, look, she's not at all assured that this rally will last. If anything, you sell into these rallies, and you may well trade into the 4,700 level. 10 years, you've had this back up in yield. Again, in her view, the bonds act as a pretty significant hedge. Likewise, Goldman Sachs were with me just the other day. Sharon Bell saying 60-40 portfolio, they work pretty splendidly. Relock, reload. You've had a bounce in yield of over 30 bips. Take it. Take it and relock and reload. At the same time, you've got crude up by 1 1/8 this morning. What you've got here is the juxtaposition between waiting for the Iranian response mechanism to the Israel taking out the Hezbollah and the Hamas leadership. And at the same time, in the background, you've got a physical narrative of stockpiles shrinking for the 6th straight week in a row. Either way, what you've got is a relief rally in equities. We're counting down to payrolls. We're counting down to the Fed, along with CPI. This complexity of information will fill or kill as to whether this is a moment of pause and a lack of Goldilocks or a real US recession. And that's what we've been tracking, the executives here on Bloomberg, in terms of their thoughts on the potential for a US recession.
I do believe there's resilience in the U.S. economy.
We do not yet see any sign of having the economy move in recessionary territory.
There have been several calls for U.S. recession. In fact, they've just turned out to be corrections with a resumption of growth.
I do think that we're getting a correction here after a very strong run on the markets, and that might be healthy.
We don't see a recession coming soon or coming. Actually, we think that the economy is still strongly set.
We probably all have to live with more volatility than we are used to. But overall, I think the trend is our friend, and the trend is showing upwards.
Ahead of the elections, obviously, maybe the market is a little bit muted. But all in all, the United States was always a market which was quite resilient.
The U.S. economy is a little bit stronger than people are giving it credit for, and the consumer will come back as the economy continues to strengthen.
The economy will chug along, and we probably won't see a recession.
From the top there, no recession, resilient. It'll chug along. Valentin Marinov is my guest, Credit Agricole, head of G10 FX. Valentin, good to see you. Yesterday, we had the Bank of Japan put option to put a floor under volatility, to take the heat out of volatility. Listening to that stream of CEO consciousness about the state of the United States, they're not talking about recession, they're talking about a fairly healthy economy. Why then is the rates market so hell-bent on pushing every now and then for a 50 basis point cut, and even at one stage this week, an intermeeting cut, which I know has dissipated, but there is this push by the rates market against the normal process of 25s?
Well, it was the cumulative effect of data surprises we've had from the US in recent weeks and months. And I guess the kicker was really the fairly weak payroll number that the last one that we got. And I guess talking to clients as well, focus will likely remain on the outlook for the labor market as a potential precursor of anything that could resemble recession down the road. But to your point, the broader picture in the US still remains fairly robust, resilient. We are not falling off a cliff anytime soon. And I believe that the incoming data, I believe we have retail sales next week. We also have CPI, by the way, and more data to come between now and the September meeting. That could highlight that the US economy, yes, it is slowing down, but no, a recession is not imminent.
Does that still give the dollar preeminence? I look at the dollar moving by 5.5 big figures against the yen. You know, the unwind of the carry trade, JP Morgan say most of it's been done, 3/4 of it has been done. I question that because it's an OTC market and I'm a skeptic, and that's my point of view. Call me old-fashioned. But is it exhausted? Is the carry trade undone? And if it is undone, what is the consequence for dollar?
Well, so the dollar, I guess, part of the story behind the dollar underperformance was positioning, including overhang of carry trades, predominantly longs in dollars versus the yen. And I believe that that bit has corrected significantly. The additional aspect you alluded to, the Fed put, will materialize, but only when the Fed is comfortable with cutting rates. That means that is a situation where they are comfortable that inflation is under control and indeed that the real economy needs their support. And I'm afraid, and that is corroborated by what the Fed speakers have been telling us really repeatedly in recent days, that the time to really deploy the Fed put hasn't arrived yet. We're going to hear from Chair Powell at Jackson Hole. Hopefully, there'll be more information about how he believes the Fed policy will evolve from here. And obviously, the markets, as you said, are already expecting the Fed put to be deployed as soon as September. The thing is, however, I do believe that the put, the real time when the Fed will be cutting aggressively is not now, won't be in September, potentially won't be this year. We may have to wait till next year to see the exaggerated cuts that the markets are pricing in at the moment. So the time to sell the dollar on the back of that hasn't come just yet.
I mean, we're so liberal, aren't we, with the phrase the Fed put, the BOJ put, but it makes great for TikTok and it makes great for Twitter. 25 basis points, September, November, December, Valentin, is not a put option. It's just at the money, you know, steady as she goes, monetary policy. It's not a put. That does not qualify as a put option for me.
I wouldn't describe it as a put option either. It is the case that if you look at US real rates, essentially what the Fed could potentially be doing is maintain stable real rates, keep the pressure on, try to bring inflation under control, and hopefully not push the economy into a deep recession. That is their strategy. A put, as you said, would imply a more aggressive easing that could ultimately mean favorable and indeed stimulative monetary conditions. And that is not what we are going to get. And I believe the other important aspect of what the Fed will be doing is the forward guidance that we will accompany any rate cut. Those hoping for a Fed put will be hoping for signals of further aggressive easing ahead. And I'm afraid that is not going to be the case. It will sound more like one and done in September, if you want to use that description, rather than a dovish cut, what investors seem to be pricing or hoping for at the moment.
The high yield and the investment grade markets do not flash red to me. The movement higher, let's say, in the yield spread, it's still low relative to pre-pandemic. And I would say until you see a blowout or a pop in those markets, the veracity of a Fed put is challenged.
Well, that is an excellent point. And to tell you the truth, also what you've been playing out just earlier, we've been calling for a recession time and time again, not only us, everyone. We've been trying to really time the recession in the US for so long that it's becoming an ongoing, I guess, story in of itself. And the part of the story is indeed the fact that what we are not seeing yet, and we may not yet see anytime soon, is a notable tightening of the US financial conditions, including wider credit spreads. And a big part of that is the fact that fiscal stimulus rather than private spending and investment has been behind that pretty remarkable recovery in the US. And until the US is challenged, really, until credit risk of the US sovereign starts increasing, I don't think that the tightening in the US economy will be significant to push it over the edge into a recession.
Valentin, thanks for joining me. Valentin Marinov, the Credit Agricole Head of G10 FX. Coming up on the show, Restaurant Brands sets a cautious tone as consumers pull back on their spending. The stock is higher, though, on the day. We dig into the numbers next on Bloomberg.
Saturday mornings, I understand you have off.
Yeah, Saturday is always a day where I power down. So I run at a relative high pace throughout the week, try to wrap things up, and Saturday is a quiet day for me in terms of work. And I start typically by playing tennis with my wife. We go for a swim all year round. After that, have a nice lunch, and then I'm on to a good trajectory for the weekend. And then Sunday, I try to prepare for the coming weeks. But through a weekend, I would send either no emails or very few emails, because I want to drive a culture where all get an opportunity to spend the weekend as they fancy. I think what we do is so difficult, and it takes so much creative thinking to succeed, that if you're always on, always busy, the bandwidth of your reflection is just too narrow. And I generally believe that Monday mornings I'm a better leader than I am, say, Friday afternoon. I also take all my vacations. I generally believe I'm a much better CEO right after a vacation than I am before vacation.
Morning, this is Bloomberg Daybreak Europe. I'm Tom McKenzie in London. These are the stories that set your agenda.
Taking you from the U.S. market's close to the overnight session in Asia. We'll walk you through what you need to know to kickstart the European trading day. Live from our European headquarters, we bring you the day's top market-moving stories, unmatched expert analysis, and on-the-ground reporting from across the continent. Tune in every weekday at 6 a.m. London time, only on Bloomberg Television.
It's your Thursday edition of Bloomberg Markets. I'm Menace Crenny here in New York. Stock of the hour, Burger King owner Restaurant Brands. International sales grew less than anticipated in the second quarter. That's just the latest sign of consumer weakness hitting restaurants. But the shares are in the green. The results just simply weren't as bad as feared. Let's get to TD Cowen. Senior research analyst Andrew Charles is with me now. He's got a buy rating on this stock. Andrew, good to see you. You know, if you look at this house, you got Burger King, Tim Hortons, and Popeyes. I've just had it on good authority from the floor crew that Popeyes is pretty good. But is Tim's enough to carry the bulk of this brand through a tough time for the consumer? Good afternoon.
Good afternoon. So Tim's, and what was interesting about the release is that I put it in two different compartments. Tim's, which is a Canada-based brand, as well as international, did pretty well. The challenges for the brand were really domestic, where it came to Popeyes as well as Burger King, missing our forecasts. And so what I think you'll see is that they talked about the back half of the year, management spoke about the back half of the year, seeing a similar operating environment. And so, you know, the expectation is that the U.S. business will continue to see challenges the back half of the year. We continue to really like the Tim's playbook that's manifesting, as you saw in the second quarter. They're doing a great job, you know, frankly, of picking off the strong parts of the Starbucks playbook around cold beverage menu innovation, PM food attachment, as well as digital offers as well. So, you know, two different parts of the business, you know, performing in two different ways.
So this is about belief in the strategy, isn't it? Back to basics at Tim's, and it sounds from what you've just said. And I haven't had the opportunity to visit a Tim's recently, but you believe in this strategy on the ground, yeah?
Yes, yeah, no, absolutely. I think that what you saw work for Starbucks in recent years, Tim's is in earlier stages with this. And so I think that things like the flatbreads they did in the quarter, they're now doing energy drinks as well. These are positive parts for the Tim's brand.
I can tell you walk into an average coffee vending store here in New York, and it is pricey for a coffee and a bagel. And this comes down to the point. If I'm noticing what I'm paying for the coffee, the bagel, and a tip, price really does.
The Fed bids for 30-year bonds total $4.8 billion.
On our hands between Burger King and McDonald's. I haven't had a burger since 1995. Just want to say that out there. I wish. I've had plenty of burgers. That's not my problem. But we are in a world of war of burgers. What does that say about the fragility of the consumer in that end of the market?
Yeah, so let's take a step back. You know, quick service skews more to lower income consumers, and it's been very well documented about the trade down to at home, to grocery stores, while the lower income consumer is clearly value seeking as well. What I think is not being spoken about, is really being picked up within our proprietary survey data, is the middle income consumer is looking at value perceptions and looking at fast casual, and which is your Chipotle's of the world, your Cavas, et cetera. And what they're seeing is that the value of what you pay for versus what you get at a fast casual restaurant has really converged with quick service. And so quick service is trying to right size that. They're trying to discount more aggressively. It's not necessarily what the franchisees want, just given that they're the ones that are funding these offers. But, you know, it is something that has been benefiting the fast casual category, which has been the bright spot of the restaurant industry so far in 24, and we expect will be in the back half of this year as well.
Tim, sorry, Andy, we're up against the clock. I've got Tim's on my brain, but you quite like their deal in China. I'm just curious, spending $45 million in China, a slowing economy, but again, you say value will win, and maybe that's the thesis of the deal in China.
So what they're doing in China, it's really done by a new senior advisor in the Asia Pacific region, as well as making sure they're providing liquidity as well to their partner there. What we really like about that is the key growth opportunity is Popeyes in China. There are nearly 11,000 KFCs in China. There are 14 for Popeyes. And so what they were able to do is take the Popeyes development agreement. They're going to hold on to it for the foreseeable future, and eventually give the 14 stores to a franchisee to develop out the region. That's what we're most excited about as part of that investment.
Okay. Andrew, thank you so much.
Menace, thank you.
Good to have you with me. And I'll get out there to Tim Hortons and experience the product for myself over at TD Cowen. Now, there is another retail brand that we're keeping an eye on, Under Armour. Are you getting your kit? That's the question. The company raised its guidance after a surge in sales and made a firm-wide restructuring. Let's get to Poonam Goyal. She's tracking this stock for Bloomberg Intelligence. Look, they've brought back the original founding CEO. He's cutting and gutting this company back to what it was, I suppose, he dreamed it to be. What does it say to you as an analyst?
He's making progress, so he's putting in the right steps to get the turnaround started. But make no mistake, there's still a long way to go. We're still in very, very early stages. Sales were still down 10%, and they're still expected to be down double digits for fiscal 2025. So there's a lot more room here to grow. And while they're making improvements, you know, the consumer backdrop is still a little volatile, that anything could happen over the next 9 to 12 months.
Where does Plank want to, where does Kevin Plank want to position Under Armour? My perception of it is sort of, it's sometimes in a discount bin. It's not quite that bad, but it is on discount quite a lot. So where does he reposition this product range to? Is it at Lululemon? Who's he taking this product challenge to?
I think he wants to be a more premium brand. Think of the Nike or the Adidases of the world, just, you know, brands that do discount, but they don't discount aggressively. The mistake that Under Armour made is that it started to discount too aggressively as inventory got out of control. You saw the brand in off-price, the TJ Maxx's of the world, and people got trained to shop at a significant discount. Yeah. They're pulling back on discounts. We saw that with the gross margin expanding 110 basis points this morning, and we expect gross margins to expand up to 100 basis points for the fiscal year. So they're making inroads to making that improvement, but they do need to pull back on promotions. And I think that is the right strategy moving forward, to make it a more premium brand.
So I'm just looking at what BMO said. They're signaling a meaningful tone change, which would shift the discussion from being a struggling growth story to an undervalued brand turnaround. So what would be the proof point for you that undervalued turnaround brand is really working? Is it the margins?
Well, the margins are already expanding. Yeah. For me, it's top line, right? I need to see them get top line growth. And right now, we're nowhere near that. And the thing is, Under Armour has tried this in the past before. So this isn't the first time that they're pulling
So in
back
10
on
minutes time now at the top of the hour, the US is due to sell $25 billion in a 30-year bond sale. The prior bid cover was 2.3. The prior high yield was 4.405%. So this Treasury 30-year bond sector is cheaper outright and richer on the curve ahead of this sale today.
And I don't think we'll see that just yet. I think we're still at least.
Analysts see this as complicating the outlook for the last of the 3 coupon auctions this week. But the sell-off sparked by a drop in initial jobless claims continues to be led by the front-end yields, are higher by 8 basis points on the day, while the auction sector is cheaper by less than 4 basis points. A JP Morgan strategist said in a note yesterday that additional concession was probably required for a good result at this auction. We'll also make note of the latest CFTC positioning data. This shows that speculators were net short 45.9,000 bond futures and 417,000 ultra bond futures, seen as a possible source of covering demand.
The top names in business are on Bloomberg.
The challenge for us now is not very much on the product, it's on the ramp-up of the production system.
We turned the industry down to almost zero during the pandemic. And what we're trying to do now is turn it all the way back on. And that's hard. We lost not only people during the pandemic, we lost a tremendous amount of experience.
A lot of skilled people have left the industry. We have to hire new people. The supply chain has to hire new resources and train the people, educate them.
And because those roles are filled now not by a 58-year-old, but perhaps by a 28-year-old, there's a lot we have to do in terms of not only adding capacity, but capability to meet the ramp that we all are embarked upon.
We have thousands of suppliers, and when you have just a couple of them, few of them that are late on the ramp-up, well, that's slowing down everybody, and that's what we've been facing earlier this year.
Nobody covers business like Bloomberg. Context changes everything.
It's Bloomberg Markets. I'm Menace Craney here in New York. The billionaire Dmitry Balyasny is on a hiring spree. Help fix the equities trading business. He's dishing out more than $200 million. Are you on his call list? That's all you really need to know. Here's what he recently told David Rubenstein on Bloomberg Wealth about life of a trader.
Like, number one, you want to make sure you actually want to be in this industry. Like, you know, it's a hard industry. There's a lot of ups and downs. And if the only reason you're going into it is because you think you're going to make a lot of money, that's not a great reason. You got to really have a passion for investing, for trading, and you want to do it in your spare time, even if you weren't getting paid for it. So that's kind of number one. And then once you have you decide that that's what you want to do and you have a foot in the door, there's a great podcast recently from Jerry Seinfeld, randomly, where his best advice was just work. And I think that's right on. So, like, once you're in the right industry and a decent firm, you know, just work.
It takes a little bit more than just work. Work, deliver, make sure your returns are there, and what we're paying you, you live up to it. Catherine Burton is Bloomberg News hedge funds reporter. You've met one or two. Yeah, getting the cash out, $200 million. Who are they signing up, and why? Why this pivot? Because that's quite an opening of the purse.
Well, basically, they had a strategy before when they would take younger, less expensive people and train them and get them to a stage where they would be great managers and not cost the firm a lot of money. And they've decided that that wasn't really that successful, and so now they're going to hire more senior people.
Well, they're going after some pretty big fish. I mean, they're going after Point72. They're going after Citadel. You know, he's going after his own buddies, people.
Yes, well, that's how where a lot of these people come from. They come from other
In
multi-strat
5 minutes'
firms.
time now, at the
And
top
so
of the hour, the US is due to sell $25 billion in a 30-year bond sale. Prior bid to cover was 2.3. Prior high yield was 4.405%.
Between staying with Ken and going to Steve.
Some of it are cultural differences. Some of it is maybe you get more payout for the profits that you make. A lot of the pay that they give is not guaranteed. It's you have to make a certain amount of money to make the money.
And that's a very healthy incentive. But, you know, in the end of the day, what I love about this world is that the clients actually pay for the hiring and the opening of the purse strings because it does come down. It gets passed back to the clients.
Exactly, and that's why Balyasny has are hiring fewer people,
right,
but hiring more senior people.
And they're paying up for that. Okay, Catherine, thank you so much. Let's make sure that everybody out there's got their CVs dusted off and get the mobile phone for Balyasny. That's it for the markets edition here. We're on a bounce back this Thursday. It's going to, by all accounts, it's going to be a quiet kind of lull into Friday and Monday. We've got a low point on the data. You're waiting on the 30-year auction. The results to come. We'll bring you that in the next hour. S&P 500 up by 1.9%. Do bear in mind it has not corrected. The NASDAQ has. It's down over 12% from its zenith. You've got a nice bounce in the NVIDIA and some of the big tech. To your paper, you've got yields just over the 4 benchmark. Back up in yields. Good morning, good afternoon from New York.
What's happening on Wall Street?
I couldn't have been more wrong.
It's going to stay volatile for a while longer.
It's a bifurcated market.
Need to catch up?
This is Bloomberg Wall Street Week. I'm David Weston.
We've got the information and insight.
Year over year, you could start to see some cracks.
It might be overhyped short term, but it's underhyped long term.
From businesses most influential and instrumental.
A lot of the doom and gloom has been somewhat overblown.
If you're not living near the edge, you're taking up too much space.
Bloomberg Wall Street Week, live Friday with replays all weekend on Bloomberg Television and Radio. Bloomberg Surveillance covers the latest in global markets and the political events that influence your world. Join Jonathan Farrell, Lisa Abramowitz, and Anne-Marie Hordern only on Bloomberg. Context changes everything. Welcome to the world of decentralized finance.
We thought we'd take a look at Bitcoin versus the S&P 500.
Bloomberg's covering all things crypto, the people.
A tectonic shift emanating from Washington.
It's really a tale of two cities in crypto.
Crypto shouldn't be partisan.
The transactions.
Really a record-breaking moment.
Crypto VC is back.
And the technology.
It's really the beginning of a global on-chain economy.
So we're shortly expecting the results of the US 30-year bond sale now. The Treasury's pre-sale when issued yield comes out at the top of the hour. Auction results should follow a couple of minutes after this.
From the world of politics to the world of business, this is Balance of Power.
Donald Trump calls a news conference, but will he answer a question? Welcome to the fastest show in politics. As the Harris Walz ticket continues the big road show today in Detroit and Phoenix, and the former president will face reporters coming up about an hour from now at Mar-a-Lago. I'm Joe Matthew in Washington alongside Kaylee Lyons. It'll be interesting to see, Kaylee, if he actually speaks to reporters.
Treasury when issued 30-year yield 4.283% ahead of the auction.
About issues like the economy, like the border, that we thought would drive this election.
Yeah, of course, he didn't actually say what the subject matter will be. He said it will be a general news conference, and you have to wonder if the whole point of this is to have the news conference, as the Trump-Vance campaign is becoming highly critical of the Harris-Walz campaign, who, yes, they're swinging through the swing states, reading the teleprompter at the rallies. Yeah. They're not answering questions from reporters.
That's right. And look, that's been a knock on Democrats, including Joe Biden as well. So, right, maybe he's holding this news conference so he can say that she hasn't done that. I just wonder if we get a back and forth, because I think that would be actually a helpful exercise with both of these candidates.
Yeah, especially because we don't know for sure whether we will ever see them share a debate stage. We all have massive question marks as to what exactly might be happening in the first few weeks of September. So we'll have more coverage of a busy day in politics for you. But first, it's also a busy day in the markets, and Charlie Pellet has a look up in New York. Hey, Charlie.
Thank you very much, Kaylee Lyons. And yes, right to the numbers here. We got fast-moving markets to the upside with green on the screen big time today. We did have the S&P briefly back at 5,300, up 94 right now, a gain of 1.8%. The Dow up 510 points, up 1.3%. And on this jobless claims Thursday, NASDAQ up 377, up 2.3%. Russell 2000 index of small cap shares advancing by 1.7%. Bottom line here, solid rebound for the equity market. Bonds falling after this morning's claims reading helped ease fears about a more pronounced slowdown in the world's largest economy. Certainly a broad-based rally here. All major groups in the S&P 500 are advancing. Russell 2000 up now. Small cap shares up by 1.7%. 10-year at 3.98%. The 2-year 4.04%. Gold up $35 the ounce, up 1.5%. And West Texas Intermediate crude oil up 1.2%. 76.11 for a barrel of WTI. The stocks stand out today. Under Armour UA on the ticker up 18.4%.
Bid to cover 2.31, 2.31 on the prior of 2.3, with the high yield of 4.314%, 4.314% compared to the pre-sale when issued yield of 4.283%. The US there sold $25 billion in the end, awarding 14.97% of bids at high. Primary dealers take 19.18%, direct 15.5%, indirect 65.32%.
Back we go to Washington. Once again, your hosts, Joe Matthew and Kaylee Lyons.
All right, Charlie Pellet up in New York, thank you so much. With a rally underway today, probably safe to bet we won't be seeing much talk of a Kamala crash in the markets from Donald Trump or hearing much from him about that when he delivers this news conference at 2 p.m. Eastern time from Mar-a-Lago that we're expecting. So then the question becomes, what will we hear from the former president and Republican nominee this afternoon?
Well, it's interesting. I mean, I guess you can sort of guess what we're going to hear. He's got a stump speech. We know the points he wants to hit. But will it involve reporters? A news conference is supposed to have questions and answers. And the last time he called one and we carried it, he spoke for, about 45 minutes without calling on a single reporter. So this will be interesting to see if he's trying to make the point that Kamala Harris doesn't hold news conferences, if he actually does.
Yeah, and it's worth keeping in mind, we will see him do this today. We will also see him in Montana tomorrow for a rally. But we haven't been seeing him as frequently as we've been seeing his vice presidential nominee, J.D. Vance, or the Democratic ticket, as they're the ones that are crisscrossing the swing states this week, and Donald Trump has been at home.
Some interesting new polling out. We got something earlier from Marquette University. Kamala Harris leading Donald Trump head-to-head nationally, 6 points, Kaylee, 53 to 47. We're going to drill down on some of the swing states coming up in a little bit with Cliff Young at Ipsos. Always showing up with the goods when we see Cliff Young. He'll be with us in a couple of moments. Right now, Laura Davison joins from Bloomberg Politics team here in Washington, D.C. It's great to see you, Laura, as we try to get a sense of the direction here in this campaign, what the issues are going to be, because the Trump camp has been talking about Tim Walz's military service more than the border, more than the economy, more than abortion, geopolitics. Is this just a distraction or an effective strategy?
They're still struggling to figure out what their messaging is. Trump, has had a bad week last week, when he went to the National Association of Black Journalists and, insulted Harris. Vance has, as he's been on the campaign trail this week, been doing a lot of insulting, but not a lot of redirecting to what their message is. So that's partially why you see Trump, he's trying to reclaim the mantle here today with this press conference. He wants to change the conversation. He also, believes himself to be the best messenger for his campaign. So this allows him to steal back the spotlight, at least for a little bit. The question is, though, will this go off the rails, or will this, be a time for him to sort of reframe and reset his campaign?
So it becomes a question of discipline then, when we've been having the
So Treasuries extend their declines after the 30-year bond auction tails. Reactions little throughout the rest of the U.S. assets, though.
Laura, as we've come to learn just within the last few weeks alone, you could find many examples, including that appearance at the National Association of Black Journalists conference.
Yeah, and he's been agreeing to do a lot more events that are sort of outside the realm of normal. So earlier this week, he did a live stream from Mar-a-Lago for almost an hour and a half with a gamer, a video game celebrity, but someone who's had some ties to white nationalists and has been a controversial figure. He also has said he's going to do this interview with Elon Musk on Monday.
So has Elon confirmed that?
He has not denied it, and he sort of talked around it on X. So we are assuming this is happening for now, but we still don't have any details about, is this going to be on video? Is it going to be live? It's still all out there twisting in the wind.
Does Trump want his military record to come up, or are they doing this so it doesn't?
That's a really good question. It's also interesting, too, that, Vance does have a military record. He hasn't really been talking about that as much on the campaign trail. But military records, that's kind of back to like 2008 and John Kerry and all of that. So this is
same players, too.
A little bit of a throwback. I think it's interesting just as the military becomes something that is touches fewer Americans, that the fewer Americans have an intersection with the military. It's been less of an issue, and things like couches and coconuts are what's taking off instead.
Well, and it is worth pointing out there is a common denominator here with Kerry in 2004, and now it's Chris LaCivita.
Yes, indeed.
And that is worth keeping in mind.
Employing the same strategy.
Very much so. On the subject of strategy, the strategy we've seen from the Harris-Walz campaign to this point is just hit the road, hit all the swing states you can. A hurricane may be getting in the way of some of the swing states in the southeast, but she's going to be, after Michigan today, head to Arizona. She'll be going to Las Vegas, and she's hitting San Francisco after that. To what extent is the campaign thinking they can continue to just keep this up with organized rallies before putting her in front of the media for a press conference like we're going to see Trump do today, or sitting down for a big interview?
The campaign wants to keep a very aggressive schedule, so I think you're going to continue to see this pace of rallies, either with Harris or Walz or some other combination of surrogates going forward. But they're under a lot of pressure to put her in front of journalists, whether that's to hold a press conference or sit down with serious journalists and have these conversations. Biden avoided that for a long time, and he would maybe go and talk to Howard Stern or not as hard news sorts of folks. But this is going to be an issue that she's going to face, and the issues that Biden had are not the same issues that she had in terms of, she's proven to herself that she's able to speak off the cuff. So she needs to sort of put herself in a situation where she does that.
Couches and Coconuts should be the name of your podcast. Maybe a book, maybe your book on the campaign. That's brilliant. I just have to say that out loud. Why sit down with a hard-hitting journalist and expose yourself to that when you're going to get more play probably with a Howard Stern interview? If Donald Trump's sitting down with Elon Musk, what's the equivalent for Kamala Harris?
It does help negate this attack from J.D. Vance that she is not talking with journalists, that he's making a real big issue of. Yesterday he sauntered off his plane. He happened to be at the same airport where Harris was in Air Force Two. There was a pool of press gathered outside the plane, and he said, "Hey, I'm coming to check to make sure you're not lonely because Harris isn't talking to you." This stunt, didn't maybe land quite the way he wanted it. It came off as very abrasive. But if she wants to sort of be able to deflect some of the negatives, and Democrats, their sort of strategy has been, they go low, we go high. She needs to at least touch on this issue.
I guess we'll just see when she decides to do so. Laura Davison, Bloomberg Politics editor, thank you so much, as always. And as we talk about the vice president and the vice presidential nominee, J.D. Vance, for that matter, swinging through the swing states, it is worth taking stock of where exactly the race stands in these key battleground states that ultimately will decide the outcome of the election. New polling coming in today from Ipsos that finds that Harris and Trump are in a statistical dead heat in the swing states: Michigan, Pennsylvania, Wisconsin, Georgia, North Carolina, and Arizona, and of course, Nevada. So on that note, we bring in Cliff Young. He is Ipsos' head of U.S. Public Affairs, always on top of these polling. So this does track, Cliff, with our own polling we've done with Morning Consult here at Bloomberg, this idea that they are literally neck and neck in the swing states. But is there a sense that there is more momentum for one candidate than another?
Right now, we have to be careful of false positives, that there is this Harris enthusiasm bump. We find it about 4 points at the national level. We found it in the swing states now at about 5 points. This will dissipate in our minds over time, post-convention. And so we really, once the dust settles, we know where we're going to be. But right now, Harris is riding this wave.
Well, it's interesting, Cliff, and thanks for coming back. I really love spending time with you when you have new numbers to share like this. And yours are important because we're talking swing states, not la-la land national polls. But we've seen in the last 24 hours, the Cook Political Report moved 3 states, at least in the direction of Democrats in the form of toss-ups. We've seen Sabato's crystal ball at the University of Virginia Center for Politics move 3 states as well. Georgia was one of them. So it speaks to the point you're making here. We're in a very noisy period. How much fluidity do you see in the map?
Yeah, I think we have to be very careful. Right now, we have this, once again, this enthusiasm bump for Harris. It's significant. We see, especially the Democratic base, being energized relative to the Republican base. But when we look at the fundamentals, when we look at those key factors that help define electoral outcomes, they still are in Trump's favor. Principally, it's the economy. It's the number one issue. Peel away the onion, it's really about inflation. And Trump dominates on that issue, both nationally as well as in the key swing states.
Well, so on the economy, and you have here in polling you sent over that 52% said the most important issue facing the country is inflation or increasing costs. We just had a headline cross the Bloomberg terminal in the last hour that mortgage rates have dropped to their lowest level since May of 2023. When we think about increasing costs, Cliff, what costs are the most important and that we should be watching to see if they're coming down and consider the political consequences of that? Is it the cost of homeownership or renting, or is this still groceries and gas?
That's a great question. It's not about inflation. It's about price levels, about costs. Renting and mortgages are important, but more importantly is gas and basic foodstuffs. When you look at the key constituencies that have been affected by inflation, like younger Americans, Black Americans, and Hispanic Americans, it's all about that simple stuff. Day-to-day groceries, day-to-day sort of household goods and services that really push those segments over the edge. And Harris has a lot of work to do. The Democrats have a lot of work to do. They've lost those people over the last, let's say, year or so.
Cliff, we were talking before you joined us about the attempt to swift boat Tim Walz and the questioning of his military credentials right now. I think the consensus is there isn't one, and we're curious to see if this sticks. One thing that you are seeing stick is this term weird. The label weird sticking to Trump relative to Harris, you say, suggesting the Harris campaign has been successful in initially defining Trump. This is being used, of course, coined, I guess, by Tim Walz in this particular case, used against Republicans at large. What do you make of it?
Yeah, we took a number of terms and we tested them in this swing state poll. Right now, it's the battle of biographies. That's what we're seeing at this moment. And the Democrats, and more specifically Walz, have been very effective at painting Trump in a negative light. He's weird, and that sticks. And basically, Trump sort of outpaces on that negative point Harris by about 16 points. And so very interesting, suggests that that strategy is effective. It might be a way to counter Trump's irreverence. That's always been a very positive attribute for him. But we will see if ultimately it has that sort of long-lasting impact.
Yeah, and I guess we'll see whether or not the questions over Tim Walz's service and his lack of deploying before retiring ultimately has a lasting impact. Let's just take a listen to how the Republican vice presidential nominee, Senator J.D. Vance, has characterized this.
I wonder, Tim Walz, when were you ever in war? What was this weapon that you carried into war, given that you abandoned your unit right before they went to Iraq, and he has not spent a day in a combat zone? What bothers me about Tim Walz is the stolen valor garbage. Do not pretend to be something that you're not. And if he wants to criticize me for getting an Ivy League education, I'm proud of the fact that my mamaw supported me, that I was able to make something of myself. I'd be ashamed if I was him and I lied about my military service like he did.
So, of course, the reference to a weapon of war from the senator there was an old advertisement from Tim Walz, who, of course, has advocated in more recent years for stronger gun control measures, talking about weapons of war that shouldn't be available, like the ones he himself carried into war. And I ask this, Cliff, with the knowledge that you've also pulled the notion of patriotism, which is something that Donald Trump pulls much better on than Kamala Harris. To what extent is this a narrative that actually matters to the American voter?
It's very important. And indeed, I would go as far as saying that the Walz pick is more important because of his profile than his policies. He's more sort of aligned with, let's say, Vance's profile, white, rural, veteran, and very important and very resonant with that segment of the American population. And what we're seeing right now is a battle of biographies. Vance is trying to paint him in a negative light. Whether that's effective or not, we will see. But I would say it's the correct tack at going after his personal biography before he's able to define it.
I'm going to ask you about another issue here, Cliff, and that's political violence. It's something that came up in a CBS interview with President Joe Biden, the idea that if Donald Trump loses, it's Katie bar the door. Here's what he said.
58 counterparties take $303.159 billion at the Federal Treasury Corporation.
Seriously, he means it. All the stuff about if we lose, there'll be a bloodbath. Have to be a stolen election. Look what they're trying to do now in the local election districts where people count the votes. They're putting people in place in states that they're going to count the votes, right? You can't love your country only when you win.
Cliff Young, what are you learning about the level of concern that voters have over this?
Very high levels of concern for violence, widespread belief that the system is broken, so such statements are believable. But the other thing we have to realize is this is one of the primary points of focus of the Democratic campaign, to paint Trump and the Republican Party as being insurrectionist, as being anti-democratic, that they're a threat to democracy. And this will be hammered over and over and over again by multiple messengers. It's a theme that especially mobilizes the Democratic base, but also has a pretty good effect on independents. So I expect to see more of this with more intensity over the course of the next 90 days.
Cliff Young at Ipsos with fresh numbers straight from the campaign trail and specifically the swing states. Cliff, thank you so much for the numbers, the data, the analysis. It's always great to have you here on Balance of Power, the Thursday edition here on Bloomberg TV and radio. I'm Joe Matthew alongside Kaylee Lyons in Washington. I suspect, Kaylee, a lot of this is going to come up. Maybe every issue we just walked through with Cliff, if Donald Trump makes good on a promise for a news conference today.
Yeah, if he actually answers questions from reporters who will be there. We're all going to find out just over 40 minutes from now. It's scheduled to begin at 2 p.m. Eastern time. Again, he is characterizing this as a general news conference, but will it be that or just a monologue?
That's right. Donald Trump at Mar-a-Lago, the Democratic ticket in Detroit and Phoenix today. Speaking of the swing states, and J.D. Vance, of course, following them. We'll have a lot more with our signature panel coming up next on the fastest show in politics. This is Bloomberg.
People ask me all the time, what is the key to being a really good investor? And I tell them it's to surround yourself with and work with the best investors you can find. On Bloomberg Wealth, I'm going to take you to meet the greatest investors in the world, the people that I would like to have managing my money.
If I had invested with you, which I wish I had, what kind of rate of return would I have had over that 10-year period of time?
Over 100% a year on average. On average.
100% a year, that's pretty unusual.
Morning, this is Bloomberg Daybreak Europe. I'm Tom McKenzie in London. These are the stories that set your agenda.
Taking you from the U.S. market's close to the overnight session in Asia. We'll walk you through what you need to know to kickstart the European trading day. Live from our European headquarters, we bring you the day's top market-moving stories, unmatched expert analysis, and on-the-ground reporting from across the continent. Tune in every weekday at 6 a.m. London time, only on Bloomberg Television. Bloomberg loves earnings.
I know it's like your Super Bowl, right?
I can't wait. It's like opening presents in the morning.
All right, it will be exciting.
Nobody covers earnings like Bloomberg.
This is Bloomberg News Now.
News when you want it at the touch of a button.
Another volatile day on Wall Street. We're seeing big moves.
All eyes on Capitol Hill as Democrats and Republicans prepare.
Today's job numbers casting doubt on the Fed's next move. Inflation remains front and center. And that's news when you want it with Bloomberg News Now. Get it 24/7 on the Bloomberg Business app, Bloomberg.com, and anywhere you get your podcasts.
Bloomberg News Now. Context changes everything.
Bloomberg covers the world with unmatched reach and resources. From more than 120 countries, the moment news breaks, 24 hours a day. Bloomberg, context changes everything.
From the beating heart of global finance, economics, and politics, and wherever newsmakers are moving markets, Bloomberg brings you conversations that allow for deep discussions and important insights. What do you think the future is for inflation? Is this a new normal? Are markets too optimistic? How do you worry about the things that are outside your control? How does the current fighting completely stop? I'm Francine Lacqua, and this is The Pulse, every weekday at 9 a.m. only on Bloomberg.
It's 121 on Wall Street. We do check markets all day long here at Bloomberg. Another leg higher since our last update. We are now looking at a 620-point jump in the Dow Jones Industrial Average, up 1.6%. Solid rally underway on this jobless claims Thursday with the S&P now up 108, a gain there of 2.1%. Again, best level of the day, worth underscoring. Back above 5,300 on the S&P, 5,308. NASDAQ taking part in the rally, up 2.6%. The NASDAQ 100 index doing a tad better, up 2.7%. And the Russell 2000 index up 2%. Small cap shares advancing, all part of a broad-based rally. 10-year at 4.00%, with the 2-year 4.04%. Spot gold up 1.6%. West Texas Intermediate crude up 1.2%. And a Bitcoin right now advancing by 8.1%, 59,594 on Bitcoin. Again, Bitcoin surging by 8.1%. Solid rebound for stocks. Bonds fell after the latest U.S. labor market reading helped ease fears about a more pronounced slowdown in the U.S. economy. Again, the S&P up by 2%. Boeing CEO Kelly Ortberg says he'll be walking the main factory floor near Seattle on his first day and relocating to the city that forms the nucleus of the plane maker's activities to renew the bond with workers stung by crisis. Boeing shares right now up by 2.7%. So again, recapping here, S&P back above 5,300. That index up now by 2%. Balance of Power continues now. The Thursday edition. Lots going on. Back we go to Washington once again. Joe Matthew and Kaylee Lyons.
All right, Charlie Pellet in New York, thank you so much. And a lot more is set to be going on just about 40 minutes from now, when we expect that Donald Trump will be giving a news conference, a general news conference from Mar-a-Lago. The question is whether or not he will actually be answering questions asked by reporters, as this is something that his campaign, and specifically his vice presidential nominee, J.D. Vance, have been questioning Kamala Harris about, this notion that she is not taking questions from the press. We heard J.D. Vance talk about this in Wisconsin yesterday.
I respect the American people enough to say that I should have to earn your vote. I shouldn't be expected to be given your vote while I hide in a basement or stand in front of a teleprompter, which is exactly what Kamala Harris has done. So I'd ask all the reporters here to show a little bit of self-awareness and demand that Kamala Harris actually do the job of a presidential candidate and speak to the media and speak to reporters. Until she does, you guys have got to stop giving her a honeymoon and pretending that she's something she isn't.
It always helps to invigorate the press by telling them that they're doing a bad job. J.D. Vance yesterday with the idea of a news conference. By the way, Kaylee, have you ever been invited to a general news conference before? I've actually never heard of billing something as a general news conference.
Yeah. Maybe they all are?
Well, they kind of all are.
Right.
I think the point is
nature.
to imply that anything goes.
Sure.
No topic is off limits.
Up for grabs.
Let's assemble the panel for their take on this. Rick Davis and Jeannie Shanzano have sat through a couple of presidential news conferences, and we've got another in store here for the former president at Mar-a-Lago. Jeannie, what's your thought here? Does Kamala Harris need to show up, sit down, do hard interviews, do that news conference? Who's actually asking for it?
Yeah, what I think she doesn't need to do is to stalk people on the campaign trail and try to get onto their airplanes. Besides that, I do agree she needs to sit down for an interview. Let's face it, she's only been on the campaign trail, like 2 weeks, 3 weeks. She's going to do hard-hitting interviews. She absolutely should. She should start with the two of you, whether it's tomorrow or the next day, and then move on. But yeah, absolutely, she should do this. But it is a rich argument coming from Donald Trump, who has been holed up in Mar-a-Lago for a week. Let's see if he comes out today, to your point, and answers questions. I think he should do that. I hope he sticks to the message. He had a big sort of tease yesterday on taxes. That would be something for him to focus on, but I suspect we're going to hear a lot of anti-Harris and anti-Waltz messaging more than his plans for tax cuts.
All right, I would just like to state here for the record that both presidential candidates and vice presidential candidates, for that matter, you all have a standing invitation to come here to Bloomberg TV and radio. We would love to speak with you anytime. But to the point Jeannie was just making, Rick, this notion that we all don't ever really know what we're going to hear from Donald Trump, whether there is a message he wants to convey, whether he just wants to air some grievances, or is just doing all of this with no real plan in advance, given what we've seen at the NABJ in recent weeks, et cetera. Is this, I think we all understand what Donald Trump is trying to do here, but to what extent does it risk backfiring if he once again goes off script?
Well, I mean, you just mentioned one of three of the last three events that he's done, the Atlanta rally, that, and the convention speech. They all backfired. I mean, these were completely teed up for him to excel, to pitch voters, to talk about his message of, improving the economy and closing the border, none of which he did. I mean, by all means, he did the grievance tour. He did the insult tour. He was the 2016 Donald Trump, not the 2020 Donald Trump or the 2024 Donald Trump that everybody hoped would show up. And we see from reporting that there's a lot of anxiety within the campaign about the fact that, it's not the campaign that's off the rails. It's Donald Trump personally who's off the rails. And that is a different kind of story. All of a sudden, you're like, hey, the campaign's doing fine. It's this guy at the top of our ticket who doesn't know how to stay on message. We haven't seen that kind of disparity inside the campaign in a while. It's been pretty tight. And so I think Donald Trump's got to prove something at this presser today that he can actually stand up in front of a group of people, whether they're reporters or not, and actually stay on message and deliver a, sort of argument as to why he should be president and an attack on his opponents. That is something other than identity politics or a bunch of gobbledygook, frankly. Don't be weird, Donald Trump. This is a press conference, treat it as such. So, yeah, I think this is a really interesting hurdle for him. And by the way, I mean, it will be exemplary as to maybe what his conduct will be at a debate, which is really the big kahuna of press conferences.
No doubt. A great point, Rick Davis. I'm sure Drill Baby Drill is going to come up today. Jeannie, you remember it's become a refrain again. It must bring Rick back to the convention in 2008 on a daily basis. But Donald Trump says, right, day one, dictator for a day, drill, baby, drill. And the fact of the matter is, crude oil output hit an all-time high last week in the U.S. Last week, since Kamala Harris got to the top of the ticket. The U.S. remains the biggest oil and gas producer in history. Jeannie, does Kamala Harris need to start saying it?
She does. I mean, the fact is that for this campaign cycle, what has been astonishing is how little, and I mean, even before Harris got to the top of the ticket, how little focus there has been on issues. And it has been much more now. It's this whole talk of vibes and enthusiasm. The reality is, if Donald Trump can stick to message, if he can focus on issues like you were just talking about with the Ipsos poll about the economy, if she is forced to answer questions about her position on things like taxes and inflation and fracking and these things, decriminalization, could be a really important point for Americans to make a decision as which direction they want to go in policy-wise. But that's not what we've been hearing, in part because the campaign has been, or the candidate, as Rick said, has been so undisciplined on the Republican side. And we'll see where Kamala Harris comes off on this. But she does have questions to answer as it pertains to fracking for sure, which is going to be a big issue in this Rust Belt where she needs to win big.
According to the Washington Post, Rick and Jeannie, Trump is going to propose a debate with Harris either at his newly announced Mar-a-Lago news conference at 2 p.m. or in the days to come. As we talk about policy, Jeannie, usually it would be policy that would be front and center in a debate. But we still have questions as to whether or not this is happening. If Trump really is about to agree to do a debate with Kamala Harris, what does that signal to you, Jeannie? Is that actually a sign of worry on behalf of the former president?
I think so. I can't imagine Donald Trump, because he doesn't perform well at these debates, and he didn't at the last one. It's just Biden performs so much more dismally, that he would have been seeking this out if he indeed does, unless they are indeed needing to change the focus, to change the conversation. So I do think it is a sign that they are nervous here about the fundraising and about the enthusiasm and energy on the Democratic side. So boy, I hope he announces this, Kaylee, in a few minutes. We'll have to wait and see, but that's my hope. I think they both should debate as much and often as possible. I think it would be a fascinating debate.
More detail, Rick, from this Washington Post report that Trump will suggest going back to the original deal, ABC News, or opting for NBC and Univision. So it sounds like we're blowing up this original agreement. We're going to make a new one. Does it matter who hosts the debate?
Not at all. I mean, right now, all these networks are going to produce basically the same moderators. just different names, and the formats are all going to be the same because you'll just go back to what they've agreed to before with Biden Trump. There won't be a whole lot of monkeying around with that. If you really want to do them, you got to keep them simple. I love the idea of doing another studio debate without an audience. I think the audiences have really poisoned the debates in the past. So yeah, I think it's a doable thing. I mean, even Trump has said, I wouldn't hold the fact that I'm suing George Stephanopoulos and ABC against them if they're going to do a debate. So when he says things like that, that means he's already agreed to a debate and he's just laying the groundwork. So my guess is we're going to see a debate. Maybe the week after the Democratic convention, maybe the week after that, but probably sometime in that first half of September.
And the question I have, if we get one, do we get many? Probably depends on
let's see how the first one goes. You better believe it.
Rick Davis and Jeannie Shanzano, Bloomberg Politics contributors, thank you both so much, as always. And again, a reminder, we are expecting this news conference from Donald Trump about 30 minutes from now, 2 p.m. Eastern time at Mar-a-Lago, Joe, is when it is slated to begin, and we'll see if we do get that debate announcement.
Yes, indeed. Of course, we'll bring it to you live whenever it happens here on Bloomberg TV and radio. Let's bring you up to date on world and national news right now. Amy Morris has that for us in the Bloomberg 99.1 newsroom in Washington. Hi, Amy.
All right. Thank you, Joe. Hi, Joe and Kaylee. We are waiting to hear from former President Trump, as you just mentioned, at his Mar-a-Lago estate in Florida. That news conference set for 2 p.m. Wall Street time from Mar-a-Lago. You can listen on Bloomberg Radio or watch on Bloomberg Television or the Bloomberg Podcasts YouTube page. And there is speculation that he will be talking about when there might be a debate between him and the Vice President Kamala Harris. In other news, both suspects in a foiled plot to attack Taylor Swift shows in Vienna appeared to be inspired by Islamic State and al-Qaeda. Investigators found bomb-making materials at one of those homes. Officials said one of the two confessed to planning to, quote, kill as many people as possible outside the concert venue. It appears he started planning the attack last month and uploaded an oath of allegiance to the current leader of Islamic State. 3 sold-out concerts had to be canceled a day earlier because of that plot, devastating Swifties from across the globe. Concert organizers said they stand beside their decision as they expected 65,000 fans inside and 30,000 outside. Tropical storm Debbie creeping inland after making a second landfall on coastal South Carolina overnight. Heavy rain across the southern U.S. this week, now threatening floods as far north as upstate New York. The Summer Games in Paris continue. The U.S. has the most medals total with 95. China has 70. France has 52. And now China has the most gold medals at 28. Global news 24 hours a day and whenever you want it with Bloomberg News Now. I'm Amy Morris, and this is Bloomberg.
The more that you learn about this case, the more it reads like a Hollywood script. The nature of the killings, the execution, the just brutality of it.
It wasn't in the psyche of people that they could be looted because they are considered so sacred.
And we did it the way you do every single investigation. How do you eat an elephant? One bite at a time.
It jumped off the page at me that you could see that there was a Ponzi scheme taking place.
I started hearing mafia, mafia, mafia.
Il sistema è perfetto. Sono gli uomini che spesso non lo sono.
These are the holders of truth and justice. They cannot be possibly be doing this. But then they are. They are. And the evidence is there. It's overwhelming.
fixed income fix. Watch Bloomberg Real Yield every Friday right here on Bloomberg. Context changes everything.
We want to make sure that we're exposed to categories that continue to be relevant to consumers, that we're positioned in categories where we have a competitive right to win.
By strategically adding and shedding assets, General Mills has turned over about 20% of its net sales base in the last 6 years. It's dramatically expanded its pet food platform, starting with the purchase of Blue Buffalo Pet Products in 2018. That expansion dovetailed with a boom in demand.
Pet in the U.S., pet feeding and treating, is a $50 billion category. It's almost 5 times the size of a category like cereal.
Is this the future of the company? I mean, we so much associate General Mills with breakfast and cereals, human breakfast and human cereals. Are we now going to be thinking about General Mills much more as a pet food company?
I think you'll be thinking about General Mills as a food company where we treat all the members of the family like family.
The humanization of pets is actually the biggest driver of pet food and pet treating growth. It has derivatives in not only feeding, which is the core thing that you know most households where most of the dollars go against the pet, but treating, and then you start to branch out to things like vitamins and minerals and supplements.
People
Crude
really love
futures
their
rise
pets.
by
They
more
wanna
than
take care of
$1
their
a
pets
barrel
like
now.
They do their family, and it really is a global phenomenon. That's why we recently entered the China market with Blue Buffalo. That's why we bought Edgar & Cooper recently in Europe, because we see the same kinds of trends that have played out here in the U.S. playing out all over the world.
It's the world's second largest economy with a growing influence in global affairs. But geopolitical uncertainties, deflationary pressures, and questions about foreign investment linger. Bloomberg, the China Show, brings you the unmatched expertise you need to keep track of breaking news, in-depth market analysis, and the most influential newsmakers in and around China. Bloomberg, the China Show. Weekdays at 9 a.m. Hong Kong time, right here on Bloomberg. Context changes everything.
Good morning from our world headquarters in New York. I'm Menace Credit.
And I'm Danny Berger. Let's set your agenda.
Bloomberg Brief delivers the market news, data, and analysis you need live every weekday at 5 a.m. Eastern. Bloomberg. Context changes everything.
Morning, this is Bloomberg Daybreak Europe. I'm Tom McKenzie in London. These are the stories that set your agenda.
Taking you from the U.S. market's close to the overnight session in Asia. We'll walk you through what you need to know to kickstart the European trading day. Live from our European headquarters, we bring you the day's top market-moving stories, unmatched expert analysis, and on-the-ground reporting from across the continent. Tune in every weekday at 6 a.m. London time, only on Bloomberg Television. It's a multi-trillion-dollar industry. We'll show you what's happening in ETFs like no one else. Bloomberg ETF IQ, Monday on Bloomberg.
It's 1:40 on Wall Street. We do check markets all day long here at Bloomberg. Stocks are ripping higher. Best level of the day right now on the S&P, the Dow, NASDAQ, right to the numbers here. We got the S&P up 117. Will we close above 5,300 today? Keep it locked into Bloomberg Television and Radio. 5,317 where we stand right now. That is a gain of just about 2.3%. Dow Industrials now up 659 points, an advance of 1.7%. NASDAQ now up 465 points, up by 2.9%. 10-year at 4.01% with a 2-year that's yielding 4.05%. Spot gold up $38 the ounce, 24.21, up 1.6%. And West Texas Intermediate crude oil up 1.6%, 76.39 for a barrel of WTI. A surge in Bitcoin now up 8.1%, 59,603 on Bitcoin. Again, Bitcoin up by 8.1%. Bumble shares heading for the biggest decline on record after the dating company slashed its annual revenue outlook, signaling that an overhaul of the flagship app has failed to reignite growth. We've got Bumble shares plunging today by 30.7%. Rival Match Group now higher. We've got Match up by about 3.7%. Match, of course, the parent of Tinder, Hinge, OkCupid, and Our Time. So again, recapping, stocks higher, S&P up 116, up by 2.2%. Balance of power continues now. Back we go to Washington. Once again, your hosts, Joe Matthew and Kaylee Lyons.
Charlie Pellet, thank you so much. Watching the markets for us every day here on Balance of Power. It's the Thursday edition. You made it to Little Friday, and thanks for joining. I'm Joe Matthew alongside Kaylee Lyons in Washington as we consider the fluidity of this electoral map. A couple of really important changes from sources that we follow closely here on Balance of Power. We talked a little bit earlier about Sabato's crystal ball at the University of Virginia Center for Politics, moving Georgia back to toss-up, Minnesota and New Hampshire at least better for Democrats. And the Cook Political Report is making moves as well. And this draws us toward the Sun Belt. Arizona from leans R to toss-up. Nevada and Georgia also both from leans R to toss-up. Kaylee, these are important moves if you believe these are the swing states that will decide this election.
Yeah, and to quote Amy Walter in this report in which she's making these changes, she says the presidential contest has moved from one that was Trump's to lose to a much more competitive contest. She says with these moves, she now sees 235 electoral votes as leaning likely or solid Republican, 226 the same for Democrats, 77 total electoral votes rated as a toss-up. And when we consider the states likely to decide this election, we've spent a lot of time talking about the blue wall or the Rust Belt, Michigan, Wisconsin, Pennsylvania. But she here is looking toward the Sun Belt specifically. Yep. So that's where we go next. Samara Clark is with us. She is professor at the University of Arizona School of Government and Public Policy. Samara, welcome back to Balance of Power. Always great to have you. You're literally on the ground in Arizona. Do you sense the shift that Amy Walter is sensing?
Well, from my understanding, I believe Harris and Walz are in Arizona today. And yes,
yeah, they'll be
absolutely.
in Phoenix later.
There is a real renewed effort here in Arizona to mobilize voters who are potentially feeling a little bit lackadaisical with Biden. And yes, you absolutely do feel it, a new wave of campaigning, of energy. And of course, with the visit today to Phoenix, that's a pretty big sign.
How much of this has to do with something new, the new shiny object, the honeymoon, the sugar rush, whatever you want to call it here, Samara, as opposed to where we might be after a debate, after a series of interviews, more headlines from geopolitics or the economy tied to this administration?
That's a great question. I mean, it's hard to know what the future holds. I certainly do not predict the future. But part of it is probably a bit of a honeymoon phase. We have a new campaign, a new candidate, a new VP pick. People are interested. They're learning about these people for the first time. There are people who are learning about Kamala Harris for the first time who didn't know all that much about her, even while she was VP. Yeah. So certainly it could be some novelty, and I think there is some just more energy being infused into the election, and frankly, more efforts by the campaign to start mobilizing people in a way that maybe they hadn't been when Biden was running.
Well, certainly we've seen the Democratic ticket mobile this week, to your point, doing this swing state tour that will include Arizona today after they appear at Detroit this afternoon. It raises the question, considering we are expecting this news conference from Donald Trump when the Trump-Vance ticket and Republicans as a whole are making a very big deal about Vice President Harris not making herself available for interviews or questions to the press. For voters, does that matter as much as it, say, matters to the media, or is it these in-person visits and holding these rallies and making the time commitment to go to these states?
You know, I don't know if, frankly, voters who are spending every day buying groceries, dealing with their kids, getting to work, I don't think they're spending a lot of time parsing out the differences between a press conference and a rally. I do think people ultimately prefer to hear from the candidates themselves. They like to see FaceTime. They like to see speeches. Press conferences certainly give an air of transparency that I think people appreciate. I wouldn't say voters are putting a lot of weight on how many minutes each candidate is spending at press conferences versus rallies, but both of these candidates should and are trying to get themselves out there in front of the public as much as possible.
Samara, a lot was said about Mark Kelly leading up to the decision on a running mate here. He was said to be on the short list until it was down to 2, and he suddenly fell off the list. But there was a thought that he could help to cover Kamala Harris on the border, on national security as a veteran. He could plug holes in her resume and maybe just deliver the state of Arizona. Are you surprised she did not pick him? And what's the fallout out there?
Sure. I mean, I think Kelly had a lot of strengths, and Arizonans generally approve of Kelly. He's a great fit for Arizona. He's sort of a nonpartisan style that Arizonans really appreciate, which is, I think, why he won in a very, very competitive state. Personally, I thought it was possibly riskier for her to choose a senator at a time when both parties need as many co-partisans in the Senate as possible. So for her to vacate a Senate seat is much riskier than vacating governorship. I thought that was probably the biggest reason why she would ultimately choose a governor, not a senator. But he was absolutely in the running. I think it brought a lot of attention in Arizona to the campaign generally. You know, Kelly has been a real strong surrogate for Harris in a way that we haven't really seen him do for Biden. And possibly that was linked to that VP, potential.
Well, as we think about the notion of vacating a Senate seat, one is being vacated in Arizona, not the one held by Mark Kelly, the one being held by Senator Sinema, who, of course, decided not to seek re-election as an independent. It's now Ruben Gallego and Kari Lake. Does the notion that the presidential race is becoming tighter in Arizona than it maybe was before also have implications for that race down the ballot?
Yeah, for sure. I mean, all of these races are going to impact each other because when someone shows up or fills out their ballot by mail, however they may choose to do it, if they're voting in one race, it increases the odds that they'll vote for another. If they're voting for a Democrat or for a Republican on one level, it increases the chances they'll do so at the other level. Gallego has had a pretty comfortable lead, and comfortable in Arizona is not as big as you might think. It's, a few percentage points. So he's had a good campaign so far. Polling has consistently shown Gallego leading Lake and Trump leading Biden. Now, of course, things are changing a little bit. But, I'm sure Gallego is probably pleased to see this trend toward toss-up, as you just indicated. He's had a fairly comfortable lead in the polls, and I'm sure he's hoping that will just increase now.
Well, I have to notice what Kari Lake's been posting on Twitter. She just 2 hours ago wrote, Tim Walz is a far-left nut who left the city burned to punish law enforcement. 13 hours ago, very simple, stolen nomination and stolen valor, it says. This is the ticket the DNC is offering we, the people. How important is this conversation in a state like Arizona, filled with so many veterans and active members of the military, to see Tim Walz have his military credentials questioned?
Well, Arizona has a huge military presence. Tucson, where I'm sitting here today, has a very large, important Air Force base. So the vet community in Arizona is really important. And I think that Walz is probably both going to appeal to voters just by the fact that he has a long military service, but also, as you say, these questions now regarding his military service may become a bit of an issue. Now, of course, Democrats and Republicans are probably not going to choose their candidate based on stories about credibility of Walz's military history. We do, however, in Arizona have a very large proportion of voters who identify as independent, and those independent voters might be looking at these details a little more carefully. They might be the ones who are following these stories in the next few weeks as we see the polls start to shift.
Well, there's also just this idea of tone and feeling in this race, in the way that these conversations are being approached by either ticket. We heard from the now vice presidential nominee on the Democratic side, Governor Walz, when he was being announced by Kamala Harris at that rally in Philadelphia, seemed pretty happy and specifically thanked her for this.
Thank you, Madam Vice President, for the trust you put in me, but maybe more so, thank you for bringing back the joy.
The joy is the word the governor used, Samara. And as we consider the notion that there's been reporting part of the reason that Vice President Harris was attracted to Governor Walz was because of his so-called happy-go-lucky attitude, what plays better for voters? Kind of anger and aggressiveness, or this more joyful, jovial kind of tone we're getting?
Well, I'll say that a lot of the anger and aggressiveness in politics has pushed people away from wanting to identify with either party at all. But that largely is coming from the conflict between the two parties. So I think what Harris and Walz are going to have to do is not only talk about joy, but also try to tone down the attacks and the anger that candidates tend to see between candidates. And I think that the voters see between candidates, and I think that that's what they're trying to do. I think they're trying to distinguish themselves from the Trump-Vance ticket as much as possible. They're potentially trying to highlight Harris's youth relative to Donald Trump. So these are all the strategies that they're going to go for, and we'll see if it works. We've only had, it feels like a long, long time now, but it's only been about a week that we've really had some certainty about this ticket, and we'll have to see how it plays out.
Well, you know, Samara, Donald Trump's going to be holding a news conference as he's billed it, starting about 10 minutes from right now. Never really know exactly what he's going to do, but I can almost guarantee you that he will start with the border. I only say that because he has done that at just about every event he's held in recent memory here. If he doesn't start with it, he'll get to it pretty quickly. And I wonder if he has an audience only in Republicans in Arizona or if Democrats are as concerned as well.
Oh, absolutely they are. I mean, the border is one of the biggest issues that Arizonans rate as, important here in Arizona. Now, for some Arizonans, that has to do with undocumented immigrants. For a lot of Arizonans, it has to do with illegal, contrabands, drugs, weapons that are brought across the border. But no matter how you cut it, Americans and Arizonans are concerned about the border, and that is something that both parties are going to have to tackle head on. Biden did not have great approval ratings on the border. People were not happy with improvements or lack thereof at the border over the last 4 years. So, Donald Trump is wise to bring it up. I think it's an issue that people have typically thought Republicans might be better at, but that advantage might be waning a little bit. Harris seems to be a lot more aggressive in talking about the border, and she's trying to kind of take back that issue, especially in swing states like Arizona.
And where the border is highly ranked in terms of issues we know voters care about, potentially even more so in border states, we know that the economy is up there too. We were asking Cliff Young of Ipsos about this earlier on, knowing that we saw today mortgage rates dropping to the lowest levels since May of last year. To what extent do changes like that actually help the incumbent party, or is it not material enough to make a difference when costs are still quite elevated?
Well, I'll first say, in a swing state like Arizona, where electoral outcomes are so razor thin, it's going to be hard for me to say that there's anything that might not make a difference. Really, anything could make a difference in Arizona. We have such tiny margins of victory in our races. But the economy is hugely important here. Arizona had one of the highest rates of inflation in the country. Cost of living in Arizona has really skyrocketed. It may seem like Arizona has a low cost of living compared to, DC or LA or San Francisco, but compared to how it was here 5 years ago, 10 years ago, Arizonans are pretty stunned by the increase of the cost of living. So any economic factor is going to be a big factor in an Arizona election. And seeing those mortgage rates fall, I think will have an impact and can make people more positive or more optimistic about their financial state and about the economy.
Samara Klar, it's great to have you back, as always. Thanks for the insights. Professor at the University of Arizona School of Government and Public Policy, Samara Klar, here on Balance of Power on Bloomberg TV and radio. Counting our way down to that news conference we've been talking about 6 minutes away, assuming Donald Trump is on time. The flags are set up, so is the podium at Mar-a-Lago. Reporters have been assembled. If you're with us on Bloomberg TV or on YouTube, you see the stage set, unmistakably Mar-a-Lago. But will there be a back and forth, Kaylee, remains the big question. Donald Trump called a news conference less than a month ago. It was right around the Milwaukee convention, and it was an ad-lib speech, not a news conference. So we do take these terms seriously because they have meaning.
Yes, it just is the question of whether or not they have the same meaning to us as they do to the former president. Is this an opportunity to just speak to the media or speak with the media and answer their questions? We're going to see how this goes just about 5 minutes from now when he is expected to begin. And of course, this comes at a time where Trump and his running mate, J.D. Vance, are criticizing Kamala Harris for not making herself available to the press, and we'll see if this inspires her to do so as she continues her swing state swing.
Fresh reporting by the Washington Post, Donald Trump could propose a new debate. We'll be listening closely. We'll have it for you live and unfiltered here on Bloomberg TV and radio.
What prompted you to want to get out of just doing surgery to be an administrator and a hospital leader?
Watching others who did it well. I had a dean who recruited me from Birmingham, Alabama to Minneapolis, Minnesota, which is a big jump to convince me to move my family. I realized over time that my training as a surgeon brought a set of credible things to the table. One, if surgeons have a measure of emotional intelligence, not much of our training reinforces that. It reinforces skill, not necessarily emotional intelligence. But if a surgeon has some self-awareness and emotional intelligence, what they bring to the table of leadership are three fundamental things. Number one, they do everything in teams. Their operations, their patients they see is all team focused. Number two, they value process, but they hold themselves very much accountable to execution. They understand that it's good to explore a patient, but what really matters is that you take the tumor out. And then number three, they make difficult decisions on incomplete information. Those things I realized that I could bring to the table as a leader if I had a sort of a passion for working with people and had some sense of self-awareness.
Lots happening on Wall Street.
I couldn't have been more wrong.
It's going to stay volatile for a while longer.
It's a bifurcated market.
Need to catch up?
This is Bloomberg Wall Street Week. I'm David Weston.
We've got the information and insight.
Year over year, you could start to see some cracks.
It might be overhyped short term, but it's underhyped long term.
From businesses most influential and instrumental.
A lot of the doom and gloom has been somewhat overblown.
If you're not living near the edge, you're taking up too much space.
Bloomberg Wall Street Week, live Friday with replays all weekend on Bloomberg Television and Radio.
DOJ or other authorities
could face bigger challenges.
Britain's next.
Fed was going to keep rating World Cup. This is a three.
As the economic picture.
Covering the intersections of Hollywood, Silicon Valley, and beyond.
This is Bloomberg Business Week. Insight from the reporters and editors who bring you America's most trusted business magazine. Plus, global business, finance, and tech news as it happens. Bloomberg Business Week with Carol Masser and Tim Stenevec on Bloomberg Radio.
A very good afternoon, everybody, live on radio, TV, YouTube, Bloomberg Originals. This is Bloomberg Business Week for this Thursday, August 8th. Quite a week. We are looking at, I feel like it's manic markets because it seems like everything, not quite awesome, but certainly better than it was earlier in the week. I know that was a gift.
Thank you.
You're
Thank
welcome.
you.
You're very welcome.
Everything does look pretty awesome, but is it really under the surface?
Digging under the surface. We're going to do that, actually, get into the day's economic news and also what's going on in the rates trades. We'll get to that in just a moment. We are, as we mentioned, awaiting a press conference from former President Donald Trump from Mar-a-Lago. So we are expected to head there as soon as it begins. We're also keeping an eye on something you have from out of the gate this morning. Can we say it together? 3, 2, 1. Warner Brothers?
Yes, Warner Brothers Discovery. From yesterday. They had wrote down their cable assets by $9 billion, and I'm wondering, why did they go and borrow $41 billion to buy this junk in the first place?
And David Zaslav, Discovery. Maybe it wasn't such a bad business on its own. I don't know. We have a lot to talk about, but we are watching the stock sink in a big way. We're also going to get into Boeing, its new CEO walking onto the factory floor, talking about full transparency. All of that ahead. First up, though, let's get to the trade and your top business stories. Here's Charlie Powell.
Hi, thank you very much. Indeed, another rebound Thursday. Today, we've got the Dow, the S&P, NASDAQ, best level of the day right now. Claims Thursday. S&P advancing 116 points, up now by 2.2%. The Dow up 648, higher now by 1.67%. And NASDAQ up by 457 points, up now by 2.8%. Russell 2000 index of small cap shares ripping higher now by 2.2%. 10-year at 4.01%. The 2-year 4.06%. Spot gold up 1.7%. 24.23 the ounce. And West Texas Intermediate crude up 1.5% now. 76.39 a barrel. Cannot ignore the move today in Bitcoin. Bitcoin is surging 7.8%. Bitcoin 59,463 right now. So stocks are pushing higher. S&P staging a solid rebound. Bonds fell after the latest labor market reading helped ease fears about a more pronounced slowdown in the U.S. economy. All major groups in the S&P 500 are advancing. And sources tell Bloomberg Apple is planning a new version of the Mac Mini that will be its smallest desktop computer yet, part of a broader overhaul of the Mac line with AI-focused chips. This based on reporting from our Mark Gurman. Apple shares right now, they're up 1.8%. Bottom line, solid rebound. Stocks pushing higher. S&P up 2.3%. That Bitcoin quote worth repeating. Bitcoin now up by 7.9%. I'm Charlie Pellet, and that is a Bloomberg Business Flash.
Panic Markets. Remember what it was doing on Monday. All right, Charlie Pellet, thank you so much. Carol Massar, along with Matt Miller, in for Tim Stanovic this week. Tim having a nice week off. We're watching Treasury yields moving up again today following a report that showed initial applications for U.S. unemployment benefits fell last week by the most in nearly a year, potentially alleviating some of those concerns.
There's no more recession.
That the labor market is cooling too fast following last week's disappointing jobs report. Hashtag Manic Markets, because it's like a little crazy. You might remember yesterday, Moody Analytics, Mark Zandi saying, keep a watch on those weekly jobless claims data. So we are. Let's get to it with our own Michael McKee. He keeps a watch on it for sure, along with all things economic in the Fed. Mike is Bloomberg News international economics and policy correspondent right here in studio, along with Bloomberg News rates reporter Michael McKenzie, also watching all of it, as we said, both in studio. Mike, the weekly jobless claims
Wait,
down
they're both Mike.
Well, there's a Mike and a Michael.
Oh, I see. Okay.
I only call this one Michael when I'm like a little ticked off, which I never do. Weekly jobless. What does it tell us? I don't know. Why did it come below what economists forecast?
Seems silly.
Did they just miss it?
No, I mean it's really hard to forecast jobless claims. You don't really have a good database to check it, and we also have the data are frequently revised, very high frequency data. So it gives you a good sense maybe of the direction, but I wouldn't put a whole lot of credence in the actual numbers. Now, the key thing in this set of numbers is, well, there are two. One is that it went down, which everybody was excited about. And two is if you look at the unadjusted, the non-seasonally adjusted data, it went down significantly from 215,000 to 203,000. Now, we always get a jump in jobless claims in July. It's a seasonal thing. Factories shut down. Plus, we had the hurricane and other weather problems. So there are reasons why jobless claims always go up in July. But in this case, we also saw that the unadjusted ones did not, which means they probably did not. We probably are not seeing companies lay people off, and that was the fundamental concern.
So this is so Neil Dutta says layoffs are not a useful recession indicator.
U.S. stocks extend gains with the NASDAQ up over 3% now.
But he also points out those recently laid off are having increasingly more difficulty finding work. Michael, what do you think about following this? I mean, it's crazy to me that this little number is responsible for a 2% rally in the S&P 500. I mean, if 7,000 jobs, if 7,000 layoffs better than expected puts us up 2%, what happens when we miss some little data point?
Or the move up in yields, which I thought was pretty significant.
Yeah, okay.
10 basis points, right, on the 2-year.
I think the moves in markets this week are still the reverse. You had an earthquake on Monday. You're now getting those aftershock tremors. Things are consolidating. Things are coming back, into some kind of semblance of, normality here. So the fact you've got 2- and 10-year yields back above 4%, you've had soft receptions to sales of 10-year notes yesterday and 30-year bonds this afternoon. That all makes kind of sense. We had a huge move in yields. It was an overreaction, I think. And at the time we said it was, unless something is truly broken, yields had moved too far too quickly. Stocks had sold off way too much, particularly in Japan. We sort of bounced back. The yen's come back a bit, although it's still significantly stronger than where it was a couple of weeks ago. And we're back to waiting. I mean, today, the number mattered today because there's really nothing else until next week's CPI. So this is your one trading opportunity. It's given an opportunity for those who've been long bonds and short stocks to basically continue to take profit. And we'll reset. Markets will enter next week at new levels, and then we'll tee off on when we get the CPI.
It does speak to some volatility, right? That it doesn't take much to kind of change.
There is a lot of volatility at the moment. August 2 is notorious for being thinly traded. I mean, I spoke with Dan Iverson at PIMCO yesterday, and he said it's going to be volatile into the end of the year. There's a lot of risk events out there, and he's tactically lightened up. He's saying if you get a couple more rate cuts come out of the market, he'll look to come back in and buy 2 years. So you do have support for the bond market at high yields.
Mike, is it still fair to say the narrative of softening labor market, yeah, that's happening?
Sure. It's not as visible in the jobless claims as it was a week or two ago.
Right.
But we're seeing the number of job openings has gradually come down, and the ratio of openings to unemployed has basically evened out, normalized, as they say. And we're seeing in the manufacturing ISM numbers a slowdown, not so much in the service industries, but overall the feeling is that we're getting.
Hang on, Mike, forgive me. We're going to go to Mar-a-Lago and former President Donald Trump.
Now in the most dangerous position it's ever been in, from an economic standpoint, from a safety standpoint. Both gangs on the street and, frankly, gangs outside of our country in the form of other countries that are, frankly, very powerful. They're very powerful countries, and we don't know what we're doing. We have leadership that has no clue how to handle them or how to handle any other situation. We have a lot of bad things coming up. You could end up in a depression of the 1929 variety, which would be a devastating thing. Took many years, took decades to recover from it. And we're very close to that, and we're very close to a world war. In my opinion, we're very close to a world war. We have people that don't know how to handle it. They're not respected. All over the world, they're laughed at. And we can't have that. Most dangerous period of time I've ever seen for our country. With that being said, we have somebody that hasn't received one vote for president, and she's running, and that's fine with me. But we were given Joe Biden, and now we're given somebody else. And I think, frankly, I'd rather be running against somebody else. But that was their choice. They decided to do that because Kamala's record is horrible. She's a radical left person at a level that nobody's seen. She picked a radical left man that is, he's got things done that he has positions that are just not, it's not even possible to believe that they exist. He's going for things that nobody's ever even heard of. Heavy into the transgender world, heavy into lots of different worlds having to do with safety. He doesn't want to have borders. He doesn't want to have walls. He doesn't want to have any form of safety for our country. He doesn't mind people coming in from prisons, and neither does she, I guess, because she's not, she couldn't care less. She's the border czar. By the way, she was the border czar 100%. And all of a sudden, for the last few weeks, she's not the border czar anymore, like nobody ever said it. And I just hope that the media becomes more diligent, more honest, frankly, because if they're not going to be honest, it's going to be much tougher to bring our country back. We have a very, very sick country right now. You saw the other day with the stock market crashing, that was just the beginning. That was just the beginning. It's going to get worse. It's going to get a lot worse, in my opinion. And fortunately, we've had some very good polls over the last fairly short period of time. Rasmussen came out today. We're substantially leading, and others came out today that we're leading, and in some cases substantially. I guess MSNBC came out, or CNBC came out also with a poll that was, has us leading, and leading fairly big in swing states. In some polls, I'm leading very big in swing states because they want safety. People want safety. They want security. They want respect all around the world for our country. They don't want this horrible culture that is developing, a culture of no common sense. It's really a culture of no common sense, and it's not what anyone wants. We want to have a safe country. We want to have a strong military. We want low interest rates, and we want to be able to have the American dream. We want to be able to have our youth be able to buy homes, housing, get good jobs. And we're really just at the opposite right now. It's so sad to see. But as a border czar, she's been the worst border czar in history, in the world history. I think the number is 20 million, but whether it's 15 or 20, it's numbers that nobody's ever heard before. 20 million people came over the border during the Biden-Harris administration. 20 million people, and it could be very much higher than that. Nobody really knows what the number is. Nobody knows. Nobody has a clue. And the gotaways, they call them the gotaways. The gotaways are at numbers. Somebody was quizzing me on it the other day. No, I don't think so, sir. I don't think so. They have no idea what those numbers are, but they're much higher than you would think. Just like far more people were killed in the Ukraine-Russia war than you ever report. Just like the October 7th would have never happened. Russia would have never hit Ukraine had the election result been called differently. It was a very bad call, but Russia would not have attacked Ukraine. October 7th in Israel would have never happened. You wouldn't have inflation. A lot of great things would have happened, but now you have millions and millions of dead people, and you have people dying financially because they can't buy bacon, they can't buy food, they can't buy groceries, they can't do anything. And they're living horribly in our country right now. With all of that being said, I think it's very important to have debates, and we've agreed with Fox on a date of September 4th. We've agreed with NBC, fairly full agreement, subject to them, on September 10th. And we've agreed with
So
ABC
Trump says that he has
September
agreed to debate
25th.
on Fox on September the
So we have
4th,
those three
NBC
dates,
on September 10th, and ABC
those
on September
networks,
25th.
They're very anxiously awaiting that date and those dates. So we have September 4th, September 10th, and September 25th. We have spoken to the heads of the network, and it's all been confirmed, other than some fairly minor details. Audience, some location, which city would we put it into, but all things that will be settled very easily. I think it'll be very easy. The other side has to agree to the terms. They may or may not agree.
Trump notes that Harris's side is yet to agree on the debate terms.
She can't do an interview. She's barely competent, and she can't do an interview. But I look forward to the debates because I think we have to set the record straight. Why is it that millions of people were allowed to come into our country from prisons, from jails, from mental institutions, insane asylums, even insane asylums? It's a mental institution on steroids. That's what it is. When you see the people that are coming into these are institutions that are being emptied out, not in South America, all over the world, including South America, all over the world. Prisons are being emptied out into our country because we have a president that's the worst president in the history of our country. We have a vice president who is the least admired, least respected, and the worst vice president in the history of our country, the most unpopular vice president. And because of political reasons or because of being politically correct, even though she never received a vote. Don't forget, she was the first one defeated, as I remember it, because I watched it very closely, but she was the first one. She never made it to Iowa, the first state. She never made it to Iowa. She was the first one that was defeated. She was the nastiest to him. She was nasty with calling him a racist and the school bus and all of the different things. She was very nasty to Biden. And shockingly, he appointed her, asked her to serve as vice president. Well, I don't know if he's happy about that decision right now. This was taken away. The presidency was taken away from Joe Biden. And I'm no Biden fan, but I'll tell you what, from a constitutional standpoint, from any standpoint you look at, they took the presidency away. And people were saying he lost after the debate. He couldn't win. Well, I don't know that that's true necessarily. But whether he could win or he couldn't win, he had the right to run. And they took it away. They said they're going to use the 25th Amendment. They're going to hit you hard. Either we can do it the nice. I know exactly, because I know a lot of people on the other side, believe it or not. And they said, we'll do it the nice way or we'll do it the hard way. And he said, all right. So that, I mean, they've really taken, what they've done is pretty incredible. And now I'm running against somebody else, and we're leading. So I'm not complaining. I'm saying it's
All right, everybody, you've been listening to former President Donald Trump at Mar-a-Lago making some comments and speaking to members of the press community. We'll
Can I just give
continue
you some
to monitor.
facts real quick?
Yeah,
Because
you can do whatever you want.
Crime is up now, and we know that crime was worse under the Trump administration. But he says they're leading in polls. So I just looked at the polling average from Real Clear Politics. Kamala Harris at 47.6%, Donald Trump at 47.1%. All this data is on the Bloomberg, so you can just type WSL space election go and find it. In terms of the betting markets, Kamala Harris is leading there as well, 57 cents. Donald Trump, 46 cents. Robert Kennedy Jr., 2 cents. So in terms of the polling averages, what he was saying is not true.
No, it's a good point, and this is why we lean on facts here at Bloomberg.
On the other hand, President Biden seemed to have no understanding of the polls either. So I guess if you're a president or a former president, you just don't understand polling.
Okay, all right. Your perspective.
No, I'm just stating these facts.
Okay, so let's get to somebody who's been following the race, following the polls, listening to former President Donald Trump. Kaylee Lyons is with us. She's one of the co-hosts of Balance of Power. I don't know what the goal or mission of this was, but Kaylee, as you listen and watch, how are you thinking about this against kind of the bigger, broader presidential run here?
Well, first, Matt is right. Polling is not universally saying that Donald Trump is still in the commanding lead, that he was more so when Biden was still the Democratic nominee. In fact, there was new swing state polling out from Ipsos that finds these two are in a statistical dead heat in the battleground states that will decide this election. Our own polling with Morning Consult has said the same. I will say, at least to this point, this hasn't been a press conference as you and I would traditionally think about it. He has not actually taken any questions from the media. At this point, he has just made a statement, many statements, in fact. He did make some news in saying that he has agreed with 3 different networks to 3 different debates. He said September 4th on Fox, NBC on the 10th, ABC on the 25th. The campaign has come out and clarified that he did confuse 2 of those. It will be ABC that the debate is on September 5th, and then NBC later on in the month, although he did point out that the other side still has to agree to the terms here, so we'll wait to hear from the Harris campaign. Other than that, though, we heard a lot of what we've heard frequently from Donald Trump. Consistent lines of attack when it comes to the border, crime, and the economy. Many of these points that he was making, providing no evidence to support them. He even said that nobody knows the number of people that have come over the border. That means that when he says he thinks it might be 20 million, there is no factual evidence of that, just as there is no factual evidence of his allegation that we could see a depression of the 1929 variety, that he believes we are close to that and very close to a world war. He also made a point that he thinks Kamala Harris has not received 1 vote for president, but she is running. While that is true in the primary process, she did already, in a virtual roll call, receive the requisite number of votes from delegates to the Democratic Convention to be secured now as the Democratic nominee.
All right. So is he expected to take questions from reporters? Do we anticipate that, or is it not likely?
Do we know also the point of, what's the point? Was there an overriding statement that he made where we get something of substance?
Why did he call this, I guess, is the question.
What I have heard from a number of people following this race today is that there may be a sense among Trump and his campaign that Kamala Harris is getting too much oxygen in the media right now, as she and her vice presidential selection, Tim Walz, are on this swing across the swing states. They, of course, had that big rally in Philadelphia where she announced Walz as her running mate on Tuesday. They're just getting a lot of press coverage, and it does seem that momentum right now and energy is on their side. So this may be a way of Donald Trump trying to reclaim some of that oxygen. I would also point out the Trump campaign, and specifically his vice presidential nominee, J.D. Vance, have been highly critical of Vice President Harris to, at this point in her campaign, which now is just about 2.5 weeks old, not having made herself available to the media to answer questions. Again, Donald Trump is not answering questions here either. We'll wait to see if he does once he's finished airing some of these grievances and making some of his statements. But to this point, he's not necessarily taking questions from reporters either. But the point of this may have been to at least put himself in front of the cameras in a way, off-the-cuff way, that we're not necessarily seeing from the vice president at this time, as she has been largely sticking to the teleprompter at these rallies that she's doing in a number of states.
All right, interesting stuff, and we will certainly continue to monitor. Kelly, thank you so much. Really appreciate it. Kelly Lyons, she's She's co-host of Bloomberg's Balance of Power. Catch her and Joe Matthew. They're coming your way. Come back to Bloomberg broadcast at 6 p.m. Wall Street time. Having said that, we're still here with Michael McKee, international economics and policy correspondent here at Bloomberg News, and Michael McKenzie, rates reporter at Bloomberg News, which I feel like when it comes to the Bloomberg audience, this is what really kind of matters right now in terms of the economic data points, what's going on in the rates market. So, Mike, is it kind of we start focusing now on the CPI print? Is that your next focal point?
Oh, yeah. Tomorrow there's nothing. There's no economic data, no Fed speak. So it's a good day. Well, it's a good day to go out to the beach, except that it's going to rain. So I can't help you there.
So not so good.
But yeah, Wednesday of next week, we get PPI on Tuesday. That'll get some interest because it comes up first, which is kind of rare. And then we get CPI. And then on Thursday, we get retail sales. So CPI and retail sales back to back will be important. And then after that, we've got to wait till the end of the month when we get the PCE numbers. And then everybody's focus is going to turn to the next jobs report and whether or not the one we saw last week was validated.
In terms of the carry trade, Michael, I wonder if we should continue to, be on watch, because JP Morgan this morning came out and said it's 75% unwound, and that seemed to be the unwinding of the carry trade. A lot of what caused the big volatility on Friday, on Monday, and into today. Is that gone now?
Forgive me. Donald Trump taking some questions, and we do want to dip back into it just to see what he has to say. Let's go back to Mar-a-Lago and former President Donald Trump.
This election maybe is better than Josh Shapiro would have been. But I think other than Josh Shapiro, I think she had some good choices. But Josh Shapiro is not one of them. He's caused a lot of damage with a lot of people. And I don't think he would have been better. I think he would have been maybe the equivalent, maybe not as good. But they had some people that they were looking at that were good, far superior to her. They actually had a story where they had everybody, including, they had like 10 people that she was looking at and her. And they said she was the worst of all. In other words, she was the worst out of the 10 people and her. I don't know how that's going to work out. We'd like to do 3 debates. We think we should do 3 debates. We think Fox and ABC. And we also have CBS is going to do the vice presidential debate. So CBS will do vice presidential, and I have to tell you, J.D. Vance has really stepped up. He's doing a fantastic job. Say it?
Are you worried at all about the size of Harris's crowds?
Oh, give me a break. Listen, I had 107,000 people in New Jersey. You didn't report it. I'm so glad you asked. What did she have yesterday? 2,000 people? If I ever had 2,000 people, you'd say my campaign is finished. It's so dishonest, the press. And here's a great example. I had in Michigan recently 25,000 people, and 25,000 people we just couldn't get them in. We had in Harrisburg 25,000 people, and 20,000 people couldn't get in. We had so many. Nobody ever mentions that. When she gets 1,500 people, and I saw it yesterday on ABC, where they said, oh, the crowd was so big. I have 10 times, 20 times, 30 times the crowd size. And no, they never say the crowd was big. That's why I'm always saying turn around the cameras. I'm so glad you asked that. I think it's so terrible when you say, well, she has 1,500 people, 1,000 people, and they talk about, oh, the enthusiasm. Let me tell you, we have the enthusiasm. The Republican Party, and me as a candidate, but the Republican Party has the enthusiasm because people want to see crime stopped. They want to see a country that's respected. Think of it. If I were president, you wouldn't have Russia and Ukraine, where it never happened. Zero.
All right, everybody. Once again, that is former President Donald Trump at Mar-a-Lago making some comment. He is taking questions now from reporters who are in the room there with him, but we will continue to monitor.
To be clear, all right, he said he had over 100,000 people at his last rally, and that Kamala Harris only had 2,000 people yesterday in Detroit.
I'm looking forward to the great crowd debate.
Right. Remember his inauguration? It was the biggest crowd ever for an inauguration.
All right.
By the way, if he had been president,
what?
Putin would never have invaded Ukraine. October 7th would never have happened, he says. I'm just quoting the former president here.
No, I know.
Some wonderful things would have happened.
He has certainly said many things about his accomplishments. So we will continue to monitor that press conference, and then any news that comes out of it, we will certainly bring to you. The only news that I would say that's key to the Bloomberg audience is that they have agreed on 3 debates. At least the Republican side has, and now we're waiting to hear from the Democratic ticket.
But he says that he's agreed.
He says he has
on
agreed.
3 debates.
And 4 because
the
they'll
VP
have a
debate.
vice presidential debate.
Right,
so we're kind of back to the schedule that we always used
to have. But we have yet to hear from NBC and ABC on this.
Correct. So we are will monitor. All right, let's go back to fundamentals, which we like to focus on here at Bloomberg. And we were talking about the rate environment. You were talking to Michael, and I forget what you asked.
I was asking if there's another sort of positional shoe to drop, right? Because you may have been watching the carry trade, but a lot of people in the market weren't. So that took us a little bit by surprise. Are there any other tail risks, brown swans, that we aren't thinking of?
Well, actually, the carry trade's probably going to come back. I mean, it dropped off in July and it came roaring back. And even today, reading some of the research notes from currency guys, they were saying, well, there's still plenty of carry juice in the carry trade once things settle down. So you want to keep an eye on the carry trade. I guess in the rates market, there's a lot of options and positions going around that probably warrant watching as well. And I think ultimately, though, we're in an environment now where we have central banks are data dependent. So every single piece of data has the potential to spark and set off the tinder. And I think you're going to see a lot of swings because ultimately you've got one bank in Japan that's looking to tighten, still on that tightening path. You've got the rest of the world's central banks on that sort of loosening path. And that's traders like that. They like that combination. So there's going to be plenty of volatility, I think, to come. And then you layer in the geopolitical, the US elections coming up. There's a lot of event risk coming into the year end.
All right. We so appreciate the two of you. And I know when you guys have crowds, they really are big crowds.
Oh, yeah. I mean,
dare I go there?
Last time Michael was speaking, there had to be 150.
Hundreds of thousands.
The big house in Michigan.
Yeah.
I just want to get to the things that matter, right? All right, guys. Thank you so much. Really appreciate it. And thanks for your patience for hanging around as we, of course, we're covering the live events there in Mar-a-Lago. Michael McKee, International Economics and Policy Correspondent here at Bloomberg, and Michael McKenzie, Rates Reporter at Bloomberg News. Let's talk a little bit about Boeing, because that is certainly on our radar. And it's certainly a stock that's on the move.
In so many ways, by the way.
You like that? Oh, you like that?
Yeah.
Yeah. All right. So let's get to it. We've got a new CEO. You know that. It's his first day on the job. He sent a memo to Boeing employees and basically said he's going to be pretty transparent. He plans to walk the main factory floor in Seattle. So what does that really mean? Is it exactly what Boeing needs? Bloomberg Intelligence Senior Aerospace, Defense, and Airlines Analyst George Ferguson joining us from BI headquarters in Princeton, New Jersey. Our thanks to you, too, for sticking around. It's been a little bit of a busy day. George, the Boeing new CEO, not a stranger to the aerospace world. His statement about walking the factory floor, it feels like it's a jab to his predecessor, Dave Calhoun.
Not the only one.
Yeah. So, I don't know. How do you see it? He's got a big task, it feels like, ahead of him.
Yeah, a very large task, right? And so even the problems of Starliner, we all see the Starliner capsule, I guess, sort of stuck in space right now. Just reminds you of how thorough the challenges are at the company. I do think they need someone who's going to focus on manufacturing. I do think walking the floor is important. He's an engineer. He's been in the manufacturing business at Rockwell Collins. So I think he does, he brings a lot of great skills to the job, and I think getting to the root of the cause, like we talked about at the factory floor, is the right approach. There's a lot to do, though. Definitely.
And in Seattle, I mean, this is a company that moved to Chicago, its headquarters,
I never
right?
got that.
Then they moved to Virginia. Did they move to Virginia? And now he's going to move them back to Seattle, undoing what Dave Calhoun did, or what Dennis Muhlenberg did, or James McNerney. Who screwed this up? Stonecipher, Condit, Schrantz?
The list is so long. I know. Does it matter? Let's look forward.
All right, so looking forward, what does he really need to do to a company whose stock is down 50% over 5 years, while the S&P is up 81%, the industrials are up 64%, and even Airbus is up 6%?
Yeah, I mean, we were starting to talk about that already, but Yeah, I think he's got to give the employees a bit of a shot in the arm too, right? He's got to. I'm sure morale is a little bit rough at Boeing, and I think he needs to make the employees understand that he really cares about the details, about the manufacturing details. That he thinks they can be successful. I think part of that came out in his memo, right? He said our customers want us to be successful. That's a great place to start from. So he's got to get in there and reinstill some confidence. But at the same time, I think they have to be humble about, Boeing has to be humble about how they approach these different businesses, right? I think they got to the point where they thought they were the smartest people in the room all the time. I'm going to go back to Starliner, right? This is a company that was, around during the Saturn V, launching of initial rockets, right?
The mixed natural gas September futures settle at $2.12. Diesel September futures settle at $2.35. Gasoline September futures at $2.39.
Take over. Starliner is 7 years delayed, $1.6 billion over budget. They put 2 astronauts on the ISS space station June 6th. They were supposed to stay for a week. Now they probably won't come back until February of next year because Starliner doesn't work.
It's a sign of how hard things have fallen at Boeing. But the U.S. government needs 2 suppliers to do this, right? So, look, today's a rough day for Boeing. I believe it won't be rough, forever. They will recover. You'll have rough days for SpaceX too, although SpaceX has done a really impressive job of coming up, up the curve on space, really sort of accessing it cheaply, accessing it well. But again, if you're the government, you need redundancy. You want the ability, like in this situation, to bring someone else's product up and, fix an issue. And I think, to be fair on this...
And NYMEX WTI crude September futures settle at $76.19 a barrel, which is up 96 cents or 1.28% on the session.
Whether or not Starliner is suitable to bring these astronauts back out of orbit. And you can understand if you're NASA, you're a little bit concerned about Boeing quality lately. You don't need a problem, right? So you get sort of the challenges in that discussion negotiation. Sorry.
Hey, real quickly, just got about 30 seconds. I mean, it's a manufacturing fix, it's a reputational fix, it's finances, it's a full plate. Just really quickly, what's the toughest task here, George?
I mean, I think the manufacturing, right? Because I think if you get the manufacturing design in order, everything else will follow for you. And so that's why this gentleman's here, right? That's why Kelly's there. That's the fix to all the other issues. Fundamentals. Didn't you say that? Fundamentals?
Yeah, fundamentals matter, right? That's for sure. Hey, listen, thank you. You keep us up to date on what's going on at Boeing. The stock is up 3% in today's session, but as Matt reminded us, I mean, what is it down like 60% this year? 35%. Forgive me, 35% here in 2024.
I like to look over the last 5 years. I use the comp function on the Bloomberg COMP, and it compares the stock against the index, its benchmark, and I throw in Airbus there and see that Boeing is massively underperforming all of those.
Well, you know the reason why. It's been several years of problems. George Ferguson, thank you so much. Senior Aerospace, Defense, and Airlines Analyst at Bloomberg Intelligence out there in BI headquarters in Princeton, New Jersey. All right, guys, let's get to World and National News. For that, we toss it over to Amy Morris in D.C. Hey, Amy.
Hey, Carol. Former President Donald Trump taking questions still at that news conference in Mar-a-Lago. He says his campaign has agreed to 3 debates in September and that they're prepared to debate on September 4th on Fox, September 10th on NBC, and September 25th on ABC. He says they're just waiting for confirmation from the Harris campaign. Now, Vice President Harris and her running mate Tim Walz are continuing their battleground state blitz today in Detroit. Now, she has yet to hold a news conference since she launched her campaign nearly 3 weeks ago. Little something happy for you now. California Panda Day. They're celebrating the public debut of their 2 giant pandas at the San Diego Zoo today. The Summer Games in Paris continue. U.S. has the most medals with 95. China has the most gold at 28. Global news 24 hours a day, whenever you want it, with Bloomberg News Now. I'm Amy Morris. This is Bloomberg.
how it has penetrated pretty much all sectors, including music. AI can write music, compose music. How do you see AI changing the landscape in fashion?
No, AI definitely helped. When I did the jewelry, I used the AI, helping me to give some idea, but ultimately you still have to do a lot with it. It just give you very superficial ideas, and but at the end you still have to customize and how to really make it and do that. I do not think that AI and the technology can replace the human mind at this moment.
Yeah. Are you concerned one day we won't be able to differentiate designs by AI and designs by an actual designer?
I don't know. For me, I see that when a designer doing is the spirit, is the heart that the computer don't have.
From the beating heart of global finance, economics, and politics, and wherever newsmakers are moving markets, Bloomberg brings you conversations that allow for deep discussions and important insights. What do you think the future is for inflation? Is this a new normal? Are markets too optimistic? How do you worry about the things that are outside your control? How does the current fighting completely stop? I'm Francine Lacroix, and this is The Pulse, every weekday at 9 a.m. only on Bloomberg.
The biggest risk in property and casualty, is that now climate change?
Yeah, so absolutely. When you look at natural catastrophes, the number of events has significantly increased, and not only the very big events like hurricanes, but also what we call secondary perils, so wildfires, floodings, and drought. And this leads to the fact that you have far more events and therefore a much higher cost of all of the natural catastrophes.
How do you really assess the risk of climate change? Because how can you possibly know whether there's going to be a hurricane or a flood? Is it just based on the past or the projection of the future? Or how do you do that?
Since the dynamic has changed, we need to also look forward. And what we do a lot, we work a lot with scientists who understand what the warming of the Earth and climate change will mean for the question of taking risk. And secondly, we take much less risk than we used to take because we have to be careful.
So let's suppose there are a lot of hurricanes. Is that good for property and casualty insurers or not? Good because people say, well, there's going to be more hurricanes, I should buy more insurance, or not good because you got to pay a lot of claims?
It depends. I would say it's good because it creates the awareness to do more prevention. What we see today is that, as I said earlier, there is more events. It becomes more and more difficult to insure, and therefore we work a lot with our customers around preventions.
It's the world's second largest economy with a growing influence in global affairs. But geopolitical uncertainties, deflationary pressures, and questions about foreign investment linger. Bloomberg, the China Show, brings you the unmatched expertise you need to keep track of breaking news, in-depth market analysis, and the most influential newsmakers in and around China. Bloomberg, the China Show. Weekdays at 9 a.m. Hong Kong time, right here on Bloomberg. Context changes everything.
It's 2:40 on Wall Street. We do check markets all day long here at Bloomberg. We've got the S&P holding very close to session highs, 54.13 where we stand right now, up 2.2%. Dow Industrials advancing 640 points, up 1.6%. The NASDAQ Composite Index up 442 for NASDAQ, a gain of 2.7%. Russell 2000 Index of small cap shares up 2.2%, the 10-year at 3.99%, the 2-year 4.04%. Gold right now up 1.7%, 24.24 the ounce. West Texas Intermediate crude up 1%, 76.01 on WTI. A major move for Bitcoin right now. Bitcoin up by 8%, Bitcoin at 59,571. Under Armour shares surging 18.2%. Under Armour out with results that topped analysts' expectations. It's also raising its guidance as the athletic wear brand shows signs of improvement under the returning founder, Kevin Plank. Again, Under Armour right now up by 18.2%. Recapping stocks higher, S&P up by 2.2%, the 10-year 3.99%. I'm Charlie Pelleton. That is a Bloomberg Business Flash.
All right, you kids. Do I have to turn this car
you're done?
around?
You're done? Okay.
All right, Charlie Pellet, thank you so much. Hey, listen, we want to get to a stock. It's been the #1 decliner in the S&P 500 and NASDAQ 100 today. We're talking about Warner Brothers Discovery plunging to its lowest ever. Parent of CNN and TNT posted a second quarter charge of $9.1 billion after writing down the value of its traditional TV networks. This came after the closing bell yesterday. The company, as you know, created back in 2022 when Discovery acquired Warner Media. And it's concluded that cable channels like CNN and TNT are no longer worth what they were when that $42 billion merger was completed. So let's get to it with Bloomberg Intelligence senior media analyst Kevin Neer. He's joining us here in our Bloomberg studio. WOA, it's never good.
Yeah. Not
when
good.
You've got
Not from Warner Brothers Discovery, is it?
When you've got a more than $9 billion write-down, what the heck happened, and why are we here?
Yeah, it's a great question. I mean, it's certainly not just Warner when we're talking about traditional media in general. It's a very transitory period. But you're right. I mean, that $9.1 billion write-down, that's from the TV networks, right? That's essentially saying that, we don't see that this is valued in line with what our market cap is, and we had to take this down in the book value. They're obviously trying to scale up their streaming, but the TV networks are still the bread and butter. That's where they make the majority of their profit, and it was a big miss. Advertising down 10%. There's pressure on affiliate fees, obviously, with cord cutting, and then on the studio side as well, it was weaker than we expected. So the stock is noticeably down today.
I feel like there's something I'm missing here.
Which part?
Like John Malone and these corporate titans are destroying shareholder value for a reason. Like, when Zaslav came in and said they'd already made Batgirl, right?
Right.
And he just said, I'm going to erase this content. And he did it with Coyote versus Acme, and he did it with a lot of content that you would think is, even some Sesame Street episodes were just disappeared.
Right.
And the reason was he gets some tax benefits from just dumping this content that they paid so much to make. Is he just trying to shrink this company? I mean, they borrowed what, $40 billion to buy this from AT&T, and now the market cap is like $18 billion. The stock has lost 70% of its value. Does he get paid more as the stock does worse?
Yeah, I can't speak to his pay, but
well, you know that he got paid $50 million last year.
Right.
And what did he get when he came in?
It was some crazy benefit. It was hundreds of millions.
230 million?
It was quite high.
So the purchase, bad deal.
It's tough to say it's a bad deal at this point. I mean, we have to zoom out a little bit and think again about, the combination here. Obviously, all of media is facing these challenges. It's not just Warner Brothers Discovery, but,
so when
across the board.
Then why did they do it?
So
Discovery was doing just fine.
No offense. We've been talking about ESPN having issues for a long time, right? And then it seems to have kind of righted, maybe as it's moved more into streaming. But having said that, 2 years ago, we knew the model was changing.
Right.
Why would you do this then?
Right. I mean, the model has changed, and also Wall Street's attention has changed. Back then, people were focused on subscriber growth, and people were spending to grow subscribers, and it was all fine when that was the case. But after Netflix posted their first subscriber decline, everyone went, whoa, hold on, maybe subscribers aren't the metrics that we should be looking at. This isn't the North Star. We need profit. We need profitability, and it's taking longer than we thought for these streaming services to scale up. They're starting to inflect, but it's taking time.
He said yesterday on the call, am I disappointed that the trends in the linear business haven't been a little better? There has been talk about a recovery a year and a half ago. It hasn't really happened. It is what it is.
Brent crude futures settle at $79.16 a barrel, up 83 cents or 1.06%.
Investors' concern is on the lack of visibility, right? I mean, this whole NBA debacle has been really a head scratcher.
Let's get into that for a second.
Yeah.
So for those who don't know, how did they lose this?
It's been quite the saga.
They had NBA games, which is the kind of thing that it doesn't matter where it is. If you like
Destination
basketball,
viewing,
you're going to tune in.
That's right. You're going to pay for it. You're going to do whatever you have to.
Exactly. And they had an opportunity to negotiate for a renewal exclusively. But if you just look at sports rights, not just the NBA. I mean, talking about the NFL, those rights doubled, right? So it's a cost problem. Everyone across media is trying to cut costs right now. Warner thought they could get for a smaller package maybe, but the NBA wanted a broadcast partner, NBC. They wanted to stick with ESPN, and then they're bringing in Amazon for the streaming service. So it's just been a back and forth right now.
If they hadn't lost that, would we still be having some
According to
kind
the
of conversation
information,
about Warner
TikTok
Brothers
is to
right
allow
now?
Amazon
Would it have been
purchases
a
through the
smaller
TikTok app.
Yes, I think so. I mean, again, the quarter is the quarter. But really, it's the question of what's going to happen with TNT, with this big hole in their programming schedule. And they can go after some other sports rights, maybe the UFC, those renewals are going to come up soon. But it's a tough position that they're in, and now it's going to court.
David Zaslav also said on the call with investors yesterday, 2 years ago, market valuations and prevailing conditions for legacy media companies were quite different than they are today. This impairment acknowledges this and better aligns our carrying values with our future outlook. Is he right? Were they that much different?
Yeah,
You follow the industry.
It's a great question.
Also from another number of people that near the end of the pandemic, we thought this was going to be okay, or these assets were going to be worth more.
Right. I mean, there's just so much content out there now. You got to understand. I mean, engagement is really where management wants investors to look at. Is where people are spending time on our platform. They're going to continue to pay for our.
We're a household that's whittling. We just canceled something yesterday.
We're
we're not really using it. We had it for, Curb Your Enthusiasm or something. Sorry. But
of course you have Curb Your. By the way, that's HBO, which is like an amazing property. They changed the name of HBO Max to Max. That's like if you had Disney Plus changing the name to just Plus.
I know.
But why would they do that?
And consumers wonder why they can't find anything.
But my point is, we're looking at it, this huge menu, and we find ourselves maybe looking at a couple of things. I don't know that I need that monthly every month. You know what I mean?
You're right.
You just get to a point where you start to kind of curate, if you will, or just say, do I need this extra cost?
A lot of people are thinking about it that way. Streaming services, almost all of them have announced or implemented price increases this year. And then those that haven't, Netflix is the big standout. They're cracking down on password sharing, right? So it's becoming more expensive to stream, and the play is really advertising, right? They keep a low entry cost for advertising because they want people to sign up for that tier.
Matt and I were talking in the newsroom. I mean, Kevin, wasn't Discovery kind of a nice little business?
It was.
Very niche.
It was.
But very clear in terms of what it was all about.
Very low cost programming, a lot of unscripted. You think Food Network and HGTV. And again, when we had such a critical mass of paid TV subscribers, it was great. It was a great, healthy business, healthy free cash flow. And it's just not the case anymore. Cord cutting is not slowing down. And the question is just how do we get our content and monetize it in the best way possible?
This has been kind of a cursed asset, to be fair, right? AOL Time Warner was the biggest deal of all time when we were kids, and then they had to write off AOL completely. AT&T came and bought it for half price, and then they sold it to at half price to Zaslav. And I mean, who's going to buy this thing for half price now?
I mean, you make a great point, but I would also point back to, it has some great assets. You mentioned HBO.
It's called Max now.
It's called Max now.
Ouch.
They have a really world-class studio. I mean, this is a company that makes Superman movies, Batman movies. Again, they own a
made Barbie,
video game studio. They made Barbie. You wouldn't have Barbenheimer without Barbie.
I still love Barbie.
The reason we had Oppenheimer, by the way, at a different studio was because the director could no longer deal with this studio.
Chris Nolan was shopping around Oppenheimer.
You're sitting down with Zaslav. We've only got about 20 seconds. What do you ask him? What do you want to know?
What's going to happen after this NBA? Whatever you're doing in court trying to sue the NBA, what's going to happen after that?
He says it's with the lawyers now.
Yeah, exactly.
All right.
With the lawyers.
It's been 10 minutes time now at the top of the hour. We expect comments from Richmond Fed President Barkin, who speaks during the NABE webinar moderated by Morgan Stanley's Ellen Zettner. There's no indication of a text, but there will be a Q&A.
Saturday mornings, I understand you have off.
Yeah, Saturdays is always a day where I power down. So I run at a relative high pace throughout the week, try to wrap things up, and Saturday is a quiet day for me in terms of work. And I start typically by playing tennis with my wife. We go for a swim all year round. After that, have a nice lunch, and then I'm on to a good trajectory for the weekend. And then Sunday, I try to prepare for the coming weeks. But through a weekend, I would send either no emails or very few emails, because I want to drive a culture where all get an opportunity to spend the weekend as they fancy. I think what we do is so difficult, and it takes so much creative thinking to succeed, that if you're always on, always busy, the bandwidth of your reflection is just too narrow. And I generally believe that Monday mornings I'm a better leader than I am, say, Friday afternoon. I also take all my vacations. I generally believe I'm a much better CEO right after a vacation than I am before vacation.
Bloomberg Surveillance covers the latest in global markets and the political events that influence your world. Join Jonathan Farrell, Lisa Abramowitz, and Anne-Marie Hordern only on Bloomberg. Context changes everything. Bloomberg loves earnings.
I know it's like your Super Bowl, right?
I can't wait. It's like opening presents in the morning.
All right, it will be exciting.
Nobody covers earnings like Bloomberg. Now, your company news headlines on Bloomberg Radio.
From Bloomberg World Headquarters, I'm Charlie Pellet. Sources tell Bloomberg Apple is planning a new version of the Mac Mini that will be its smallest desktop computer yet, all part of a broader overhaul of the Mac line with AI-focused chips. Sources say the new model, due later this year, will mark the first major design change to the Mini since it was revamped under Steve Jobs in 2010. Apple right now up by 1.4%. Barclays is removing an EU-era limit on some of its top bankers and traders' bonuses, joining rivals Goldman Sachs and JP Morgan Chase in ditching the cap. The change will allow the company's so-called material risk takers to now earn a bonus that is as much as 10 times their base salary. This according to an internal memo seen by Bloomberg News. That is up from a current limit that restricts certain employees' bonuses to 2 times their fixed pay. Shares of Barclays, they're up by 1.4%. Eli Lilly moving ahead in the race to dominate the red-hot obesity market as rival Novo Nordisk struggles to keep up with demand. Sales of its blockbuster Zepbound were $1.2 billion in the second quarter, smashing Wall Street's estimates of $819 million. Lilly surging now by 10%, Novo Nordisk up by 6.6%. Bumble's shares are down 30.1%. They're on track for their biggest decline on record after the dating company slashed its annual revenue outlook, signaling that an overhaul of the brand's flagship app has failed to reignite growth. Right now, we got Bumble.
So in 5 minutes' time now, at the top of the hour, we expect comments from Richmond Fed President Barkin, who speaks during the NABE webinar, who's moderated in a moderated conversation. No indication of a text, but there will be a Q&A, and we have updated the link on Fed's Barkin's entry in the calendar with the live video if anyone's interested.
Bloomberg Business Week with Carol Messer and Tim Stenevec on Bloomberg Radio and Television.
All right, everybody, this is Bloomberg Business Week. Carol Messer along with Matt Miller in for Tim Stenevec. We're going to get more Business Week in just a moment, but first up, let's get to World and National News with Amy Morris in D.C. Hey, Amy.
Hey, Carol. Donald Trump says he'd rather be running against Vice President Kamala Harris than President Biden. At a press event from his Mar-a-Lago home in Florida, Trump criticized Harris's record on crime and other issues.
Prisons are being emptied out into our country because we have a president that's the worst president in the history of our country. We have a vice president who is the least admired, least respected, and the worst vice president in the history of our country.
Trump also chided the media for not being tough enough on Harris. He says his campaign has proposed 3 dates in September for debates. ABC now posting on social media that both Harris and Trump have confirmed that they will participate in a debate on September 10th. And just so you know, the press conference is still going on with Donald Trump at Mar-a-Lago. Tropical storm Debbie is creeping inland after making a second landfall on coastal South Carolina overnight. The storm has been bringing heavy rain across the southern U.S. all week. It's now threatening floods as far north as upstate New York. We're also learning more about that alleged plan to attack a Taylor Swift concert in Austria. Austrian police detained a 19-year-old suspect who they say planned to attack concert goers at Swift's show in Vienna with homemade explosives and knives. Police say he planned the attacks alone, but was also in contact with 2 minors, including one person who was scheduled to work at that concert venue. The Summer Games in Paris continue. The U.S. has another medal now. Now they have 97. That's the most. China has 71. France has 53. China still has the most gold medals, though, at 28. Global news 24 hours a day, whenever you want it, with Bloomberg News Now. I'm Amy Morris. Now back to Bloomberg Business Week with Carol Massar and Matt Miller.
All right, Amy, thank you so much. Carol Massar along with Matt Miller here in our studio.
What are we talking about?
We're going to talk about Wall Street bonuses. It's a story that's among the most read on the Bloomberg. Last couple of years, maybe not so great for Wall Street bonuses, but it looks like they're about to jump in virtually every sector of the industry.
Yeah, I saw that. Bankers who help companies sell debt may see payouts swell as much as 35%. So basically bond dealers, as deals pick up, capital markets rebound from multi-year lows. This is according to a report Thursday from compensation consultant Johnson Associates. Equity underwriters, so basically stock sellers, are close behind them with gains of as much as 30%. So you're starting to see in some pockets of Wall Street bonuses climb. I also noticed that hedge funds are really fighting to get people. Blasny is reportedly paying.
Love this story.
Yeah, a couple of guys, $50 million apiece. Peter Goodwin, coming from Point72 Asset Management, and Citadel's portfolio manager Alberto Mann. This, according to people familiar, they declined to be identified because the details are still private, but $50 million apiece. And then a couple of other guys, David Corwin and Jake Corey, as well as David Avery, are reportedly also getting millions of dollars to come over to Blasny. So the interesting thing here is that there's apparently a shrinking pool of really talented traders because the big banks used to have these prop desks where they would train a ton of these people to do it. And now those prop desks are gone. And so you got to pay up for this talent.
Yeah, so big demand here, right, to be able to do that. So that's just, man, could you imagine? Hey, come on over here. Walk in the door.
$50 million.
Shortly expecting comments from Fed's Barkin. Again, there is no indication whether there will be a text or not from Barkin in just under a minute's time. We'll see in around 50 seconds.
So you got Millennium, Citadel, tapping to do this, as you said, a limited pool of talent. All right, folks, that's going to do it for this hour of Bloomberg Business Week.
Market's still up.
The market is still up.
2.25% on the S&P 500. Yesterday we had a turnaround because of a bad bond sale. Today we had a bad bond sale, but we're off to the races.
Maybe it's the different duration. Who knows? Anyway, stick around, everybody. This is Bloomberg.
Get your fixed income fix. Watch Bloomberg Real Yield every Friday right here on Bloomberg. Context changes everything. The countdown is on. Everything you need to get the edge at the end of the market day. This is the close.
The economic angst subsides and the market rally resumes. From Studio 2 here at Bloomberg headquarters in New York, I'm Romaine Bostick.
And I'm Alex Steele. I cannot keep straight. Downtrend or uptrend? Uptrend today.
Well, wait till tomorrow because it might be the exact opposite of what we have today.
What I'm saying. All right, let's take a look at the S&P. We're up over 2%. We've moved the most since January of 2023 on the S&P, so it's a significant move to the upside. The NASDAQ also following suit here, the highest level since earlier in 2024, and the 10-year yield is up by 5 basis points. That's what kind of you need to know. You have stocks up, you have yields up, everything feels okay, Romaine.
Yeah, but how does it feel in the economy? Because it really was the delicate state of the labor market that had really been the driver of the price action for the last few sessions, and today really is no exception. Jobless claims out this morning, and those initial applications for U.S. unemployment benefits falling the most in nearly a year, and that did alleviate some concern that jobs growth had been cooling too fast. Today's stock market gains close to erasing all of the losses from earlier this week. Stay tuned as we count down to the close. Treasuries, though, moving in the opposite direction, holding losses for a third day following that jobs data at 8:30 a.m., a sell-off that accelerated at 1 p.m. After demand for the Treasury sale of 30-year bonds proved a bit paltry, benchmark 10-year yields now back above 4% in a continuation of these wild swings in yields this week as investors really try to get a better hold of economic conditions. Now, we did get a few more glimpses into those conditions over the past 24 hours with some relatively disappointing earnings from energy drink maker Monster Beverage, from the food service distributor U.S. Foods, and from Burger King operator Restaurant Brands. Earnings there weren't awful, but they did continue to reflect malaise among would-be diners.
We do see some pressure on consumers' overall financials. There are some things that are going up in their budget. Things like rents or insurance payments are putting some pressure, and that's causing consumers to be more choiceful.
And I was the CEO of Restaurant Brands, Alex, and we've kind of heard this from a lot of executives on this program here. They're still making money, but their customers aren't spending the way they used to.
Yeah, so if your top line goes off, what are your levers then to help your margin? That's also a question that I have in the quick service restaurants. So here is the story that Romain was just talking about, and it's illustrated so you can really see those jobless claims. It's the S&P mini futures. That is the white line, and then the blue line is just the straight up generic 2-year yield. This is when you got jobless claims. I don't think I've ever seen a move like this in equities or in the bond market on jobless claims, no less, or at least that's what it's being attributed to. 1 o'clock, you get the 30-year auction. Didn't go anywhere. It was kind of for most investors, but yet we still grind higher. It was interesting. PIMCO actually coming out and saying it could be a bumpy road, but they're starting to add to those Treasury positions again with that defensive kind of mindset. So it doesn't feel, Romain, that the angst is truly over yet.
Absolutely. Here, let's keep it going here as we count down to the closing bells. Bryce Doty joining us right now, Senior Vice President and Portfolio Manager at SIT Investment Associates. And Bryce, I'm going to pick up on something that Alex just kind of hit on here. I have no idea the last time you saw this type of a market move off of a weekly jobless claims number. And I'm not just talking about in the equity space, but you even see that reflected in fixed income as well. Were you up trading this morning?
Well, you know, you make a good point. It is significant to note when there's a hypersensitive market move to a really mundane number. It tells you that things are really precarious. Otherwise, it would never have done anything like that. What we have done to take advantage of this change in volatility is just use some derivatives. So we have a certain group of portfolios or strategies that where we hedge the duration. Mm-hmm. We use that with Treasury futures or options on futures. And the options, flipping between the two is really beneficial when vol changes. So when things are calm, like today's a calm day, you add some options knowing that, just as you mentioned earlier, just wait an hour, wait a day, and there'll be another surprise in an overreaction to another mundane number like claims. And then after that VIX or that vol spikes, then we just flip right back into the futures.
How confident are you? I mean, just based on everything that's transpired let's just say over the last couple of weeks, coming out of those earnings last week, the jobs report on Friday, and everything that's transpired this week, did that give you any confidence in extending duration, or did it have the opposite effect?
The main thing that the last 2 weeks worth of data has done for us is convince us that the curve is going to normalize. So we think that the Fed is going to steadily move towards lower rates. Don't know exactly how far, what the magnitude is going to be, but we just need to know the direction. And what that's going to do is it's going to mean that you want to be positioned in the middle of the yield curve. The 3 to 6 year will be the best part. The 30-year is going to be pretty precarious. It's not done well over the last year. Yields are actually up on the 30-year where everything else is the same or lower. Mm-hmm. So that's what's really convinced us is a sustainable trend, a sustainable normalization of the curve in the last 2 weeks.
So what does that then, Bryce, mean for the corporate credit market, right? Like, it doesn't feel like the corporate credit market has responded in the same way that the Treasury market has, or even the VIX has, to whatever kind of volatility spike and growth scare that we're looking at.
Yes, for sure. The corporate bond market has yield buyers. You know, there's a whole generation of bond investors who have forgotten what that even means. When yields get to a certain height or point, people are like, hey, for that company, for that BBB rated company, I need 6% yield to compensate me for that 10-year default risk. Treasury yields could be 4, they could be 5, they could be whatever. And the yield buyer will be, I still need 6%. You know, so Treasury yields might fall and corporate bonds won't keep up. because if anything, the decline in Treasury yields is happening because of a fear of worsening economic conditions. That's not good for default rates. So what we're doing in the belly of the curve is we're lightening up on corporates because they're going to underperform. They won't keep up. And we're going to more of government agency mortgage type securities, specifically ones that will do really well if mortgage rates come down and prepayments pick up. We think that those are going to add a lot more return, as well as protect you from downside against default risk.
So does that setup imply that we're going to be headed toward a recession or increasing recession odds, or just decreasing the Goldilocks soft landing scenario?
What makes the difference for us in terms of whether there's going to be a recession or not is credit and credit availability. Banks were tightening credit like mad a year ago, March, when banks were failing. Yields coming down has bought them time, given them breathing room. Their loans are not so underwater now. So from a capital constrained perspective, it's not as bad. Ironically, as the consumer struggles, and they are, banks will actually be easing up on credit. They'll be allowing more credit. I don't think I've ever seen that happen in a down cycle before. But it might be just enough to keep us from going into a full-blown recession, because it's a credit crunch that really puts an economy over the edge.
Yeah.
And we don't see that happening this time.
Hey, Bryce, great perspective. Really appreciate that. Bryce Doty, Senior Vice President and Portfolio Manager over at SIT Investment Associates. Breaking news for you here, Romaine, concerning Delta. So they're saying that the third quarter direct revenue impact from their outage a few weeks ago related to CrowdStrike and Microsoft will cost them about $380 million, and they are pursuing legal claims against CrowdStrike and Microsoft.
Yeah, interesting, too, to look at some of their projections going forward and maybe a potential effect when we get to that next earnings report, whether they can recoup some of that money, I guess remains to be seen. All right, a lot more coming up here on the show, including a closer look at those weight loss drugs, the race for GLP-1.
Fed's barking on the wires now, says most hurricanes or tropical storms don't affect the macroeconomy.
The gap. We're going to talk about Eli Lilly's latest results here and their efforts to increase production.
Plus, you got shares of Under Armour soaring today.
So just seeing a comment from Trump as well. He says the president should have some say on monetary policy.
Potentially. A new report expecting Wall Street bonuses to jump as much as 35% this year. That would be a welcome reprieve given the last couple of years. All that and more coming up in just a bit. This is The Close on Bloomberg.
It's a multi-trillion-dollar industry. We'll show you what's happening in ETFs like no one else. Bloomberg ETF IQ, Monday on Bloomberg.
Morning, this is Bloomberg Daybreak Europe. I'm Tom McKenzie in London. These are the stories that set your agenda.
Taking you from the U.S. market's close to the overnight session in Asia. We'll walk you through what you need to know to kickstart the European trading day. Live from our European headquarters, we bring you the day's top market-moving stories, unmatched expert analysis, and on-the-ground reporting from across the continent. Tune in every weekday at 6 a.m. London.
Fed's barking says, what I hear from folks on the ground in the labour market is that people are cutting back on hiring but not firing.
Bloomberg covers the world with unmatched reach and resources. From more than 120 countries, the moment news breaks, 24 hours a day. Bloomberg.
So again, Trump says that he thinks the US presidents should have a say in Fed actions.
Earnings season is here.
You're seeing back-to-back billion-dollar-plus quarters.
The forward indicators were so positive.
Bloomberg is first to break the numbers.
Texas Instruments out, folks.
Goldman Sachs taking a look at Mattel.
There is something for everybody.
With the smartest insights.
People are whitewashing AI.
Wallets are under pressure.
We are committed to EVs. They're going to happen.
Earnings season in full swing.
We will have full and instant analysis.
Continuing coverage on Bloomberg. Context changes everything.
Parkin says no hiring and no firing. That's what we see in the data, and from here it could go either way.
Breathing their sigh of relief today. S&P around the highs of the session. That trigger was U.S. initial jobless claims declining by most in nearly a year, alleviating some of those concerns. The labor market's cooling too much too fast. Today's data is better. The Fed, though, still has to avert a downturn, and a large part of that depends on how long corporate America continues the phenomenon of labor hoarding. Joining us now from more is Bloomberg's Amara Omokwe. She has more on this. Amara, how do we know that companies are actually hoarding labor right now?
Well, because what we've seen as the Fed hiked interest rates to the highest level in over 2 decades is that employers have responded by pulling back on openings, slowing the pace of hiring, cutting back on workers' hours, but they're still holding on to their workers. We haven't seen a spike in layoffs, which is kind of counterintuitive to what you would think you would see as the economy slows and as things cool down. So that's a sign to us that employers are wanting to hold on to those workers that they worked really hard to get earlier in the pandemic recovery. As we came out of the pandemic, we had a lot of labor shortages, and employers really had to work hard to get those workers. So it appears that they're really wanting to hold on to them now.
Are we seeing any evidence, though, of a significant slowdown in wage growth for those workers that are already on the books?
Parkin says job growth has settled down, but still adding jobs.
Compared with earlier in the pandemic recovery. And that's just another sign of how employers
There's a lot more labour supply than thought a year or two ago, again according to Parkin.
One of the big questions for the Fed as it looks to keep the labor market strong is how long are we going to stay in this environment where there has been low firings and also low hirings.
Right, and it feels like when the top line starts to slow, as the economy kind of slows, how much cost cuts have these companies already struck
Parkin says the math of that suggests that the unemployment rate goes up.
Like that last lever to pull.
Exactly, and that's one of the questions that I hear economists talking about now, right? Layoffs are still low. If you look at the trend, they're still kind of in line with where they were pre-pandemic. But if employers keep on feeling like things are slowing, if we see consumer spending continue to slow, then the question becomes, do they feel compelled to kind of use a different strategy than what they've used so far and start upping the pace of job cuts?
When we talk about
Parkin says what would make you more worried is if job growth started to disappear.
Soft or whether it's hot, and how that feeds into the reaction function by the Fed, and really for our purposes here, Amara, obviously the reaction function by the markets. Does it matter that some of this softness isn't actually going to be reflected in the official data?
I think so. I actually asked Chair Powell about this at the last press conference, and I said, look, are you considering the soft data additionally, in addition to some sort of the hard data on the unemployment rate, on wages and those sorts of things? And he said, yes, we actually do look at the beige book. We do listen to what the regional Fed presidents are saying about what they're hearing in their districts. And there are signs in the anecdotal data that things are slowing and that things aren't necessarily as good as the top line data would suggest. So I think Fed officials definitely do take that into account when they're considering how they should be setting policy in the months going forward.
All right, Amari, always great to talk to you. Amari Omokwe there over at Bloomberg News, a closer look here at the labor market. We've been talking a lot, Alex, of course, about the softness in job creation. I am a little curious about wages specifically here because we've seen this phenomenal wage growth for people at the lower end of the spectrum. But apparently, if you're at the higher end of the spectrum, you're going to see some wage growth this year as well. A story on the Bloomberg terminal saying that Wall Street, you should expect some pretty significant bonuses this year after 2 years where they kind of got a little shafted. 35% is kind of what they're tracking right now, though most of that looks like it's going to go, or the bigger percentage of that's going to go to those folks in debt underwriting. If you're in retail banking, you're probably not going to get much anything.
Yeah, that retail banking doesn't look so good. But there's a great chart in this, which you guys should check out. It's debt underwriting at the high end could be as much as 35%. Germany, Spain, retail commercial banking, negative 5% to flat. Equity underwriting, though, still good, 20 to 30% there. Equity sales, 10 to 15%. Not bad, not bad.
Yeah, wealth management, not doing too bad in hedge funds here, but it's kind of interesting too because we talk, I mean, obviously we know a lot of these folks, a huge chunk of their total compensation comes from these bonuses here. So to have 2 down years like that, I'm sure it had to hurt a lot of folks. So this will be welcome news. And we always do the parlor game here, of course, being in New York. These bonuses have a real economic impact here in at least here in New York, where people do spend a lot of money. They go out and, I don't know, buy Ferraris or third homes or whatever. Aren't you shopping for a Ferrari? Didn't you mention that yesterday?
No, you're the one that wants the Ferrari.
I did.
He's the one who's looking for that one. Parking on the streets in New York, that kind of thing?
Oh, yeah, that's perfect. Yeah, what better place to park a Ferrari than on the streets of New York? All right, when we come back, we're going to talk about Disney, the streaming service. Actually may be thriving, but some analysts are telling investors that focus on the theme parks. That's where the weakness is. We're going to talk to one of the analysts behind one of the big calls of the day. That's coming up next on The Close on Bloomberg.
I'm Alex Rodriguez. I'm a former New York Yankee and played professional baseball for over 20 years. Almost that entire time, I was thinking about business.
And I'm Jason Kelly. I've been a business journalist at Bloomberg for more than 2 decades. And across my career, I've covered everything from the Olympics to Wall Street.
From Bloomberg, this is The Deal. Each week, you'll hear us in conversation with business icons.
This show will explore deal-making across sports, media, and entertainment.
This is very fancy for a podcast.
If I knew what it was going to be, I'd have put everything I had into it.
I get asked more about our relationship than I do my wife. You know what I'm saying?
This is a show where we talk with big-time athletes and executives about the wins, the losses, and lessons learned along the way.
This show is called The Deal.
The Deal?
The Deal.
The Deal.
That deal.
The Deal.
Huge deal.
Who dug this up? What are y'all in trouble?
Good morning from our world headquarters in New York. I'm Manus Krennic.
And I'm Danny Berger. Let's set your agenda.
Bloomberg Brief delivers the market news, data, and analysis you need live every weekday at 5 a.m. Eastern. Bloomberg. Context changes everything.
Fed's Barkin says, for me, the case for lowering in July would have been either absolute conviction on the labour market, it was on the precipice, or if you thought you had inflation under control. So again, that's Barkin speaking in hindsight. For me, saying that for me, the case for lowering in July would have been either absolute conviction that the labour market was on the precipice, or you thought you had inflation under control.
Bank of America, a move to underperform, with the analysts saying the energy drink category, quote, ain't what it used to be. The pace of volume growth in this sector has started to erode with no signs of near-term recovery. The price target also being cut just by about half. Nevertheless, the shares bucking that higher by about 0.6%. Next up, let's stick with Bank of America because they have another interesting call out today, this time on Top Golf. A downgrade to neutral with the analysts expecting same venue sales to slow this year. And he sees a difficult outlook for corporate events as well as businesses continue to cut some of that event spending. The price target there swinging down to 13 from 18. The shares down by about 3% on the day. And let's take a look at Intel, losing another buy rating, this time at Mizuho, which cuts to neutral. The analysts, remember, had upgraded the chip maker back in November on hopes for new AI and data center products. Today, he's telling investors we were wrong. He says Intel continues to lag its peers and continues to lose share in all of its key markets. The shares, though, gaining on the day, up by about 6.5%, and those are some of our top calls. Let's now turn to one of the most talked about companies of the week, and that is Disney, a downgrade to neutral from buy over at Research Partners. The analyst says slower consumer trends for the happiest place on earth may have investors feeling blue.
I like that.
David Joyce joining us right now, senior analyst covering media over at Seaport Research Partners, the analyst behind that call, we should say. And David, this was an interesting earnings report because, of course, everyone was so hyper-focused on what was going on with the streaming and entertainment business. I think what happened at the parks business caught a lot of folks by surprise. Is this just kind of a one-off for the parks business, or should we expect more trouble over the next couple of quarters?
I think we're probably going to be in a holding pattern for the next few quarters on the parks. We really had a few items hit the shares of Disney since they peaked around their annual shareholder meeting. You had the activist in there, and then they dumped their shares, and then you had the former founder of Marvel dumping their shares, and that hit the stock. Then you had Comcast about a week and a half, 2 weeks ago, talking about their theme parks starting to see some issue from the pent-up demand post-COVID to go to parks starting to evaporate. So it's getting into a more normalized period. I think people were still holding out a little bit of hope that Disney was a unique set of assets, and it is. But you do have other commentary coming out of the company that's suggesting that the lower end consumer is tightening their belt, and Disney has really taken a lot of price over the past few years with all of this demand. And then you also have the higher end consumer taking advantage of the strong U.S. dollar and traveling overseas instead of going to the parks. So there's kind of a two-part factor on the parks.
Right. So David, does that mean though, if I can jump in, does that mean, David, that we've hit a price wall here, and does Disney recognize that, and will they change that then when it comes to their parks?
They always have a lot of levers at their disposal in terms of various types of promotions to get you to come and stay for 3 days and pay for 2 or what have you. So they'll try to maintain price, but have some other offerings. But we just think that the with the cost inflation for labor and the rest of the infrastructure, combined with flattish U.S. attendance, and with attendance in China likely down in the short term, we've got attendance in Paris down because of the Olympics taking away some of that travel demand. I think it's a couple quarters of negative operating income growth.
I want to kind of push this forward a little bit, Dave, and talk a little bit more about what's going on in the streaming space. For Disney, the streaming numbers were still pretty good. We got Warner Brothers yesterday as well. Their numbers weren't awful, although they've got a lot of other issues they have to sort out. We're going to get Paramount tonight. And that, of course, is just a completely different story given the pending acquisition here. But what actually do you make of the current streaming strategy they have? And do you think we're going to see meaningful changes to that strategy once this acquisition is done?
Well, at Disney, just to complete the thought on the downgrade, they got to profitability a quarter earlier than expected, and I think a lot of the investors and analysts were expecting maybe $1 billion of profitability for Disney next year, but now they realize that they need to invest more in the user interface and in the technology and the ad tech platform. So you're not going to get that acceleration that hoped for $1 billion of profit on streaming for Disney. Probably still do 600 or 700 million. But as it pertains to Paramount, it is they do have a lot of content. They do have sports content, which helps things. But they do have a smaller platform. They don't have the global platform that Disney has in place or that Netflix has in place. And really, that stock is just driven by the head-scratching corporate actions that have gone on with the control shareholder there.
Hey, David, real quick, will the quarter have any influence on the Skydance deal?
I don't think so. You have the go shop period just about done, I think, for the Skydance deal. There's still a vast disparity between the non-voting shares and the voting shares. And I think you've seen some other potential bidders probably step out of the process. But I think it's still going to take a little while before the fundamental story and opportunity set for Paramount shows through. But I don't think this quarter changes anything.
All right, David, thanks a lot. Really appreciate it. David Joyce over at Seaport Research joining us now. And Romain brought up Warner Brothers. That stock down by about 9%. It was pretty grim. Like, the streaming area did really well, but that $9 billion plus charge of its traditional TV networks how do you come back from that? Like, how do you manage that?
This is a phenomenal. I mean, I'm sure there's going to be a gazillion Harvard case studies about this. You know, I mean, I mean, the write down though. I mean, that's an own goal, right? I mean, they made this acquisition. What was it, like 2-3 years ago? Here, everyone said it was a bad idea to saddle up with that much debt, and it came back to bite them.
I mean, over the past, right? Because I was looking at the 2001. I remember this one. Time Warner merged, right? And you have America Online. Remember that whole thing that happened?
Do I remember? Yes.
Yeah, and then later
that was spectacular. A spectacular disaster.
Exactly. Yeah. And then Time Warner by AT&T for $87 billion in 2018. It like becomes a really big head scratcher of how it got here.
And that was bananas too. The AT&T. It's like they've been looking for something for all these years, and they've never quite been able to find it. And now here we are, kind of back at square one.
Yeah, but at issue though is that even if streaming is doing well, the traditional TV that makes the money doesn't. How do you square that?
I don't know. I would like to know, just asking for a friend.
Yeah, I'm sure. Yeah, asking for a share friend, whatever. All right, coming up, we got a tale of two earnings for the obesity drug competition. Novo Nordisk struggles with supply as Eli Lilly pulls ahead in the GLP-1 race. Is Eli Lilly also taking market share? I don't know. We're going to break that down next. Coming up on the close, this is Bloomberg.
We want to make sure that we're exposed to categories that continue to be relevant to consumers, that we're positioned in categories where we have a competitive right to win.
By strategically adding and shedding assets, General Mills has turned over about 20% of its net sales base in the last 6 years. It's dramatically expanded its pet food platform, starting with the purchase of Blue Buffalo pet products in 2018. That expansion dovetailed with a boom in demand.
Pet in the U.S., pet feeding and treating, is a $50 billion category. It's almost 5 times the size of a category like cereal.
Is this the future of the company? I mean, we so much associate General Mills with breakfast and cereals, human breakfast and human cereals. Are we now going to be thinking about General Mills much more as a pet food company?
I think you'll be thinking about General Mills as a food company where we treat all the members of the family like family.
The humanization of pets is actually the biggest driver of pet food and pet treating growth. It has derivatives in not only feeding, which is the core thing that most households where most of the dollars go against the pet, but treating, and then you start to branch out to things like vitamins and minerals and supplements.
People really love their pets. They want to take care of their pets like they do their family, and it really is a global phenomenon. That's why we recently entered the China market with Blue Buffalo. That's why we bought Edgar & Cooper recently in Europe, because we see the same kinds of trends that have played out here in the U.S. playing out all over the world.
A lot's happening on Wall Street.
I couldn't have been more wrong.
It's going to stay volatile for a while longer.
It's a bifurcated market.
Need to catch up?
This is Bloomberg Wall Street Week. I'm David Weston.
We've got the information and insight.
Year over year, you could start to see some cracks.
It might be overhyped short term, but it's underhyped long term.
From businesses most influential and instrumental.
A lot of the doom and gloom has been somewhat overblown.
If you're not living near the edge, you're taking up too much space.
Bloomberg Wall Street Week, live Friday with replays all weekend on Bloomberg Television and Radio.
DOJ or other authorities
could face bigger challenges.
Britain's next.
It was going to keep Green World Cup. This is a 3
as the economic picture
covering the intersections of Hollywood, Silicon Valley, and beyond.
Stocks around around the highs of the session. Eli Lilly around the highs of the session. That stock moving the most since August of 2023. Reporting sales of their blockbuster weight loss drug Zepbound, $1.2 billion in the second quarter, just crushing Wall Street estimates.
Yeah, and it's kind of interesting. Was this this was less of a demand issue all along, right? We kind of knew this was more about could they ramp up production and get these, what do you call them, injectable thing? I don't know. What are these people taking? It's like a little plastic thing you stick in you. But I guess they couldn't make enough of these things, right? So now apparently they found a way to make that. So I'm still looking at the chart in our story. They still got a long way to go to catch up with Novo, but they're certainly getting there.
My question is is Eli Lilly stealing Novo Nordisk's share? And I don't know if we know that yet, but that's my question.
Yeah, it's a big question, but maybe they're the new share, right? There's not that. I mean, as much as we talk about this, there's still a pretty small percentage of people that are taking this stuff. It's still in the single digits. So in theory, a total addressable market that could be infinite.
Yeah, sure, definitely. I don't know. That's a lot of market share.
Yeah, that's a lot of market share, and of course, a lot of companies vying for that market share. Ozempic, of course, is at the top of the heap. That range is one of the top drugs used to tackle obesity, and it's under threat now, believe it or not, as Alex was saying, from Eli Lilly. It's blockbuster Zepbound. We saw $1.2 billion in sales in the most recent quarter, well above Wall Street expectations, and yes, finally closing that gap with Novo Nordisk lineup. Joining us right now for more insight on that is Jared Holtz, healthcare equity strategist over at Mizuho. And Jared, let's talk about the quarter here. It certainly surprised a lot of people, pleasantly surprised a lot of people here. Should we expect that to continue?
Hey, how are you? Thanks for having me. Yeah, upside surprise in the quarter. We're still looking at a market that is in its infancy stages. This is the second full quarter of Zepbound sales for Eli Lilly. So a big number. This is a drug already annualizing $5 billion just a couple quarters in. And I know you guys were talking earlier about market share and who's taking it from whom. This is a massive market. You know, pretty much everyone on the street believes this will be $100 billion or higher. So I think it's less about market share. It's just more about building out the market, availability of product, being able to manufacture it. All those things I think are, coming into play as we head into the second half here.
So there's room for everyone to play, basically, Jared. Is there a first mover advantage here or no?
Yeah, I think there's a huge first mover advantage. We talk about all the competition. You've got a laundry list of pharma companies and biotech companies vying for position here in the clinic, trying to get drugs to market. But either way, Lilly and Novo are going to have a 4-year head start at a bare minimum here. So yes, it's going to be a more crowded market over the long term. But for every passing day, I think that Lilly and Novo each have, a better position in this market as being first movers.
Give me a sense here, Jared. Well, I mean, what's the end game here? Because I understand. I mean, obviously you have a huge addressable market going from what's now low single percentage uptake right now to maybe potentially above 10% over the next few years if you believe the industry forecast. But at some point, do these drugs evolve into something else, or is this the product and this is only the product?
Well, the product is so multifactorial, right? Like you have the drugs that are designed for weight loss, but on the other hand, there are all these preventative measures that the drugs provide, whether it's cardiovascular health, stroke prevention, heart failure prevention, kidney failure prevention. I mean, the list goes on and on. So I think when we look at this entire landscape of the GLP-1 market, we still don't exactly know what it's going to be. And into next year, I think you're going to hear a lot of analysts start to talk about what if the drugs work significantly well in Alzheimer's disease and other cognitive impairment situations across these populations. Yeah. So we truly don't know what the end market for either Novo Nordisk or Eli Lilly is going to be, but we're looking at massive numbers. And I think it's safe to say that the $100 billion mark that a lot of people have kind of estimated is going to be too low, and we're going to see this market go way higher than that.
Hey, Jared, how much of this is also, the more you get covered by insurance, the more the uptake is, but then the less you're making on each of the drugs? How much does this weigh?
I think pricing for the drug is going to be, of course, a little bit less when it's covered by Medicare and Medicaid, but I feel like both companies would easily trade that pricing offset for volume. To me, this is a volume game. Let's get this drug in as many patients as possible. The results speak for themselves. You're looking at close to 20% weight loss for both of these products. They obviously have huge health benefits as secondary endpoints, and most patients are likely going to stay on them for a year, 2 years, potentially more. So get the product in the hands of the patients and let the market kind of play out over time. But I really don't think the pricing with respect to Medicare and Medicaid is a big deal in the context of what we're talking about.
Gotcha. Volume sales. Got it. Jared, thanks a lot. Jared Holtz over at Mizuho. We appreciate that. That segues perfectly into today's big take, because America's weight loss capital isn't Manhattan, isn't Hollywood. It's Bowling Green, Kentucky.
What?
Joining us now, I know. Joining us now for more is Madison Muller, Bloomberg News health reporter. First of all, everyone should read this piece. It was a really wonderful look at how Ozempic and the weight loss drugs have just totally changed this town in Kentucky.
Yeah, it was really fun going there and meeting people and talking to people who were like, wow, we thought it would have been Hollywood or Manhattan as well, but now the more that we think about it, like everyone we know is on these drugs, our cousins, our aunts, uncles, friends, husbands, like it's just amazing.
Is there a reason? So I saw the percentage-wise, something like 4% of the population or something roughly was the number. Why? I mean, why is that so high?
I mean, to start, so Kentucky as a state has the highest concentration of weight loss drug users. So that's why we kind of narrowed in on Bowling Green as being pretty well representative of the state of Kentucky and higher than other places in the U.S.
Is that correlated with the rates of obesity?
Exactly.
Okay,
yeah. Gotcha. So correlated with Kentucky has very high obesity rates. Bowling Green has high obesity and diabetes rates, and so it makes sense that a lot of the prescriptions are going to this place. There were also a lot of large employers that were covering the drugs in the area, and so that helped with accessibility. Since, I guess since more people were going on these drugs, they've pulled back a little bit because it's just so expensive. But
is there like peer pressure though? Like if all your neighbors are on it, then you feel like, and they're all losing weight, then you feel like I got to get on it too?
I mean, maybe. I mean, I might think so, right? Like I read your article, like a lot of family members talk to family members and therefore it kind of spread. Because of that, is there a supply issue? And you talked a lot about the compound drugs now and sort of the knockoffs. Walk us through that.
Yeah, so I mean, supply issues have been plaguing this weight loss market for over a year now, and across the board, across the U.S., the drugs are difficult to find. That's no different in Bowling Green. A lot of people are struggling to find supply of the drugs in stock. But what's happening is there are these compounding pharmacies, medical spas that are sort of coming in to fill in the gaps.
Medical spas.
Yeah, so the medical spas are selling these compounded drugs, which are like knockoff, copycat versions of the medications. And in Bowling Green, there are a lot of them cropping up to help patients who are, no longer able to afford the drugs or can't find them in the pharmacy. And so that's been a huge part of this like booming Ozempic economy in Bowling Green.
The booming Ozempic economy, is that like, have you looked at the food economy? Have like restaurants sales gone down?
We thought that that's what we would see, but actually like the restaurants are still doing pretty well. From talking to people there, they say they still go out to eat. Food's such a big part of Southern culture, and so they're just eating half of what they used to before and then taking a doggy bag home and saving the rest for lunch the next day.
Okay. All right. Although I'll quibble with Southern culture there. With the family members from the South who quibble as to whether Kentucky is really a part of that. No disrespect to Kentucky.
True.
A great story, Madison Muller on the Bloomberg terminal right now, taking a look at the town in America, Alex, that has one of the highest rates of weight loss drug use, GLP-1 use.
It was a really great article. You guys should definitely check it out.
Yeah, absolutely.
And McKesson, that stock is one of the worst performers on the S&P, so let's stay with that theme for just a second. It's a healthcare distributor, and their results were really weighed down in part by supply chain shortages of weight loss drugs.
Weight loss drugs, yeah. And it's interesting, too, because the shortage, just to be clear, the shortage isn't necessarily the drug itself. It's the injection mechanism, right? That was my understanding, that you can make the actual chemical that goes into this, but it's the delivery method that is holding things up.
Well, also, I think it just raises the question, too. This is like a structural shift in society, right? It's like a structural shift that we're using these drugs, but it's still going to be a cyclical market based on the supply chain issues or whatever we're dealing with. And as an investor, how do you deal with that?
Well, I think it's going to be an onslaught. I mean, there's a lot of people sitting on the sidelines, including, present company included, who's just We're basically waiting for all the guinea pigs to, like, make sure no one drops dead, and then, maybe we'll all decide, hey, I want to lose 20 pounds and look a little bit better.
Right. So then the point is, like 11% or 12% down from McKesson? Is that justified in that environment when Remain's waiting? I don't know.
I think a 12% drop. I think you're going to see a snapback at some point pretty quickly when people come to their senses here. Still interesting moves, and I love the phrase either you or Madison used, the Ozempic economy here. Coming back, a closer look at the state of the consumer, a closer look at the turnaround over at Under Armour. A huge move in the shares today, one of the best days in years. This after better than expected earnings results is our stock of the hour, and it's up next. This is Bloomberg.
Good morning. This is Bloomberg Surveillance.
Welcome back to the opening trade.
This is Bloomberg Technology.
This is the Asia trade.
You're watching the close.
Welcome to Balance of Power.
This is Bloomberg. Welcome to the world of decentralized finance.
We thought we'd take a look at Bitcoin versus the S&P 500.
Bloomberg's covering all things crypto, the people.
A tectonic shift emanating from Washington.
It's really a tale of two cities in crypto.
Crypto shouldn't be partisan.
The transactions.
Really a record-breaking moment.
Crypto VC is back.
And the technology.
It's really the beginning of a global on-chain economy.
And if America doesn't embrace it, we're going to be left behind.
Bloomberg Crypto, Tuesdays, only on Bloomberg.
People ask me all the time, what is the key to being a really good investor? And I tell them it's to surround yourself with and work with the best investors you can find. On Bloomberg Wealth, I'm going to take you to meet the greatest investors in the world, the people that I would like to have managing my money.
If I had invested with you, which I wish I had, what kind of rate of return would I have had over that 10-year period of time?
Over 100% a year on average. On average.
100% a year, that's pretty unusual.
Time now for our stock of the hour. We're taking a closer look at Under Armour. The shares out in front on the day here, one of the best days in years after the company reported results that beat expectations. A rosy report coming as the firm continues that restructuring plan under its returning co-founder, Kevin Plank. Abigail Doolittle joining us right now for our stock of the hour. This is quite the turnaround story. A lot of people have left this company, this stock, for dead, particularly after Kevin Plank left the first time around here. He came back. It was kind of a lukewarm reception when he came back, but the results are starting to show up.
They are starting to show up. Today's reaction, I think, is all about Kevin Plank, because apparently on the conference call, he was extremely optimistic and basically saying, we know that we have an issue here, but because we know we have a problem, we can come up with the solution. So relative to the quarter that was, they put up sales of $1.2 billion. That was 4% better than what was expected. It was still down 10%, and that was a little bit disappointing, but international better than North America. Wholesale retail stronger than direct to consumer. They did, you were mentioning the restructuring.
Let's bargain says the equity markets don't feel like there's a big cataclysmic event that's just happened.
$25 million charge for that. But in terms of what he's saying that they need to do, all sorts of things. But one of them is really talking about the direct to consumer, that this is going to be a big source of future growth. Not a lot of discounting there. They really didn't do a lot of promotions, but that is why full price sales rose significantly. So I think that that's
Barkin adding that financial markets are looking not just at modal outlook, but also the tails.
Had increased in June too. So
Great point. In terms of the stock's reaction today, absolutely. There's a 13% short interest on this stock. So I think some of those shorts are scared that Kevin Plank back in, people now taking him seriously. Some of the other initiatives he's talking about, well, let's go back to the big one, improve the product. You know, that's
well,
it. And
that's the big thing. I mean,
yes, it is.
Because that was what really killed the stock. The product got stale, and at least in the eyes of a lot of folks who were shopping. They looked at Nike, they looked at some of the other brands out there.
So many options.
And it was like, you know, why Under Armour?
And he was very clear about that today on the call, that this is no longer, we can't just rely on the brand, we're going to rely on the product.
It's such a great story too, right? I mean, like I remember I was living in Maryland at the time when that came about, and he just kind of
took it by storm.
Yeah, and like took on Nike out of nowhere.
Yeah.
Insane.
All right, Abigail, thanks a lot.
Roadhouse
really
Steakhouse
appreciate it. Coming up, we're counting down to the close. We're looking at highs of the session for the S&P.
Morning. This is Bloomberg Daybreak Europe. I'm Tom McKenzie in London. These are the stories that set your agenda.
Taking you from the U.S. markets close to the overnight session in Asia. We'll walk you through what you need to know to kickstart the European trading day. Live from our European headquarters, we bring you the day's top market-moving stories, unmatched expert analysis, and on-the-ground reporting from across the continent. Tune in every weekday at 6 a.m. London time, only on Bloomberg Television.
What prompted you to want to get out of just doing surgery to be an administrator and a hospital leader?
Watching others who did it well. I had a dean who recruited me from Birmingham, Alabama to Minneapolis, Minnesota, which is a big jump to convince me to move my family. I realized over time that my training as a surgeon brought a set of credible things to the table. One, if surgeons have a measure of emotional intelligence, not much of our training reinforces that. It reinforces skill, not necessarily emotional intelligence. But if a surgeon has some self-awareness and emotional intelligence, what they bring to the table of leadership are three fundamental things. Number one, they do everything in teams. Their operations, their patients they see is all team focused. Number two, they value process, but they hold themselves very much accountable to execution. They understand that it's good to explore a patient, but what really matters is that you take the tumor out. And then number three, they make
It's 1 minute now until we get the market on close imbalance.
Information. Those things I realized that I could bring to the table as a leader if I had a sort of a passion for working with people and had some sense of self-awareness.
This is Bloomberg News Now.
News when you want it at the touch of a button.
Another volatile day on Wall Street. We're seeing big moves.
All eyes on Capitol Hill as Democrats and Republicans prepare.
Today's job numbers casting doubt on the Fed's next move. Inflation remains front and center.
And that's news when you want it with Bloomberg News Now. Get it 24/7
on the Bloomberg Business app, Bloomberg.com, and anywhere you get your podcasts.
Bloomberg News Now. Context change. changes everything.
So we're looking now to the market on closing balance. S&P 500, 170 million to the buy side. NASDAQ 100, 120 million to the sell side. The Dow 30 stocks, 140 million to the buy side. Mag 7 stocks, 245 million to the buy side.
It is significant to note when there's a hypersensitive market move to a really mundane number. It tells you that things are really precarious. Otherwise, it would never have done anything like that.
Yeah, the hypersensitivity of this market really on display today. That was Bryce Doty over at Sid Investments. He helped kick us off to the close about 50 minutes ago. And this is a market that took a look at weekly jobless claims data, some of the most noisy official data that we get, and decided that it was off to the races. Everything was copacetic again. Look, we're sitting on almost 3% gains right now on the NASDAQ, 2% on the S&P. I do wonder if this is going to reverse sometime soon.
I completely agree with that. You have, the S&P is rallying the most since July of 2020. No, excuse me, January of 2023. Is that really sustainable? So it just shows me that we're just going to have a lot more volatility, right? Like, we're still at 24 on the VIX. If we have a lot more volatility, do you have to readjust your portfolio and manage your value at risk? And how do you do that? What's the outcome of that?
Yeah, absolutely. The VIX in at 27, and when you look at the MOVE index that also tracks bond market volatility, also elevated right around 113 as we move closer to the closing bells here in New York. Just about 8.5 minutes to go. Ellen Hazen joining us right now, Chief Market Strategist and Portfolio Manager over at FL Putnam. Ellen, I just want you to put on your economist hat for a second. I know you're not an economist, but we all pretend that we are on this program. When you sort of try to assess where we're going economically and the feed through to the Fed and, of course, the feed through into markets here, did you gain any real confidence over these last couple of weeks in what the economic picture is?
Thanks for having me, Romaine. The economic picture continues to look positive, but it's getting increasingly cloudy. So what do I mean by that? GDP for second quarter, as we saw, was very strong at 2.8%. But if we look at estimates for third quarter, it's slowing down to about 1.5% for each of the next 2 quarters, and then reaccelerating again next year, according to analyst estimates. What is going to drive that? I think what has driven it to slow down now is the fact that most of the excess savings in the households have been used up, and the job market is weakening a little bit. It's not weak with a capital W, but it is not as amazingly strong as it was for most of last year and even the first part of this year. If you think about GDP, back to our economist Econ 101, it's C plus I plus G, right? And if the consumer
Fitz
is running
Barkin
out of
says the
steam,
US may be
or at
heading
least
into a
softening us a
longer
little
term
bit,
worker
as we saw with
shortage.
some of the luxury good makers, the investment looks okay.
Yeah.
And the G is actually accelerating based on the Infrastructure and Chips Act. It looks okay, but softer than it was a few months ago.
Yeah, C plus I plus G. You're giving me flashbacks here to my econ class. I can never sort of make heads or tails out of the export-import stuff. I am curious, though, Ellen. There's a great story in the Bloomberg terminal kind of talking about this idea that this earnings season has actually been a lot better than maybe what it looks in aggregate. The idea that the benefit to the aggregate market isn't necessarily there, but on an idiosyncratic basis, a stock-by-stock basis here, there's a lot to love here. And I'm wondering whether this earnings season, which is still going on, but this earnings season, have you been encouraged by what you've heard out of these companies?
It's been a mixed picture, to be honest. First of all, looking at the aggregate numbers, although earnings have beat in line with historic averages, revenue has been a little softer than expected. Guidance has been a little bit softer than expected. And we have heard a couple common themes coming out of companies. Number one, that the consumer is under a little bit of pressure. And number two, that demand from China is slowing. So I think that there are a lot of good companies. I think there are a lot of good companies reporting earnings and good earnings reports. But it's not as uniformly good as it was a couple of quarters ago. And to your point, we had a 15, 16, 17% increase in the S&P up until a few days ago. Mm-hmm. And that didn't leave any room for error. Now that we've come back a little bit, I think it's a little bit safer for stocks. But I think it was just as much about the expectations as it was about the actual earnings, which were okay, pretty good, a little squishy.
Right. On the PE, the price has finally revamped a little bit, which isn't the worst thing. So do you want to buy, say, tech growth stocks or more cyclical-oriented stocks?
I think with cyclicals, you want to be a little bit careful. There are some cyclicals that are exposed to Chips and Infrastructure Act and other secular growth drivers, like the electricity grid growth, that I think are good ideas. But classic cyclicals, I think you want to wait until we have more visibility on the likelihood that that GDP acceleration into 25 is actually going to occur. In terms of large cap tech, I do like those names. I think that they've given up a lot of performance just in the last few days. And certainly over the month of July, they give up some performance. But you can't argue with the earnings growth there. And even though the stocks might have been a little bit squishy, the revenue and the earnings and the cash flow is coming through for those names. So I think those are something to hang on to here.
So if you're taking a look at, say, large cap tech or the cyclicals that are exposed to those real trends, they've had a huge run. So you just buy in any dip. Is that the idea?
That's exactly right. That's exactly right. And what we've seen a lot of companies come into buyable territory over the last few days. And so I think that there is an opportunity, if you have your shopping list ready, to go ahead and do that on this weakness.
Ellen, always great to talk to you. Ellen Hazen, Chief Market Strategist and Portfolio Manager over at FL Putnam. All right, we are counting you down to the closing bells here. We actually, Alex, have quite a few earnings coming out after the bell, including from some smaller names that we follow, like Take-Two, Unity Software, but also we are going to get some relatively big ones: Expedia, Sweetgreen, Lionsgate, and Paramount. And I was just taking a look here. At least 3 of those names on that board are major laggards relative to the broader market, including Paramount, Lionsgate, and Expedia. Each one of those down at least 20%. Sweetgreen, that was more than double this year.
I don't get it. I don't get it.
You don't get it? Have
20
you
bucks
been
salad?
There? Well, that's why they're stopping.
I know. I mean, I just don't get why you'd pay 20 bucks for that salad. But people do when they love it, and it's weird. Anyway, but to your Expedia point, Bookings Holdings was not great, and they're seeing a sort of a trade down effect in the U.S. So what does Expedia think and say about that?
And we were talking earlier about some of the restaurants and some of the softness there. I mean, if they're feeling it, you would think travel would also be feeling it, because that is kind of one of the more ultimate discretionary spends out.
Just look at Disney.
Yeah, exactly.
I mean, like the price sensitivity now to parks.
Yeah. A few others, Elf Beauty, a few others that maybe give us a read here. Something that just crossed the wire, kind of unrelated to earnings, but also caught my attention, was the money market assets. Remember we used to talk about that all the time?
Yes.
That's still at a record high. These are the weekly numbers that come in, still at about $6.2 trillion. That still hasn't come down. Remember the cash on the sidelines that was going to come in, sweep into this market and help lift things? Yeah, people still clinging to.
But did they wind up selling stuff because of the volatility and because the carry trade unwind, and then parking it in cash and then going to put it to work, or is this just money that's going to be staying in cash as savings in essence?
Well, the weekly numbers have basically been at or near records now, basically for the last couple of years. So we haven't seen a meaningful drop down in that, and I do wonder if we do start to see it, where does that money go? Because that was the big parlor game. Is it going to flood into the equity market, or is it just going to go somewhere else in fixed income?
And how many cuts do we need to see from the Fed to get that money to move?
Yeah, absolutely. Here right now, looking at stocks not far from the highs of the day. An S&P up about 2%. Your NASDAQ indices up roughly 3% on the day. The Philadelphia Semiconductor Index up 6.5%. A full breakdown of all your market coverage right now on Bloomberg.
The Closing Bell, Bloomberg's comprehensive cross-platform coverage of the U.S. market close, starts right now.
And right now, we are 2 minutes away from the end of the trading day. Romaine Bostick here with Alex Steele, taking you through the closing bell. It's a global simulcast. It starts right now. Carol Massar and Matt Miller joining us from the radio booth. Scarlett Fu and Tim Stenovic off on this day. We welcome our audiences across all of our Bloomberg platforms, including our partnership with YouTube. Yeah. Remember, Carol Massar, Monday we were looking at what? One of the worst days for stocks in a couple of years. And today we're looking at one of the best days for stocks in a couple of years.
Exactly, right? What a wacky world. I'm calling it the Manic Market Week because it really feels that way, right?
So according to data from ICI, money market assets hit a record 6.19 trillion in the week to August 7th.
That next Fed meeting, because that's when we're going to ultimately know kind of where we go.
I'm looking forward to September 6th, which is the next non-farm payrolls number. I think that's really what set us off on Friday. And we had a number this morning on the labor market that looked a little bit healthier, and that's one of the reasons that we continue to be up. up near the end of the close today.
I have such a hard time believing that jobless claims alone lifted the equity market. And I know what the chart shows me, but it just makes me feel like, were we going to go there anyway based on the market action? I mean, we faded so hard to the close yesterday. I'm still skeptical.
I love this. This is like, remember when everyone was trading off jolts and all these other little things that were noisy and didn't matter? Are we back to that now?
I don't know. Yeah. Maybe. I don't. But
yes.
No.
Yes, we are. Because you know what? Yesterday you had a bad auction, Treasury auction, and that's what turned us over if you watch the charts. Today we had a pretty weak Treasury auction too, and we continue to rise because of those jobless claims.
Yeah, absolutely. Well, at least for one day here, the market has a reason to celebrate here. We'll see whether this actually holds into Friday and the rest of the week. But basically, you have about 90% of the S&P in the green. That's going to help it close up by more than 100 points, or about 2.3% as we wait for these numbers to settle. The Dow Jones Industrial Average up almost 700 points, or 1.8%. The NASDAQ Composite up about 2.9%, a 3% gain for the NASDAQ 100, a 6.5% gain for the Philadelphia Semiconductor Index, and the Russell 2000 getting in on the action as well, Carol.
Yeah.
Higher on the day by 49 points, or 2.4%.
Yeah, pretty significant. S&P 500, most names in that index. Alex, higher today, about 457, gaining ground, and you only had about 45 to the downside.
Yeah, I'm just looking at the pie, the IMAP, right? It's just basically green with a teeny bit of red. It is a full green pizza with a sprinkling of tomato. But volume is also really light,